Happy Friday and welcome into Bitcoin Asia 2026. Welcome into the live news desk here. I'm Grace Remington alongside Sean Hagan, bringing you live coverage from start until close on everything Bitcoin for day 2 of the conference here. Good morning to our friends in the East. Good evening to all our friends in the West and the United States. Thanks so much for being with us today as we start day 2 of the conference, Sean. And I think it's safe to say day 1 was a success.
Day one was a big success. We had a lot of exciting speakers. We had a lot of exciting, booths and events. We had people riding the mechanical bull. But just overall, energy was really high. I think price action obviously helps, but it's been incredible to see everyone who showed up. I think it's a substantial turnout. It's been a lot of fun, and the vibes are certainly high.
Yeah, I mentioned this yesterday, but whether you're a newcomer to this event or you're a seasoned vet, you've been coming for years and to all the different locations, there's really something here for everyone. We have the keynotes happening on the Nakamoto stage, the Genesis stage, those speeches at the Nakamoto stage you'll be seeing all day long here on this live stream, so stay tuned. We had the symposium hosted by BFC and Deal Day happening yesterday. There's booths, like Sean mentioned, all around the facility, so you can meet vendors, get some hands-on demos, get some merch. We have Bao Bao, our mascot.
Oh, yeah.
Walking around, so snap some pics with him and the mechanical bull. I feel like we should get some bets going. Who here on our team needs to jump on there at the end of the day? Maybe
Nick
that's
Hoffman.
Yep. You know what? That was easy. Okay, so we already have our answer there. But plenty of action ahead. So let's get into some of the headlines. Bitcoin's sitting at 80.4 today. It's rallied about 25% this month, and breaking 80 felt like a really important move. But we're starting to see some traders warn that momentum isn't keeping pace with price. So, Sean, how sustainable do you think this upward move is?
Yeah, look, I think that sentiment is justified. We're entering into some uncharted territory here. We're popping up. Price has been running like crazy, right? We just had a 7 Sigma event last week. And so what these traders are seeing is that price is continuing to rise the past 6 to 8 days as open interest has drifted sideways and volumes have started to drift down. Right, so I would say that could be expected after such a violent move to the upside, but that is a sign that momentum is dwindling nonetheless. At the same time, there's a lot of catalysts coming up as well, right? One of them being in the next couple hours, there's about a $6.2 billion shelf of options that expire, and there's a massive sell wall at 82,000. So, $3.6 billion of negative gamma exposure is really concentrated here at these levels. And I think that if we break that 82,000 level, it should be expected that some market makers are going to have to be, kind of going long or hedging to accelerate this rally potentially, just so that they don't get caught too off sides. Another thing that's interesting is that 82K level that we're discussing, that we're approaching rapidly. Even though that interest and that volume is going down, there's kind of those pockets of potential incendiary moments. They could be pushing us above the 50-week moving average. A lot of the TA commentators on YouTube or Twitter always talk about the 50-week being kind of the truth teller of if we're in a bull or a bear regime. And I think that they tend to be right. Anytime we move confidently below it, historically that tends to be the start of a larger, at least 1-year bear cycle. Anytime we move it above it, it tends to lead to a multi-year rally. So I think that this will be interesting to see. Maybe we do kind of hit one of these incendiary catalysts and we can pop to the upside. If we're able to do that convincingly with some pace, I would say that should put a lot of doubts to rest that we are in this new bull regime. But having said that, previous cycles, we tend to test it at least once and get rejected first, which we have not done this cycle. So wouldn't be surprised to see us face at least a little bit of resistance before eventually making our way through it.
Well, you mentioned the volume trading and some of the catalysts for this recent pump. How important is it to see the price rise due to demand rather than market behavior?
It's very important, right? You can have some of these short, violent moves. If you're at home listening, think about the infamous GameStop short squeeze, right? Anytime you get these squeezes or leverage-driven plays, it can be very explosive, very fast, to the upside or the downside. But what really sustains long-term growth in either direction is that spot buying, people buying and people holding, or people actually selling the underlying asset and not returning.
We might have some more changes coming recently because the Fed meeting at Jackson Hole opened yesterday, and we're expecting to hear some remarks from Kevin Warsh in about 12 hours here. So what type of impact could he have on the market?
Yeah, look, so tomorrow's meeting in Jackson Hole, it's a big deal, right? Because of all these things happening in the macro environment, right? We have tensions globally. We have our own yield we're trying to get under control. And the Treasury's kind of made, I wouldn't call them unprecedented. We've made similar interventions even this century, but um, you know, relatively modern interpretation, unprecedented moves of trying to have active yield control potentially, right? Whether it's refinancing long-term debt into short-term treasuries, whether it's using, their actual capital account to purchase some of these down. Besant is wanting to come in and attack what he perceives to be a problem. It'll be interesting to see how Warsh responds to that. I think it's important also for everyone to keep in mind this is not a traditional Fed meeting, right? There's not going to be a decision made. We're not going to get new interest rates. We're not going to get any kind of dot plots or anything like that that we're used to seeing. But it'll be interesting to hear just kind of the vernacular that Warsh will choose to use, right? Is he going to be in support of what Besant is doing? Is he going to skirt around the issue entirely? Is he going to try to come out and be strong against it? Warsh is a guy who came in and his whole thing was, hey, I don't want to be setting forward guidance. I want the free market to choose, right? So seemingly Besant's direct intervention into the free market is a contradiction of that. So we'll see if the Fed and the Treasury are going to go to war or if they're going to try to work together here to solve this problem.
Volatility, obviously something we cannot escape when talking about Bitcoin. And we talked yesterday about the recent volatility spike. It was the highest in 3 years. Well, today, Kalshi is saying its traders predict Bitcoin crashes to 56,000 this year. How likely do you think that is to happen?
I think that's the same crowd that 2 weeks ago was expecting Bitcoin to crash to 30K, and now they're paying about a 2.5x premium for being a hater. And I think you never want to be too short Bitcoin. I think that it's reasonable to expect we will get some calming in the momentum, some sort of retracement, likely in the near term. But I think our bottom is fairly probably in. I think 58K will end up being kind of the true bottom of this bear cycle. That's not to say that it's up only from here, of course, right? I know a lot of people can kind of get carried away and be too extreme one way or the other. I wouldn't be shocked, for example, with that 50 week if we kind of bounce around there, maybe have to come and retest it one more time. Things are never this easy in Bitcoin where it's just going up, right? A lot of our rallies end up having 30% plus retracements even during a bull market rally. But nonetheless, I think people expecting 56K are probably largely sidelined and idealistic.
Well, the haters always end up paying in some form. But for what it's worth, the Bitcoin Fear and Greed Index sitting in the green today with a score of 71. And on the other side of this, we had CZ here yesterday predicting Bitcoin goes to 1 million and much more quickly, he thinks, than the 25-year timeline that most people think. What were your takeaways from his keynote?
Yeah, I thought his keynote was really interesting, right? CZ is one of these guys where he's always been hyper bullish. He's believed in the Bitcoin thesis for a long time. But he also tries to be fairly measured and realistic. So to hear him come out and predict 1 million this cycle, right? He's saying, hey, look, this 25-year projection that a lot of people say, I think that's out the window. I think things are fundamentally changing. I think we're going to see something like a gold Bitcoin parity imminently. That's really interesting to hear from a guy like him who kind of has this macro global perspective.
All right, we're going to take a quick break. Lots more on the other side. Juri Watanabe of Metaplanet and podcaster Stefan Livera joining us next to preview the day. We'll be right back.
Everyone has an opinion. We want evidence.
No hype, no echo chamber.
Just better questions.
And better answers from the biggest names in Bitcoin.
is BMTV. I'm Grace Remington,
And I'm Sean Hagan.
bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
Every year, this community comes together to celebrate, to debate, to build what comes next. And every year, the stage gets bigger. Sound money, center stage. So, where do you go to celebrate the next chapter in Bitcoin history? You come home. Nashville, July 2027.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Bitcoin Magazine TV. Alongside me now is Stefan Livera, host of the Stefan Livera podcast, and Juri Watanabe of Metaplanet. So excited to have you guys up here. We have patrons starting to trickle in today, thousands on hand yesterday, and energy was really good. So excited to have another fun day here with us. But Juri, I want to start with you, with Metaplanet being the title sponsor for this event. I don't think most people know the culture in Tokyo when it comes to stocks and investing is so much different than the States and the West. And you work on the community side for Metaplanet. I saw a stat for every subway car in Tokyo, one person is a Metaplanet shareholder. That's crazy.
Yeah, I mean, I think we're one of the fastest growing companies. And we are changing the narrative of Bitcoin again. And so it's really exciting to be a part of that and make our shareholders harness the future with Bitcoin. And the best thing, I think, about being in the space is the community aspect. Our CEO, Simon Gerovich, his heart behind the community is that, shareholders, typically the journey is a very lonely journey. But being part of the Metaplanet community, it's no longer a lonely journey. And you're part of this bigger, wider, global Bitcoin community, which is awesome. So yeah, very happy to be here.
By the way, Simon Gerovich speaking at 3:30 on the main stage, local time, so you can watch him right here on the stream. Stefan, you also have one of the keynotes today, from self-custody to shareholders, with our own David Bailey, CEO of Nakamoto. Can you give us a little preview of that panel?
Sure. So actually, I had an earlier panel just yesterday with David, and he was actually kind of on his mind is this idea of what role should corporates have in Bitcoin governance, right? Because we saw recently the whole BIP 110 thing. David was commenting on that. And I guess maybe we'll see more of that to come. Like maybe there'll be a kind of a quantum debate and so on. I think the other broader theme is just that this idea of, many people have been around for a long time, as David has been since, 2012 or something, very early days. There was this kind of more cypherpunk libertarian aspect of it. And now it's kind of suit coiners, right? And hey, many of us are also suit coiners as well. Are we selling out, or is this actually just part of the maturation of Bitcoin? And we're going to try to address some of those questions also. Well,
you bring up suit coiner, and you mentioned that yesterday, and I just think it's so funny when anyone uses that term. I personally like wearing suits, but it's kind of a provocative title or theme, I think, because you talk about the purist versus what it's become. Do you think this has always been a natural evolution for Bitcoin, or is it still more of a tension, do you think?
Look, many of us, when we were early in Bitcoin, we thought, oh, it was all going to happen so quickly. Hyper Bitcoinization is coming in a year or two. No, like it's been over a decade, right? It's probably going to be a few more decades, and that's why we need these big pools of capital. Whether that's Metaplanet bringing in, Japanese and global shareholders, whether it's access to larger pools of capital. So we can still have our cypherpunk and libertarian ideas, but at the same time, we have to attract new forms of capital, new people into the Bitcoin community over time. And so I see it as we should have a big tent approach.
Mm-hmm. Andrea, I want to go back to you. Metaplanet, as the title sponsor of this event, what are you hoping to achieve by being here?
Well, we just want to have exposure to the wider global market. And I think Hong Kong is one of the best places to be for that. And I saw a really exciting stat of how Bitcoin usage in Hong Kong really went up in the past year. And being in a space like this, it's really interesting to see where traditional finance has been such a big part of the country's growth in the past few years. So, or not past few years, but forever.
Yeah, one of the main themes of this event, and obviously, being on location in Hong Kong, is that Hong Kong's trying to position itself as kind of the hub for Bitcoin and as that convergence point between Bitcoin and TradFi. Being based on, in the East here, how successful or how close do you think we are to getting there?
In terms of the full Bitcoin adoption?
Yeah.
I think every year we're getting closer, but of course there's always going to be the haters that you've mentioned earlier. But the more, I always like to say no publicity is bad publicity.
That's fair.
The more noise we make, more people will understand, more people will start questioning what our system is like currently. And I think that's even having, even saying Bitcoin is, everyone saying Bitcoin is one step forward to changing the narrative of what sound money is.
Right.
Yeah.
And you're based in Dubai, correct? Yes. Okay, so yeah, you have a front row seat to this too, kind of the East versus West. How important is Hong Kong in this whole play?
Well, I know it's obviously a big, massive business hub in Asia. A lot of high net worth families and capital pools are here. I think there's competition as well around attracting these wealth flows, and we're sort of seeing like an ebb and flow. And it's, of course, some of this is just like I think we've seen bull and bear seasons in Bitcoin, and we're going to see the same thing on the way to hyper Bitcoinization. That might be another 15 or 20 years out, but you've got to ride those cycles as they go. So I think number go up is going to attract people, and then that will cause a new round of interest, and there'll be new people coming to Treasury companies holding Bitcoin, doing various things.
Okay, amazing insights. I hope you guys have a fun day. Thanks for joining us on the desk. It's always great hearing from you guys.
Thanks for having me.
All right, Juri Watanabe. I got it right. Thank you. And Stefan Livera, thank you so much. We're going to head over to the Nakamoto stage now for our first keynote of the day, making Hong Kong the Bitcoin study.
Good morning, Hong Kong, and welcome back to day 2 of Bitcoin Asia 2026. Thank you so much for joining us here today on the Nakamoto stage. My name is Jeremy Chang. I'm a Hong Kong and Bitcoin-loving enthusiast, someone who's passionate about sound money and the future of this great city. So yesterday, we had an amazing lineup of speakers, from Brandon Green at BTC Inc., to Gracie Chen at BitGo, and of course, Justin, Sun, and CZ. But I promise you that today will be just as exciting. So to open up this morning, it's my pleasure to introduce a very special person, someone who also shares my love for Bitcoin and Hong Kong. Please welcome to the stage the CEO of the Whale Lounge Hong Kong, Gail Weisenberg.
Good morning. Welcome to Hong Kong, my favorite city. I'm Gail Weisenberg. I am the director of the Bitcoin Association of Hong Kong, and we are going to change this city to the Bitcoin city. So for over a decade, I manufactured cloth diapers. And the idea of washing diapers is very scary, probably as scary as being your own bank, right? So we are conditioned to dispose, yet we have the most sophisticated washing machine and detergent. I'll spare you the details on cloth diapering. It's as niche as Bitcoin, and you are as crazy if you use them. No major retailers back then carried them, and it was a great product, but it was very difficult. We would convince the parents. We would have to go over and over. They would look at us like if we were really crazy. And I would go until they would say yes. Sounds very familiar. It's almost like orange peeling. So that's exactly what happened when you try to orange peel anyone, or if you try to tell a retailer that they should accept Bitcoin. The same look, the same conditioning, that says, this sounds risky, which planet is she from? But here is what I learned about diapers, and that is also true with Bitcoin. When they start being Bitcoin educated, they finally get it. They can't go back. They fall in the rabbit hole, and they become advocates. That is the magic. So 9 no's for 1 yes. I converted parents and retailer one at a time. If you ever wonder how I got my PhD in rejection. So Charlie Banana was the first cloth diaper brand that landed in Target store nationwide in the US. And when I sold it in 2020, we were sold in 66 countries. So I know I can do this. So it all started from here, from my flat in Hong Kong, because Hong Kong is a city where anything good can happen. So here we are again with another grand mission, my son and I and the Bitcoin Association, to turn Hong Kong into the Bitcoin city. So I love 8s. Chinese love 8. And 8 is a very auspicious number. Bitcoin was born in 2008, if you didn't know. It's a very good sign. So I have a simple question. 17 years ago is almost 2 decades. Why haven't there more merchants in Hong Kong and in the world that accept Bitcoin? Merchants today are losing 2 to 3.5% on every transaction to convenient credit cards, PayPal, Stripe, etc. They have chargebacks, fraud disputes, 3 to 30 days settlement cycles. A wire transfer costs $90, and it takes a week for them to arrive. It's faster to get on a plane to carry the money to deliver your money. It's crazy. We accepted it. It's the fiat cost of doing business. Every business in the world should be accepting Bitcoin. Every invoices on the planet should have an extra line at the bottom that says we accept Bitcoin. To every charity, organization, churches, synagogue, Bitcoin donations are borderless, instant, and final. No payment processors scheming a cut between a donor and a cause. If you care about your mission, you should care about where you hold your financial reserves. So why am I bullish in Bitcoin adoption in Hong Kong? There will only ever be 21 million Bitcoin. We've already mined 20 million. Corporations are buying like mad. Countries are building reserves. 2 to 3 million have been lost forever. 70% of coins are custodied. They'll never see the light on exchange. So we're roughly left with 2 million coins. That's it. If every millionaire in the world wanted to buy half a coin, there is not enough stock. People don't realize how Bitcoin is so scarce, finite. The sooner all the CEO and all the CFO understand Bitcoin as a capital, the better their business will be. So can Hong Kong be the forefront of Bitcoin City adoption? Yes, it can. Because Bitcoin City didn't wait for permission. While the world argued about regulation, Hong Kong acted. Bitcoin is classified here as a digital commodity. We have 13 licensed exchanges, more than anywhere in Asia. We launched Asia's first spot Bitcoin ETF in 24. The stablecoin ordinance passed in August 25. The framework is built. The rules are written. Out of 8.2 billion population, 741 million of people have a crypto wallet today, and it's growing by 12% annually. That's huge. Hong Kong alone has 2.2 million crypto wallets on a city of 7.5 million. Not to mention all the people that are coming here. Hong Kong receives 35 million tourists every year, and we lost a lot in recovering from COVID. We have crypto events every week. There is a decent number of crypto wallet holders passing through. European, Canadians, American, Dubai refugees, as I call them, are leaving their country and looking for a fairer tax system, Bitcoin-friendly city, safer country. Hong Kong has it all. We need to attract the right tourists. We need more families. We need more talents. We need more business creation. In 24, El Salvador had 22% increase in tourism after Bitcoin adoption. They don't even have hot water. And excuse me, but I don't like pupusas. We have the best food. In Hong Kong, on the other hand, we have Michelin star restaurant and amazing food, world-class hotel, the more diverse nature surrounding us, incredible energy, no capital tax, no property tax, no succession tax. Crypto rules are clear in Hong Kong. Fast business setup, and it's very safe. I am super bullish on Hong Kong and the entire Greater Bay Area. So my son and I, we have the great goal to onboard merchants across Hong Kong to accept Bitcoin. We set up already 28 in a month. There are about 45,000 merchants in Hong Kong, and we're ready for the rejection. We can't wait for the next Bitcoin Asia to show you all the progress we've made. There is a map that you can follow on btcmap.org, and you can see all the progress that we're making. So we simplified the whole process for Bitcoin transaction and for business. We offer a basic point of sale powered by a Bitcoin wallet and our own basic app. They work exactly like a POS for credit card. The staff just need to tap the number and press charge. The owner, the CFO, control the wallet. We train the staff. They don't have to understand Bitcoin. It's just as easy as anything else. We connect every merchant, Bitcoin-friendly accountants, lawyers, so that they're fully in legality. So what convinces them to say yes? Zero processing fee. Let me repeat, zero processing fee. Versus 2 to 3.5%. That's about 30 grand on a $1 million purchase. Instant settlement, no chargebacks, transactions are final. And there is no fraud, dispute, no reversal notice. As we say in Hong Kong, momentai. So accepting Bitcoin is legal in Hong Kong and treated like gold in accounting practice. We have lots of jewelers, so it's not new to them. Many have been asked to accept Bitcoin before, but until us giving them the guidance, there was a lot of hesitation. Not anymore. So this is Hong Kong. As we say, FIDE, FIDE. Everyone wants things fast. A Bitcoin Lightning is FIDE. So what holds merchant back? Accountants need to be educated in crypto accounting as well as the auditors, and we will help the university. As the association, we will make sure that all those new students coming out of accounting school get the proper education and are not scared of Bitcoin. The big one is volatility, and it's a fair concern. Bitcoin is better money, full stop. It does not inflate, and you cannot print anymore. Bitcoin volatility is like gold. Think about a gold merchant. Gold swing 20 to 30% annually, sometime more. Does a jewelry get rid of the inventory? Absolutely not. They hold. They understand that gold is a reserve asset. And over time, the direction is up. Bitcoin is the same logic, just harder, scarcer, and more portable. It needs to be managed. So here's the practical reality. When Bitcoin is lower, every payment you receive gives you more sats. For the same dollar amount you build, you are naturally buying low just by running your business. When Bitcoin is higher, you spend, you sell to manage your cash flow. You enjoy the upside. At first, the volume will be small, you will get comfortable, and the volatility will stop phasing you. Best performing asset on Earth, averaging 60% annual growth in the last 10 years. Bitcoin wins. I used to tell skeptical parents to try at home and at night. Babies almost never poo at night. Once you try, you realize how much better they are and how brainwashed you've been by the black rocks of diapers. Do the math. 6,000 diapers versus 24 diapers, right? A lot more sats hodling in your baby's wallet. So same to the merchant in this room and beyond. Try, get set up. Add some Bitcoin to your balance sheet slowly by accepting Bitcoin. The same way you would save gold, but easier to transact with. You are not reinventing your business. You are opening a door to the new type of client, a global, high-spending, a global, high-spending, loyal tribe that will roll straight into your business because you accept Bitcoin. You'll get comfortable. Now, this is important. We can sign up every merchant in the world, but if none of it works without you. Bitcoiners, I'm talking to you. Dust off your wallet anywhere and everywhere that you pay for something. Ask, do you accept Bitcoin? You are not just a holder, not just an investor. You are the demand side of a two-sided market. And without you showing up and spending, the merchant have no reason to move. By just asking, I bought 2 cats in Mongkok, and I paid for my good friend's team funeral in Bitcoin. That was not his last wish, but I thought he would get a kick out of it. When no Bitcoins are left on exchange, that will be the only way to acquire any. Get set up. Thank you.
Everyone has an opinion. We want evidence.
No hype, no echo chamber.
Just better questions.
And better answers from the biggest names in Bitcoin.
This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
Market analyst at BMTV, Sean Hagan, the CEO of Salt Lending, Sean Owen, the co-founder and chairman for the Foundation for Research on Equal Opportunity, and the chief strategy officer at Strive, Ovik Roy, and the founder and senior physicist of the Hong Kong Institute of Physics, Joseph Wang. Let's give him a round of applause.
All right. Thank you, everybody, for being here. Like you said, I'm joined with Sean, Ovik, and Joseph. We're talking about how Bitcoin can unlock capital throughout the world. You know, a lot of people here own Bitcoin, but right now it might just be a number on the screen. So a lot of this is talking about as an individual, as a nation state, as a corporation. How do you unlock that capital and perhaps make it more useful? Gentlemen, why don't we go around the horn and just tell us a little bit about who you are, what do you do, and how do you see individuals unlocking their Bitcoin?
Sean Owen, founder of Salt Lending, based in the United States, been a Bitcoiner for 15 years, running a lending company for a decade. Very excited to see the price up and also be here in this wonderful city. Huge fan of Bitcoin. It's great to see the adoption, and I think that there's a great conversation here for what it looks like for every one of us to continue to build wealth and save wealth in the form of Bitcoin, and how that translates to corporations and eventually long-term capital underpinning all of the credit worldwide, as we talk about how this expands across all the different borders. Hand it off from there.
My name is Ovik Roy. It's spelled A-V-I-K, but pronounced Ovik, just to confuse you. I am the Chief Strategy Officer at Strive, which is one of the world's largest corporate holders of Bitcoin, with over 21,000 Bitcoin on our balance sheet. And we're known for our SATA product, which is a preferred dividend, which gives you a 13% yield on your savings. So that's our core product. I'm also the chairman of the Foundation for Research on Equal Opportunity, which is a think tank headquartered in Austin, Texas, and a senior advisor to the Bitcoin Policy Institute. So I spend a lot of my time in the public policy space thinking about the policy environment for Bitcoin. And obviously I spend a lot of my time also, my day job is with Strive, helping to build out our digital credit strategy.
Hi, my name is Joseph Wang, and you can look at my profile on LinkedIn. So I'm an astrophysicist. And so I'm a founder of the Hong Kong Institute of Physics. And so one of the questions is, what is an astrophysicist doing here? And so one way of describing who I am is I feel like a space alien that got trapped a couple of hundred years in the past. So I'm always trying to push things to the future. And so my background is I've got a physics degree from MIT, PhD from University of Texas at Austin, and also worked at JP Morgan during the financial crisis. And I've been doing Bitcoin for the past 10 years. And my interest in Bitcoin is, if you look out around the world, okay, it's a total mess. And I'm really excited to be in this moment in history, in this place in Hong Kong, because this is the place where the new financial system, the old financial system's dead, all right? It's dying, and it's going to be gone within like the next couple of months. And this is the place, you are the people who are going to create the new world.
Couple of months. That's a call.
Well, you know, there's definitely a lot of headlines recently, a lot of potential crises on the sovereign debt side of things. Let's open it up first, kind of on the individual level, gentlemen. You know, there's probably a lot of people here, I would assume, at a Bitcoin conference that own Bitcoin. What's the most important thing they could do practically to turn this asset from just a number on the screen to working capital?
Never sell your Bitcoin, I think, is the mission here, number one. It's very tempting, it's very easy, but it's the most expensive money you'll ever borrow, is the lost opportunity of selling your Bitcoin and then paying whatever it might be for voluntary taxes and or lost opportunity. So as simple as that seems, I think that is still principle number one. Everything that I've seen in the last 15 years tells me that that's more true now than ever. And as much as of a trope as it sounds, it really is just that simple. Just don't sell your Bitcoin, and whatever you can earn it in Bitcoin and save as much as you can after you spend, and you will be doing phenomenally better than you might imagine in a few years.
I agree with all that. Self-custody is an essential feature of Bitcoin. It's part of what makes it censorship-resistant money, along with being sound money. Obviously, at Strive, what we also try to do is build products that help people use Bitcoin to maximize their returns in their conventional brokerage accounts, right? So if you have a conventional brokerage account, one of the challenges that SALT is trying to solve is if you have a lot of Bitcoin, how do you make that Bitcoin productive by borrowing against it, things like that. But I think we would all agree that today, it's still very hard. The interest rates that you have to borrow against your Bitcoin are high. In conventional brokerage accounts, the borrowing can be at a much lower interest rate. And then you combine that with instruments at like Strive's common stock ASST and our preferred instrument SATA or SATA, that gives you the options in your conventional brokerage account to take advantage of Bitcoin's sound money properties, because our entire balance sheet is backed by one thing, Bitcoin, and use that to improve the returns, risk-adjusted returns in conventional brokerage accounts. So that's been our solution. How do you get more normies who maybe aren't ready for self-custody to understand how Bitcoin can help them? That's what Strive exists to do. And then on top of that, I would say, and we were talking about this a little bit backstage and maybe relates a bit to your comment, we are not that far away from a real fiscal crisis in the United States. What Scott Bessent, the Treasury Secretary, did last week to partially monetize the debt using the Treasury Department's funds, to me was the canary in the coal mine, which is kind of an expression to say the signal that a crisis is close at hand. And while Bitcoiners, I think, conventionally are like, well, if the US falls apart, this is going to be great for Bitcoin, we're all going to be laughing all the way to the bank. Be careful what you wish for, because if there really is a fiscal crisis, the US government is not going to just sit there passively and watch it happen. They're going to swing into action. They're going to try to prevent people from buying Bitcoin with US dollars and perhaps other instruments like the Hong Kong dollar, which is pegged to the US dollar. So this is something we all need to be very closely watching, and a lot of my policy writing is on this topic for the Bitcoin Policy Institute and for the Foundation for Research on Equal Opportunity.
And people can find that writing at thebpi.org?
bpi.org and freop.org, freopp.org.
Tell a story about in the 1940s, my mother, it was in the middle of the Civil War, they needed to move money from one place to the other. And so what her parents did was to sew gold coins into her jacket, and they were able to hide the coins and move from one place to the other, right? So, I believe we still have that bit of gold from the 1940s. So I don't know what's going to happen in the next few months. I don't know what's going to happen next year, but I know it's going to be completely crazy. So right now, I think the thing to do is to put the money in either physical gold, and it has to be real gold, none of the paper stuff. Put it in digital Bitcoin, real Bitcoin, and just wait to see what happens. Because once we know what the new world's going to look like, then we can convert the Bitcoin or gold to something else. But right now, it's going to get wild. Also, one other thing is it's starting to go downhill. And one thing I want to show you to just prove how things go downhill is if you just go outside and look at the prices, okay? Just, I think if you go to lunch here at the convention center, you can buy a really good lunch for, I think, the equivalent of about $20 US. Now, think of what you can get for $20 US in the US right now. So things are already starting to go downhill, and the problem is that we're in a stage where the more they try to keep things from falling apart, the faster things will fall apart. And I wish it was recoverable, but I don't see any way that it's not going to end in something really dramatic, and it's already starting.
So if we continue to go down this path and then things do accelerate and you know, as Joseph says, there's this kind of new system born, what does that look like for, you know, Bitcoin lending products or treasury companies who are kind of already kind of the intersection of the two systems, right? Seemingly on better footing to weather the storm. You know, what is kind of the outlook on those fronts with these services that are kind of the middle ground or integrated in both systems?
I mean, I think we probably share this in common somewhat, that we see bridge instruments and creating credit on top of collateral in the form of Bitcoin as an essential part of what the economy needs. There's many people older in age, let's say, for example, who are in that phase where they just need cash flow and or yield, or they may not know that they really need Bitcoin underpinning that. And so this is the closest kind of gateway to it. And that has been true all along up until now. And I think as things do accelerate, if true, that we could see a change more towards the Bitcoin side of it underpinning it. But in the meantime, I still think that there's this reality, no matter what the actual currency rate is, where you have a collateral form that is global. It doesn't require a courthouse to know provenance. There's no UC, you know, there's no QSIP number, there's no deed. It's just on-chain, and it can serve as this foundation for a new form of credit. And whatever that might be, ultimately, there's still this need for currency. And right now, that need for currency comes in the form of yield generating borrowed capital, and or on the other side, putting capital to work in yield. And I think that that will persist even if we were to see this really accelerate.
Yeah, I mean, you know, I think from the Bitcoin Treasury point of view, I think one of the things that's been interesting to observe is the various efforts to launch Bitcoin Treasury companies in different markets. So, of course, we're based in the US, and Strategy, the pioneer of this whole sector, is based in the US, but Metaplanet obviously proved in Japan there was a lot of utility to this model. And Moon Inc. and others here in Hong Kong are trying to do the same thing. Our friends at UTXO have invested in a lot of the different country-specific treasury companies. There are a number in Europe. And I think as we at Strive, and I as the Chief Strategy Officer, part of my job is to keep an eye on all these things, as we observe what we see around the world as people come up with these local champions in the Bitcoin Treasury space, it's really interesting to see how the legal regimes and the regulatory structures in different countries provide advantages and disadvantages. So to give an example, one of the big advantages that we've had in the US is the ability to issue dividends irrespective of our profitability. So our company actually runs at a small net operating loss, but that doesn't prevent us from issuing return of capital dividends to our preferred equity shareholders. In a lot of jurisdictions, you can't do that. You're not allowed to issue dividends outside of, you have to draw the dividends from profit. So if you're not profitable, you can't do the exact strategy we're doing. And then to give another example, in Japan, one of the reasons why Metaplanet really took off and was really the second great Bitcoin Treasury success story is because Japan had this interesting structure where the capital gains tax for cryptocurrency gains was far higher than the capital gains tax for gains in the stock market. And so by Metaplanet creating this instrument, a lot of people who wanted to bet on Bitcoin could do so in a more tax-efficient way using Metaplanet. Now, there's talk in the Japanese legislature of eliminating that arbitrage, but it still exists today and has been a big part of their success.
So one of the cool things about Hong Kong is that Hong Kong is a place where different financial systems interact. So you've got the mainland Chinese financial system, you've got the Western financial system, and you've got the Middle Eastern financial system. So one of the places in Hong Kong to look at is there's this place called Chungking Mansions. It's 2 subway stops in a place called Jim Sa Tsui, and it looks like a place out of Blade Runner. It literally looks out. And if you go in the front door, there's like a whole bunch of money shops. And so what's the situation is that the connection between Middle East and Asia is already on crypto. So when somebody in the Middle East buys a whole bunch of cell phones from China, they don't use bank transfers. They're already using Tether. Now, what happens is that it's still built on top of the US dollar. So once the US dollar, something starts happening to that, the foundation's going to move over to Bitcoin. The other problem is that you've got 5 billion people in the world that want their cell phones, they want their electric cars, they want their stuff. And right now we're in a dollar economy, and there's just no way that you can have that amount of dollars, the US can issue that amount of dollars to get 5 billion people to develop levels of standards of living. So it's going to be built on something else. It's going to be built on Bitcoin. And if you think of all that trade that's going to move onto Bitcoin as a foundation layer, like gold, you can just see the price of Bitcoin and gold just skyrocketing to just absolutely amazing levels.
Yeah, CZ said yesterday he thinks that we might hit gold Bitcoin parity this cycle even. But on that thought, we're talking about that sheer demand for dollars and how it might need to be another system. How do things like the Genius Act tie into your viewpoint there, right? Where you see the Treasury refinancing a lot of their longer-term debt into short-term T-bills at the same time as they're introducing this legislation to hopefully issue those into synthetic on-chain dollars.
Yeah, it's very interesting. Again, from a Strive perspective, I look at the debate about stable coins in the U.S. and think of it as almost like Congress is fighting the last war. Right, so there's this huge fight, for those who haven't followed this debate in the U.S., between stablecoin issuers and banks. Because in a U.S. bank, if you have money in a checking account or a savings account, you're getting basically 0 interest on that, which means on an inflation-adjusted basis, you're losing money every year. Now the stablecoins, some stablecoin issuers want to pass on some of the yield from their Treasury bond holdings to their users, maybe 2% of the 4% or something like that. And the banks are going crazy trying to fight this. And so there's this huge fight in Congress about whether stablecoin issuers should be able to issue any form of rewards or interest to their users. But we're talking about 2% here, 1% there, 3% there. Then you look at an instrument like SETA, which is not a stablecoin, but the dividend yield on SETA, if you own $100 worth of SETA, is $13 a year or 13%. That's way higher than anything in a stable coin or a money market mutual fund or any of these other instruments. So the way we look at it is let Congress and the banks and the stablecoin issuers fight about what they should have been doing 10 years ago. We feel, have built the future of short-term cash-like deposits with SETA.
And on that similar thought, you see some people speculating online. I think maybe even Sailors use the term, the yield curve of Bitcoin with his various preferred instruments. Do you feel like there's going to be a flow of capital out of maybe long-term treasuries, medium-term treasuries, into these built, Bitcoin instruments?
We're in very, very early innings, so I don't know. I think I'll say there's a couple of things that we're observing. The first is, just in the last year or so, gold surpassed treasuries as the single largest holding in central banks worldwide, which hadn't been the case since I think the late 1990s, if I'm recalling correctly. So a big part of gold's run-up over the last several years has been driven by central banks saying, you know what, we're not confident in treasuries anymore, we're going to hold gold, which is, again, a kind of a leading indicator for what you're describing. central banks are a little bit more skeptical about holding Bitcoin. But hedge funds, other financial institutions, obviously individuals, can take that same line of thinking and use it to hold Bitcoin or Bitcoin-backed securities like ours. And I do think you're seeing more of that over time. But today, again, if you think about the entire scale of the Bitcoin-backed preferred equity digital credit market, it's like $15 billion. And there's hundreds of trillions of dollars of capital that's on the sidelines right now from that standpoint. So we look at this market as extremely large, and we're just scratching the surface of it today.
So I've got some things to say about stablecoins, right? So one problem, one thing about stablecoins, the way they're used in Hong Kong, is that nobody wants to hold stablecoins. So the way that works is I want to buy some cell phones from the Middle East, or I want to buy gold. And so I use the stablecoins to send the money between Dubai and Hong Kong. The moment I have the stable coins in my hand, I go into the money changer and change it to the paper cash. And the reason why is that people just don't trust stable coins, but for stable coins for trade, you only need to hold it for like 10 minutes. And as long as things don't blow up in those 10 minutes, you're good. But nobody in Hong Kong wants to hold stable coins. Now, as far as stable coin bills in the US, I see this as a very negative sign. Because let me ask you a question, and this hurts me because I'm an American-born Chinese, but what does the US make, right? I mean, what can it build? It can't build cars, it can't build missiles, it can't build batteries. So the only thing that the US makes is money. Now, the problem with making money is that in the short run, okay, I'm just printing a whole bunch of money and it looks like I'm getting rich. But in the long run, what happens is that the more money you print, eventually people realize that you're just printing paper. And that's the situation that we're in. And unfortunately, that's the situation with stablecoins, because the reason why they're pushing the stablecoin things is that they're looking for more ways of printing money. And as long as you start printing money, eventually it's all going to fall apart. And we've reached that stage where people are starting to realize that this is what's going on.
I'm going to disagree with you a little bit there, Joseph, because the world's largest exporter is China. China exports $3 trillion a year of goods and services
and China,
to the rest of the world.
Okay.
The second largest exporter in the world is the United States. The United States exports $2 trillion of goods and services around the world. We may not make the same things that we used to make, that China now exports, but we make quite a few things. We make pharmaceuticals, we make oil, we make airplanes. There are a lot of things that the United States still manufactures the rest of the world. I would not say that the United States doesn't make anything today. In fact, I think there's a resurgence of hardware engineering technology powered by AI that's actually very exciting in the US right now. I don't think that's the problem with the US economy. The problem with the US economy is the federal deficit and the federal debt, which is rising and getting worse every year. And as interest rates go up, that means the ability to finance the debt becomes a lot harder. Right now, the United States spends more on interest payments on the federal debt than it spends on national defense. And that problem is only getting worse. That started last year in 2025. And as interest rates go up and the Treasury Department fails to suppress interest rates, that's the thing that's going to make the US economy weaker and weaker.
I mean, I'm going to comment on your original question a little bit here just to go further, is that what stablecoins really do illustrate is that you can cut all of the fat out of all of the banking branches, the Fed, the whole pipeline, if you will, when you are just issuing something direct. The real issue is that the money itself is issued on the premise of debt, and so there's really no way out of that. I mean, you can't pay back the fiat system. It has to continue in that direction. So to the question about, is this going to flow more into yield-seeking instruments? Absolutely. I think it will. If you look at the total assets, all capital, let's put it in all capital on the planet from all people, Bitcoin is tiny still. And even if you were to look at everything being dollarized, to some degree, even though it's not, all the way, all fiat currency has the same premise in place, which is give it maybe longer than a couple months, maybe if you went out 50 years, Bitcoin is just superior when it comes to what it does compared to gold, what it does when it compares to real estate, what it does to any kind of asset class where you're really just looking to build collateral and save for the future. And so then again, everybody needs yield, and we're all stuck in a system where we must pay in something that's issued out of debt. So debt is an instrument of the system by definition, and is inescapable for as long as the system exists. However, the alternative rails are here, and Bitcoin does show what that looks like when you have a longer duration, higher preference of what saving value is in a superior finite asset. And I just think it's going to continue to take flow from every type of capital stack there is, every generation even furthermore, and become ubiquitous in a way that is unstoppable.
It's a real opportunity for Hong Kong, right? Jurisdictions that take a pro-Bitcoin stance and create a regulatory architecture that allows people to hold Bitcoin, raw Bitcoin, it doesn't have to be securitized Bitcoin. That's where a lot of this capital will flow over the long term as these trends continue to get worse.
Okay, so one thing about it is I hate regulation because you don't, okay, one of the basic things is that I have a right to hold my money. I have a right to own stuff. I don't need permission I mean, the government needs permission from me to take my stuff. Yeah. So one of the things that, one of the reasons I got into Bitcoin, right, was that, okay, so I worked in traditional finance, and so I can do math, I can do complicated stuff. I can make like tables and tables of equations. And one thing I learned is that the more complicated you make it, the more it's somebody's trying to take money from your wallet. So the thing I like is I like physical gold, the yellow shiny stuff I can hold. I like paper cash because I can count that. And I like Bitcoin because, okay, you do need to trust the math a bit, but the math is pretty solid. Everything else you should be suspicious of. Because if you start with these three things, you're based on math, you're based on physics, you're based on something you hold. Anytime you do all this complicated stable coin, debt, whatnot, right? There are people like me that are going to write complicated equations to take your money. So that's why I got into Bitcoin, because I couldn't stand it.
So, we have some disagreements on how this happens and what the causations might be, but directionally we're all very aligned. Why then do we have the perspective of Bitcoin? Why is Bitcoin the unique tool to help unlock this capital around the world?
I mean, one example, just a very quick one, is a great friend of mine who lives in Dubai recently just was telling a story about how he's making bids on his friend's gold, who they were trying to sell at a discount to get out of the zone as fast as possible. Now, they had saved that gold for a rainy day, and the rainy day came, and then they wanted to get rid of it as fast as possible. And it's because it wasn't portable, it's not as easily divisible, it's very heavy, it's not transferable that way. And Bitcoin serves that purpose, and so it's not that I'm not a fan of gold, because I am, and I agree with you wholeheartedly. It's that there's different use cases, and that they both they compete for these unique propositions that are similar. But Bitcoin just is superior when it comes to finite, transferable, potable, somewhat fungible enough to be usable collateral that you don't have any other form of.
I would add to that. I agree with everything you said, and I would add to that this way: that the principle that makes Bitcoin better than gold, if we really want to kind of use one word to describe it, is resilience. Like you were mentioning how your parents had to sew the gold coins into their clothes to get out of the country. With Bitcoin, you don't have to do that. It's just there on the blockchain. Now, having said that, I do think that one area of Bitcoin resilience that is underappreciated in the Bitcoin community, but is incredibly important going forward with all the things that we've been talking about, is the conversion of US dollars to Bitcoin. The one thing we do not have today in the Bitcoin world, which we will need in the future, is a decentralized, censorship-resistant exchange mechanism for fiat currencies and the US dollar. Today, if you want to sell your US dollars and buy Bitcoin, you either have to do it on a street corner, as often is done in certain places around the world and used to be done in the US, or you go to Coinbase or Kraken or some big exchange and do it there. The big exchanges are not censorship resistant. The government can shut them down in a crisis or at any other time. And the stable coins that are licensed in the US and in other jurisdictions are censorable. In fact, that's a condition of their licensure. And all these laws that we were talking about before, like Clarity and Genius, that's explicitly in those legal texts that say we, the Treasury Department, have to be able to censor this stablecoin in order for it to be legal. So the big problem is, if that's the case, how do you, if the US someday says, we're not going to allow you to exchange US dollars for Bitcoin because we're worried about capital flight, how do you scale Bitcoin's utilization in that environment? So I think one of the most important things that some people are working on in the Bitcoin community, but it doesn't get nearly enough attention, is that problem. How do we create a decentralized mechanism for US dollars or digital US dollars to be exchanged into Bitcoin in a censorship-resistant way? For Bitcoin to be truly resilient, I think that's a thing that we need to do that we aren't doing today.
So I can answer that by what happened on day one of the Iran war. Iran sent a bunch of drones. They shut down the Dubai airport. Once you shut down the Dubai airport, gold shipments and paper shipments stop dead. Now, the Iranians are being really nice right now, and they're letting gold shipments go through the Dubai airport, but they're making it very clear they could stop it. Now, as far as the money in the banks, Iran shot a few warning shots at the Amazon data centers. They can cut down the data links. They can block Starlink. So at that point, you realize that the Iranians are being really, really nice, and there's this huge negotiation because the Iranians don't want to blow up the world economy. Now, once we move to the new world, right, everybody wants something that can, including the Iranians, right? They know they can shut things down, but there's going to be probably this agreement that, okay, I want something that you can't stop me, but I can't stop you, and it's going to be Bitcoin. Because if you're in Dubai and you had gold and the airports are shut down, you're host. If you just remember those 12 words, Satoshi wallet, your money's good.
Awesome. Well, thank you, gentlemen. Again, this was Joseph Wong, Sean Owen, and Ovik Roy. Thank you, guys.
Thank you.
Thank you.
Welcome back into the live news desk here at Bitcoin Asia 2026. More faces, more patrons trickling in here. We're starting to really feel the energy here. Good day two ahead of us here, and new faces on the desk with me as well. Spencer Nichols, EP, producer of just everything at Bitcoin Magazine, and Isaiah Austin, our social media czar. We just saw our buddy Sean Hagan leading a panel on stage called How Bitcoin Unlocks Capital Throughout the World. And Ovik Roy started out hot. He really did not hold back. He brought up the worst case scenario right away, where if we reach extreme inflation in the United States, the government might prevent people from using USD to buy Bitcoin. So Spencer, I'll start with you. How do we get ahead of that now?
Yeah, I think Ovid brought up a really good point, is what becomes the incentive structure of the United States when we do see something like financial repression, we see high inflation, negative real yields for a long term, perhaps severely negative real yields, and what is the response function there? And I do think, there's a case to be made that the United States would not like to see people exiting the system for something like Bitcoin. I think for us and for us here at Bitcoin Magazine, that's something we often think about is, will that be what takes place, or is there a way to align the incentives of a sovereign like the United States with the interests of something like Bitcoin? I think this kind of brings to mind something like Bitbonds, where we back U.S. Treasuries with a small amount of Bitcoin. Is that a way to hedge that inflation risk? To provide a positive real return for bondholders potentially and keep us away from that tension. But I really do think that tension between, the U.S. government and Bitcoin holders is something very real.
Yeah, definitely. And, in the United States right now, we're very blessed to have a pro-Bitcoin administration in office. But, the reality is, it wasn't Bitcoin, it was stable coins last year where the conversations were happening with the Clarity Act on banks coming in and saying, hey, if we offer yield with these stablecoin products and rewards, then, it's essentially a bank run. Like, they can't offer that return to their clients. So they essentially won that argument. They won the crypto industry got the short end of that stick. So it's going to be very interesting to see how that plays out with Bitcoin. I think the Clarity Act passing, there's certain acts within the Clarity Act that prevent FinCEN from essentially spying on people and getting their home addresses and names whenever they make Bitcoin transactions. So getting that kind of legislation through the finish line will be huge for preventing the government or a future tyrannical government or institution from being able to censor or block Bitcoin transactions.
Real quick follow-up, Ovik also brought up the need to decentralize the on and off ramp for acquiring Bitcoin in order for it to be truly resilient. What do you think that looks like?
Yeah, I think that's a really important, outstanding question. He talked about the centralized nature of stablecoins in their current form, and if people want to be able to get out of, the U.S. dollar-based, Treasury-based financial system into Bitcoin, how do they do that in a way where the government can't just lock the doors and say unilaterally, no, you can't exit? I think there are some interesting things out there. Frankly, I think it's an area we need to do a lot more digging, but stable channels is quite interesting. And yeah, something like stable channels has been explored, but I do think it's an outstanding question. Ovik has said this very often, and is certainly a risk that we need to be cognizant of. Isaiah, do you have any thoughts on the matter?
Yeah, no, completely agree on that point. Throughout the entire world, there's all sorts of different regulatory bodies that can stop Bitcoin transactions from happening, or at least spying or getting into people's phones and able to track their information and their details about who they are, where the money's headed. But I really think, once again, I just brought up the Clarity Act, but the Clarity Act passing, I think, in the United States specifically, will be really good for preventing that. And I think once that bill is passed, or we have some form of jurisdiction from the CFTC, I think, just like we talked about yesterday, I think that the world will follow, and there will be lots of jurisdictions around the world that will follow suit.
He also brought up the conversation, the fight in the U.S. between stablecoin issuers and banks, and kind of the tension there. Should stablecoins have some type of reward? Obviously, banks don't really feel too kindly about that. But he brought up his product, SATA, comparing it to yield on savings and returns on money market funds. Obviously, SATA, the first of its kind preferred stock that pays dividends every single business day. So, Spencer, do you think SATA could be a substitution for traditional yield instruments?
Yeah, I think that was initially how something like Stretch, issued by Strategy, I think was marketed. Is they were saying, hey, this could be a competitor to money market funds, and the addressable market of that is absolutely gigantic. I think we saw much greater volatility in Stretch, particularly, than people had anticipated, and so it really kind of brought into clarity that that might not be the case, at least not now. I think the future of these instruments is something that is yet to be determined. I think, on the bull side, you have Bitcoin appreciating rapidly, significantly above the interest paid on this perpetual preferred equity, something like Stretch, something like SATA. You could see these things trade very competitively. You could see credit spreads compress. I think, it remains to be seen where we are on this journey. But I think it's going to be quite a while before these really become the preferred method of savings that's, short-term, very liquid. But, who knows? With Bitcoin appreciating rapidly, we've seen crazier things. Isaiah, I'm curious. We were talking off camera.
Yeah.
What do you think about, these perpetual preferred instruments?
Yeah, well, if you're bullish on Bitcoin, you should be bullish on these perpetual preferred instruments because, they're offering, I think, Strategy's STRC product somewhere. Is it 12.5%, 12% that's being offered
somewhere?
Right now?
Yeah, I haven't checked yet.
And then SATA is 13%. So if you think Bitcoin is going to clear that hurdle rate, you should believe in these products. But I do think the distinction for me, and where I sort of get lost in the whole money market argument for these things, is that a lot of investors look at money market funds. All investors are different, obviously, but as short to medium-term investments. Hey, I'm about to buy a house. Hey, I'm about to get married. I don't want to be in the volatile market. I need to know that this money is going to be available to me in the next year or two. And although it's not FDIC insured, these banks have so much liquidity that they're able to fill even in a down market. With these products, we saw recently falling very deep below par, and now, coming right back to par, which is incredible. But if you needed that money in a very short-term basis, that could be difficult. So I kind of see it as more of a medium to long-term investment right now, but that thesis certainly can change as Bitcoin continues to progress, gets more institutional adoption, and volatility retracts and decreases a little bit.
Yeah, and I think we just need to see the credit risk on Strategy and Strive and others compress for these to really take off, and that just requires Bitcoin to appreciate very strongly to make 100%. That happen.
Okay.
Grace, over to you.
Good stuff, guys. All right, Isaiah, Austin, Spencer, Nichols, thanks so much. Let's head back to the main stage now for a Mandarin language panel, The Rise of Financial Super Apps.
App 这个方向去发展的，然后总体的这个产品的愿景，肯定是放更多类型的金融产品在同一个账户体系里面可以交易。应该是这个是所有这类型的一个公司，包括这个crypto 的交易所，也同时间去努力这个方向。但从细节上的大家的 execution 有一点不一样。 大家可能看到的是同一个 APP 里面可以交易所有的产品，但底层的要打通的是完全不一样的体系包括譬如说从 crypto 里面这个交易所这个体系里面怎么去打通这个银行的体系，怎么去打通这个传统资产股票这个底层那个体系，怎么打通这个比如说外汇啊这个黄金啊这个体系，然后打通了之后，我们还要考虑的就是合规平台的，就是底层合规后台的一个打通所以我们看到的是每一家这类型的公司都会往这个方向去努力，因为是什么？因为这个是用户有需要的，用户希望在同一笔钱、同一个账户体系、同一个保证金系统、同一个风控系统里面都可以交所有的金融资产是共通的，所以我认为这个趋势可能会越来越更加明显。
Solo 呢，你自己就是作为这个媒体，你跟很多不同的项目方啊、交易所去合作，然后也有跟你们的观众去解说嘛。你自己的角色对于这个 narrative 怎么看呢？
首先从大趋势来讲，就是我理解从去年就开始了，比如说作为传统的券商平台或者交易平台，比如说最激进的就是 Robinhood， 他们上了很多的 crypto 资产，然后从今年开始，陆陆续续的很多交易所他们都在上就是 stocks 资产，所以很明显两边在做融合。但是呢，在区分就是未来的 user interface 的界面的时候，其实应该先定义说，比如从用户角度，他希望得到什么样的产品，和从合规角度或者是从证券交易所还是crypto 交易所来讲，他们能做到什么程度？首先从底层来讲，它很难两个账户完全耦合，因为两边适配不同的合规。但是呢，从用户角度上来讲，比如说刚才你聊到我们跟用户沟通，其实比如说 crypto 交易所它去做 stocks， 它的目标是把 crypto 用户转成 stocks 用户。然后呢，如果是那个比如说 Robinhood 它去做 crypto 资产，它其实是想把那个传统的买 stocks 用户变成 crypto 用户。这两部分用户其实它的用户习惯是不一样的。但是呢，他们有一个一样的是说，他们需要方便，他们不需要理解底层到底有多复杂，你们怎么做的。那么我觉得从这个角度上来讲，即使现在很多的，就是就是现在比如说很多 crypto 交易所已经上了很多股票了，但是呢，我觉得这个耦合度还不够高，就是未来一定是一个界面一个账户。就是对于用户来讲，他是需要这样的，然后去管理所有的资产。但是我觉得要做到更进一步的是，不只是说你在一个账户里面去购买或者出售你的资产，而是你的资产可以跨两个不同的类型去做调用。举一个很简单 case， 比如说我拿的 crypto 资产，我可以抵押来去买 stocks 资产，或者是我 stocks 资产，比如说我现在有英伟达，我有多少股票，然后呢，我的这些股票可以拿来做保证金。去开 stocks crypto 杠杆等等，我觉得可能之后是要做到这样更好的耦合，对，大概这样。
倪丹呢？你的看法？
我觉得前面两位老师说的都很好啊。现在这个，其实我记得很早提出 Super App， 这个是由 SEC 新任的 Paul Askin 他提出来的这样的一个想法，就是只在给用户提供一个既可以买股票，也可以买加密货币，同时可以出入金的这样的一个账户。也就是说，用户只要在一个就是超级 APP 里边，他可以买所有他想要的金融产品。那这个也是现在美国 SEC 想要去追求的。那我们现在看到很多的这个加密货币交易所也好，还有一些传统的券商也好，都希望可以去做到这种融合。那尤其我们看到现在一些这个就是我们讲传统一些的加密货币交易所，都已经像Zalo前面说的，叫做这个联合保证金，一个账户里边既可以买股票，也可以买这个加密货币，同时也可以去做理财，还可以去做买卖现货。这个其实就是从用户角度来说，怎么样方便用户，能够让用户的一个资产在跨类别交易，这个我觉得其实最重要。就像前面Zalo老师前面说，哎，我是一个加密货币的用户，我自己长期持有 Bitcoin， 那这个时候我很想买 VOO 或者 QQQ， 那我应该怎么做？那我可以把我的 Bitcoin 去做这个叫做什么借贷，然后拿出来一部分的杠杆，然后去买 VOO。那或者来说，在传统的券商里边可以说，我之前有 VOO 有 QQQ， 我可以去做融资融券。融资融券出来的钱，我可以去买一些 Bitcoin， 增加一些，比如说像是 Bitcoin 的敞口啊，增加一些这种类似 whatever， 对吧？包括我们现在可以看到非常非常明显的一个例子，就是不管是 Binance 也好，还是 OK 也好，他们都做了一个很类似的一个工作，就是我以前只是拿稳定币去做借贷，但现在我的稳定币可以通过平台去买短期美债。那这个的利率其实是会比我借贷要更稳定，对，我觉得这就是一个很好的一个融合项。好，谢谢。
所以其实面向于用户或是观众，对于他们来说，方便的程度是很重要。但同时，其实面对交易所或者是平台合规的这个程度也是不能够就是一定要做的一个事情。然后第二题就是，特别是想要问Linus， 就是我们从这1年里面已经看到 OKX 不停的在这个机构的层面去做合作，然后银行方面也有不同的托管的合作，到最近也有 IC 这个事情。你自己在这个角色里面，你觉得是什么因素在驱动这类型的一个合作呢？
我觉得就是IC 的战投合作，就是按照25 billion 的估值投资 OKX 集团。那我相信也等于看到这个金融市场的一个往 tokenize 的方向去发展的一个非常明显的一个趋势。这个很简单一点，就是因为整个金融市场我们可以看到是往更全天候的交易，同时间股票代币化的也是个非常确定的一个想要努力的一个方向。然后我们也看到比如说 OKX 的股票代币化的一个整体的业务上线之后都有非常好的一个增长之后我们看到说不定这个是未来的一个很重要的一个方向。所以我认为这部分的投资就是代表着一个非常明显的市场的一个信号。
我们刚刚提到这是交易所跟传统金融的券商两方都在一起融合。那你们觉得哪一方的路径比较简单？就是交易所要打进传统，或者是反过来说，传统要打进 crypto 的话，哪一方会比较容易去做到 ？Solo， 你的看法是怎样的
？OK， 好的，这是一个很明显的趋势，就是两边都要抢用户 ，which means 两边的用户都觉得说，我还想多，就是可能交易量到这个地方，我还想再多增加一点交易量，多增加一点用户画像，然后在我平台上，就是以后你交易什么资产都到我这里来就行了。然后呢，其实。我觉得这个问题首先要定义说，我们要多合规的去拓展到对方的市场。比如说，对于传统的证券交易所来讲，其实这个金融体系是非常完备的，它的监管也是很完备的。which means 就是它如果想进入 crypto 去接入更多，不管是 listing 更多 crypto 资产，还是去让更多地区的用户来用我的产品，那它的路径可能相对明确。那同时，它的阻碍也很明确，就是现在如果没有这样的规定，你的通路不通，那你就没办法做。但是对于 crypto 来讲，坦率来说，就是现在 crypto 交易所很多，然后大家也都看到，每个交易所基本上现在都有自己的股票资产，你也搞不懂它背后到底是什么股票资产，或者是它跟哪个伙伴合作的股票资产，就等等。所以，如果是从这个角度上考虑，只看速度的话，我会觉得说交易所就是 crypto 交易所进到传统市场会更快，但这个可能牺牲了一部分的就是所谓的合规。 然后呢，当然他们肯定也在这个进程里面，只是他们在这个进程里面，如果拼速度，他们肯定可以就是先上后面再改，类似这样的方式。但是如果是传统的往 crypto 走，它其实会相对需要更长的时间。而一旦它的这个通路被打得比较顺了之后，比如我们看到之前 Robinhood 它上一个 BTC， 大家觉得哇好震撼什么的，你再上 Sol， 然后你再上其他的，再到现在你看上一个 Meme Coin 好像也很正常，从去年到现在上很多 Meme Coin， 所以我会觉得说从时间来看 ，maybe crypto 会交易所会领先，但是从长远来看，我觉得传统的这种交易平台再到 crypto，maybe 他们后来者可能还会居上。对，
我觉得其中一个可以关注的点就是迷因币比较吸引流动性，然后反过来说，其实券商他们很难去做这个迷因币嘛。所以如果真的要打进这个 crypto 的话，在这一点来看，其实真的交易所的平台可能甚至是比较容易去打进这个传统用户的这个市场。然后大家应该也知道，倪大平时有在 Twitter 上面去做很多分享啊，对于产业的趋势新闻比较敏感。那你平时自己在做 research 的时候，你觉得有没有对这个问题，我们刚提到这个问题，有一个观点或是一个解释了？
会有，其实我跟老师们稍微有点不同的看法，就是在于加密货币，其实它更容易在货币管制国，还有在于这个资本流通不是非常畅通的地区或者国家，它是有天然的获取的用户。而在于一个资本没有非常管制，你在外汇的兑换非常简单的这种情况下，它的这个股票的这个，尤其是这个跨国境的股票，它会更加容易。所以现在我们可以看得比较清楚，就是你的外汇监管更简单的国家，它接受加密货币会更容易，反而是外汇监管更复杂、更要对外汇有监管、要管控的国家，它对于加密货币的这个打开就更难。所以我们可以看到，越是这种国家，其实民众反而对加密货币的这个需求很旺盛，因为很多人都希望能够去投资优质的优质的资产。那其实我们知道，全球最优质的资产之中，可能美股和美债。尤其现在，比如说我们看到这个 AI 半导体，这个都是非常火。但如果你本身就是一个货币管制国，或者是一个股票市场不是完全开放的一个地区，那么它就很难去通过你的本国货币去买到美元资产、美元的股票。但如果你通过加密货币，现在就比较简单了。当然了，这个涉及到一些这个管理啊、监管啊等等的问题，但是实际上我们通过整体的看法来说，比如说你像美国，它本身的资产管理就比较开放，它对于外币的这个管控也比较简单。那在这种情况下，你买股票，大家还是喜欢去纳斯达克、去纽交所，非常容易就开了账户。包括现在川普也开了一个川普 account， 就是鼓励这个美国的年轻人也好，还有这个父母也好，去买美股。那他们去买 BTC 的时候，其实也会有非常方便，比如说像 Coinbase 这样的已经上市的企业，像 Kraken 啊、像 Treasury 啊这些上市的加密货币交易所，他们都非常的容易。包括现在像 Robinhood 这种融合性的，其实我觉得这个都非常的简单，反而他们术业有专攻。但是比如说像是一些某些管制会比较困难的这些地方，那么他们就会有选择更好的一站式。我更熟悉的是什么？我更熟悉的是我能够方便出入金，能够把我的本国货币去换成 USDT、USDC 这种美元计价的稳定币去买的时候，那么他会发现，哎，我有一个非常好的渠道可以去买美元资产。对，我觉得从这种方法来看，那么在高货币，就是在管控比较松的这些国家里边，那么传统市场进入到加密货币会比较容易。那么从管控比较严的这种地区来说，可能从加密货币进入到美股啊传统市场这边会比较简单一些。好，谢谢。
Lennox 你自己就是在 OK 就是当高层，经常跟一些 institutions 去合作。你对于刚刚前面两位嘉宾 有没有一些不同的看法呢？
我会从就是刚才说那个问题，就是到底哪一边比较容易，或者哪一边比较快啊？我认为股票代币或者传统金融资产的代币化是一个升级啊。为什么？很简单，就是全天候交易。这个对于在交易这个角度，还有最重要的是风控一个角度，尤其在传统市场是，传统市场包括交易所，传统的交易所包括银行体系，在关门这个阶段，它还有价格，这个信号是非常重要的。所以股票代币还有或是商品代币化，然后可以放进目前主流的大的交易所，就是 crypto 的交易所里面可以进行交易，用同一个撮合引擎、同一个保证金体系、同一套的风控系统、同一套的底层的合规系统，然后加进去传统资产，对这个金融市场是很大的意义的啊，因为你可以任何时间可以进行交易风控。这个已经是对于传统市场来说，已经是一个我们叫价格信号的传导，叫 price discovery process， 对吧？所以我们看到，就算是美股在没有交易这个阶段、这个时段，我们也看到我们叫 off trading area 啊，例如在 OKX 啊或者其他大的平台里面，也有很多很不错的不同的一些交易量，对吧？那这个时候对于要做风控的人，要管控风险的人，在管控这个礼拜天啊、礼拜六啊，或是 off trading hours 的时候的一个风险，意义非常的重大。所以，如果是股票代币是一个传统市场的升级。
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington. Sean Hagan back with us now. And Hafiz Aguri, new CEO of 21 Capital. Thanks so much for joining us.
Thank
Your
you.
first time in Hong Kong and this conference. How are you enjoying it so far?
Great. It's actually very good. Pleasantly surprised to see how busy this is, right? Particularly on a bear market. So very, very happy to be here, and thanks for having me.
Yeah, the energy's been awesome here the last 2 days. I want to start off with you recently taken over 21 Capital as CEO. How's that transition been going?
So far, so good. I've actually been involved with the company for a little bit longer than just this month that I've been a CEO. For a while, we've been thinking about how to set up the company, and now it's time to build. So very excited for it.
And when you talk about building, right, one of the things that separates 21 Capital from the rest of the pack, perhaps, is your idea of kind of modeling more similarly to Berkshire Hathaway, right? Buying things and holding them for a long time. One of those being operating businesses. What is your outlook like there? What kind of businesses are you looking to acquire? What are you excited about acquiring? And how does that fit into your long-term strategy?
Yeah, so it's exactly right. I think there are several pillars that we're looking to build at 21. The first one and the most exciting one is around operating companies. So I think 21 is the Bitcoin operating company, and we have 43,000 plus Bitcoins right now in our balance sheet, right? Which is the kind of like using your analogy to Berkshire Hathaway, that's our permanent capital, right? We're going to use it in a way to acquire profitable, cash flow positive business that can deliver value to our shareholders at the end of the day. And that's one of the key advantages of being in a bear market, which is right now you have a lot of assets, a lot of very good teams out there, and it's been very active on conversations on that front, right? It's a very different model than I think the traditional Treasury model, which is very good also, but I think in terms of capital allocation, when you think about, my job as CEO is to do capital allocation, right? And if you think about capital allocation, the way that they do capital allocation is much more similar to how hedge funds would do capital allocation, looking for dislocations in the market, looking for ways to leverage what they currently have and then acquire more Bitcoin. The way we're thinking about it is just more similar, as you said, to Berkshire Hathaway, looking at companies that are profitable, sustainable, that are growing, right? And then the long term, that's what's going to drive shareholder value in Bitcoin terms for our investors.
And one thing I think that is interesting, you talk about capital management, right? And how you're going to deploy some of this capital perhaps to buy these distressed assets coming off of a bear market. seemingly your treasury's down as well, right? Having to market to market, it's down. Are you planning to use mostly stock transactions to buy, or what is your acquisition strategy going to be?
It's a good question. I think it depends on the target that we're looking at, right? So right now our stock is trading at a discount to NAV, so it probably wouldn't make sense to issue stock at these levels, right? But we're pleasantly surprised that in some conversations we're having, right, we could look into using our stock at NAV as a currency to acquire other current companies, right? But as I said, that's going to depend from time to time. We also, if you look at our treasury that we have, roughly 2/3 of our treasury is unencumbered, so we could use that to issue more debt and then potentially acquire more companies. But as I said, this will depend on company by company, situation by situation. And market, the market changes very quickly, right?
Yes.
We're now at 80,000. Who knows? Maybe Bitcoin will continue to go up, maybe it'll go down, right? And we'll try to be very nimble and very opportunistic in how we approach that.
Are you taking more of a regional approach, or are you looking at global companies as well?
Global companies, we look to companies everywhere, as long as they are Bitcoin native, or companies that are related to Bitcoin that can help the Bitcoin ecosystem. We'll be open to anything.
Hafiz Zaghuri, CEO of 21 Capital, joining us on the live desk right now. You are just minutes away from your keynote on the main stage, and the title of it, Here Be Dragons, Bitcoin's first ever hash rate bear market. That title is intriguing to me because here be dragons. I'm curious, what is the actual dragon here? What's the single biggest danger this hash rate bear market poses that people are underestimating?
Yeah, I think the analogy of here be dragons. So the here be dragons comes from is that in the 1500, you had this the first globe that was created, the Linux globe, right? And it was an artifact in copper where they put the continents that they knew, and then the area that they didn't know. It was written in Latin, Hic sunt dracones, which means here be dragons, right? And the message there was that that's uncharted territory, that's new territory that you don't know. You don't know if it's good or bad. Eventually, a lot of it became very good, right? But it's uncharted territory. And I think Bitcoin is at uncharted, Bitcoin mining is at an uncharted territory that for the first time, we're seeing a slow, gradual decline in network hash rate, which for miners is actually very positive and very good, because what it means is that they have, they are less diluted. If you look historically, on average, Bitcoin network hash rate has increased by 50% year over year. In all of the models that we use, that we're thinking about, usually 50% was kind of like the gravity number that we had, that's where we're pulling towards. In the last year, we've had actually a decline in network hash rate. And from the top that we hit at 1.275 zettahashes, we are down 30-40% from that. And there's no indication that it's coming down. Very different than what we saw, for example, in 2021 with the China ban, where network hash rate collapsed, and then it gradually went up with time. Here, it's gradually going down, and it keeps going down. And when you think about mining, I think this is actually a very good opportunity because you're in a position that Bitcoin price is very compressed. Potentially, I think it's cheap to where it is right now. And then at the same time, you have network hash rate coming down. So for miners, this could be a very opportune time. And the reason for network hash rate coming down is because, first of all, price being down, hash price being down, but also a lot of the large-scale Bitcoin miners are pivoting to AI HPC. So focus on Electron, which is the company that I founded, is to continue to be focused on Bitcoin mining, steer the course, be very focused on cost savings, right? Having very low SG&A as percentage of revenue, and that's how we want to be here for the long run.
Yeah, and one trend in that sector for sure is the integration of Bitcoin mining and AI compute as well. As you're thinking about the evolution of that space and maybe the blurring of that line where a lot of these business models are now intertwined, how does that tie into the 21 thesis of perhaps it makes sense to tie on acquisition of some energy or AI computer infrastructure as well?
Yeah, very good point. I think, we announced the intention of the transaction with Electron, right? I mean, there's no transaction yet. That's an announcement that's going to take some time. But if we think about Bitcoin mining, right, in general, not only Electron, I think it opens a whole new set of optionality in Bitcoin that I think is extremely exciting. Mining brings together two transformations. I think the energy transformation that we're seeing in the world right now, and then the monetary transformation that we're seeing with Bitcoin, right? And energy, it's where energy meets Bitcoin. And to your point, if you think about Bitcoin at the end of the day, just like steel, right? Steel, it's pure energy, right? You have to put energy on it to actually get your output at the other side. Bitcoin mining is the same thing. It's you have ASICs, you inject energy on the ASIC, right? And at the other side, you get the best monetary asset that was ever invented, which is Bitcoin, right? So we will look into energy opportunities. We will look to companies, I think, on that side of the business as well. And to your question around how it interacts with AI and HPC, I think Bitcoin mining is the most flexible load that we've ever seen, right? You can turn it on and off at any time at the whim, right? No other industry can do that, right? Going back to my steel analogy, if you turn down a steel factory, it takes months to turn it on again, right? While Bitcoin mining, we can, and we've been doing that. We're buyers of last resort and sellers of first resort as well when the market needs, like in markets like ERCOT and other markets. So it's a very exciting market, very different than AI HPC that needs redundancy, full uptime most of the times, right? For us, we don't care, and we can be deployed anywhere. And I think we'll see a segmentation of the market between opportunities for Bitcoin mining and AI HPC, but that's very exciting for us as well.
Really cool stuff. We got to hit a quick break, but Hafa's going to stay with us. Nico Moran's going to join us on the other side of this. We'll be right back. This is Bitcoin Asia 2026.
Everyone has an opinion. We want evidence.
No hype, no echo chamber.
Just better questions.
And better answers from the biggest names in Bitcoin.
This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
Every year, this community comes together to celebrate, to debate, to build what comes next. And every year, the stage gets bigger. Sound money, center stage. So, where do you go to celebrate the next chapter in Bitcoin history? You come home. Nashville, July 2027.
Welcome back into the live news desk here at Bitcoin Asia 2026. We got a full house on the desk now. I'm Grace Remington, now joined by Nico Moran, founder of Simply Bitcoin. We've been talking to Hafa Zaghuri, the new CEO of 21 Capital, and my partner in crime, Sean Hagen. Nico, you've been in the space for a long time. You've been to all the conferences, but first time here. How's Hong Kong treating you so far?
Absolutely fantastic. You guys do such an incredible job at every single conference that you guys throw. The only one I haven't been to is Bitcoin MENA, but I got to say, I checked Hong Kong off the list, and you guys did great, like always.
How's it different from the other ones so far that you've been to?
It's just the vibe, and it's actually very interesting because on the first day I just ordered room service because whatever, and my wife's like, "What did you order?" I'm like, "Spaghetti bolognese," and she's like, "You're in Asia and you ordered spaghetti bolognese? What are you doing?" And I'm like, "Sophie, it's a bear market. You got to save money somehow."
I gotta admit, I went out with a group and we defaulted to Italian as well, so you're not alone. But we'll be adventurous another time. Okay, so you put out a daily Bitcoin show, so you have a read on the market sentiment that's probably better than most people out here. Bitcoin obviously coming out of a bear market. We had this recent volatility spike. What's been the reaction from just people you interact with?
Yeah, so I've been in Bitcoin for a decade, and from a vibes perspective, this has been by far the worst bear market I've ever experienced, and from a sentiment perspective as well. And just to add to the pain, the cold card exploit. The people that did every single thing right were fundamentally affected. And that's tragic. It's a huge step back for the whole self-custody movement. I think self-custody is going to come back stronger and better than ever before. Hafa, you actually wrote a piece about this exactly recently. It's just a very interesting situation.
Yeah, I think you're absolutely right. I think this is one of the worst bear markets that I've ever seen in pretty much not only Bitcoin, in any industry, right? We saw a leakage of talent. So a lot of talent that was in Bitcoin went to work in financial markets, went to work in AI, HPC, right? And that's bad for Bitcoin in the long term. I think it all comes back with time, right? The morale, I think everybody is like, just look on Twitter, everybody's fighting everybody else, right? We had a fork out of consensus, right? So all of these things together show that this has actually been, I think, a very painful bear market for everybody. But bear markets always come to an end, right? I think the most important thing to always is zoom out, rethink about what Bitcoin really is, the potential that it has, right? The addressable market that it's looking to capture, and none of that has changed. Bitcoin is still a drop in an ocean of liquidity out there, and we know that long-term number will go up, is going to come back, right?
So what I'm reading between the lines, Hafa, is you're saying we're still early.
We're very early. We know that, right? Bitcoin is 1.5 trillion. Gold is 30 trillion. Real estate's 300 trillion, right? So it's as I said, it's a drop in the bucket. And why is Bitcoin competing with these assets, right? Because at the end of the day, gold and real estate, they're mostly used as a way to store value, right? Money is a memory of work at the end of the day. That's how you store your savings. And Bitcoin is the best savings technology that we've ever seen, I believe. It's completely clear, very different than what we see, with a Federal Reserve and Treasury secretaries that just change their mind overnight. A group of 12 people in Federal Reserve banks can change their mind. This is the monetary policy here. It's written in code, fully transparent. Anybody can review it. We know exactly how many Bitcoins are going to be issued approximately every 10 minutes as a new block is found, right? And that's new for a human in human history. And I think that's the most exciting thing about Bitcoin. And none of that has changed. If anything, it got better with everything that we're seeing outside of Bitcoin right now.
Yeah, absolutely. So, Hafa, you released this shareholder letter recently. Congratulations, by the way, being appointed CEO of 21 Capital. You released a shareholder letter that went absolutely viral on X. And one of the things that stuck out to me in the shareholder the most, and what I care about the most as a Bitcoiner, Hafa, is you talked about the mining ecosystem, you talk about node operators, you talked about software developers, and you were basically making the case that you feel that you should support these operators with no strings attached. That's one of the things that really stuck out to me in the shareholder letter. Could you expand on why that's important to you?
Yeah. We're all shareholders at the same asset, which is Bitcoin, right? If Bitcoin doesn't succeed, pretty much none of this is going to be around, right? And for the network to succeed, you need to invest in the network, right? And that's at the protocol level, That's helping development. That's helping research. So we are committed to doing that, right? To the shareholder letter, just going back, excuse me. It did get very good traction. I can't tell you like here how many people will come to me and say, well, I read your letter. I think that's exactly what we should be looking at. And there are 5 pillars that we put in there. And you capture exactly right because, I think above the 5 pillars, there is the Bitcoin pillar. Bitcoin is the foundation to everything that we build, right? And that's exactly why we want to support the network and make sure that we continue. I came from Bitcoin a little bit from the tech side as well. I remember one of the first things I wanted to do when I started to look at Bitcoin was like, I want to review the code, right? And I learned very basic C. I wish we were in the time of AI that you could just, plug it in and ask, okay, what does this say? Which part of the code that says, right? And it's beautiful, like the whole thing around the Bitcoin, the difficulty adjustment, right? How consensus is really another thing that I wrote about, how consensus is really driven, right? It's just amazing, but it needs to support. And we can't just think that the network is going to support itself because it won't.
Absolutely.
The Bitcoin developers in particular, they have a very tough job, and it's a very ungrateful job as well. For a short period of time, I ran an open source project, and it's ungrateful. People will complain all day long. You get paid nothing for it, right? You have a lot of downside because you need to make sure that security is around it. So it's exactly one of the key things we're looking to do at 21 as well.
Hafa, you and I are originally, we come from the same part of the world, right? And my family originally comes from Venezuela. Your family comes from Brazil. You are from Brazil. Mm-hmm. And one of the things that inspired me the most when I was reading the shareholder letter is talking about your lived experience in Brazil and how obvious something like Bitcoin is to really fix the problems that our countries face.
Yeah. We were in Bloomberg this morning, right? And they asked a similar question. I think to understand Bitcoin, unfortunately, you have to have experienced a few things to really understand it quickly, right? And when you live in a place where, a couple of funny things that used to happen in Brazil when in the late 80s, early 90s, when we had hyperinflation of 1,000% a year, right? So you can imagine what that means, right? And I remember like one of the funny things that going to a supermarket and they would change the prices midday, several times midday. And my mother, I was small, my mother would say, get a shopping cart. These are the things we need to buy. You see where the guy is that is changing the prices. Go ahead of him, get the cans or the things before him so that you don't have to. And these things impact you deeply, right? Because then I knew that money as a store value was just a fiction, right? And coming from backgrounds like that, I think it helps us, right? Then you have to grok all the other aspects of Bitcoin, which are very different as well, the technological one, the game theory one, and so on. But, in a sense, I'm very grateful and lucky to have lived through that because it gave me, and to you as well, I can imagine in Venezuela, right, with everything that has happened, a very different perspective of the world.
Absolutely. I mean, it gives you like a deeper appreciation of what the problem that Bitcoin fixes. That I think a lot of us in the West, we have this financial privilege where, as Jeff Booth says it, the inflation rate isn't as big, so you don't realize you're being actively stolen from. Yep. Now, often one of the things that fascinates me, and I've known you for years now, is your Wall Street background, right? You came from a world that I've told you many times. I have a friend that I'm not going to name the bank on TV. You know who you are, but I'm not going to name the bank that he works at. But he out of my 5 friends that I grew up with, he's the one that still has not been convinced about Bitcoin. He fundamentally just disagrees with it. He doesn't like it. What made you switch? What made you realize, that Bitcoin is true? And you had some very interesting stories that you've told me in the past, how you would, pitch your coworkers and they would just look at you like, what are you talking about?
Yeah. I think a pivotal moment for me was 2007, 2008 during the financial crisis. So I worked at Merrill at the time. Merrill, just to give an idea, Merrill Lynch had like 2 massive trading floors, football field size, each of them, right? And one night the financial crisis was exploding. I was leaving home, going from the bank home, and I got a call from my boss saying, well, come back. Bank is being sold. We went under. Bank is being sold this weekend to Bank of America. And that just showed to me how fragile the system really was. I think the newer generation that came to Wall Street after that doesn't realize how much it has changed. when I graduated, like the dream job of everybody was like, I want to get a job in Wall Street. That's where, the smartest minds are. That's where I'm going to learn a ton. That's where I can make a lot of money, right? And that has changed a ton. Banks became much closer to utility companies after that. But it also made me realize how fragile the financial system was at the end of the day.
And Hoffa, you talk about how this might have been the most difficult psychologically bear markets in Bitcoin history, right? The talent drain, the cold card attack, all these major problems. We have hard fork even, or almost maybe we might have one. We'll see with the BIP 110 crowd. But at the same time, we've only had about a 50% drawdown. Historically, it's been much deeper, closer to 80%.
Yep.
So Bitcoin's held up. It's been very resilient. You also talk about your lived experience with inflation. It seems like the Treasury might be in a place where they might be forced to run it hot.
Mm-hmm.
Bitcoin is seemingly kind of holding up very well here in a place of relative strength. What's your outlook for Bitcoin in kind of the dynamic of potential financial dominance here in the U.S.?
Yeah, I think, as I said, I think long-term nothing changes, right? I think Bitcoin is still going to capture all the monetary premium that we were discussing, right? Short-term, who knows what's going to happen? But it is interesting that we only seen, we've seen a smaller drawdown that we've seen historically. But if you think about the last bull market also wasn't as exciting as the previous bull markets, right? So who knows what's ahead of us, right? It's good to see. I think the world still needs to understand a little bit better what Bitcoin really is. But in a world of uncertainty, right? We were talking about Berkshire Hathaway. Charlie Munger actually has a good quote, which is, predictability should always trade at a premium. And Bitcoin is much more predictable than pretty much anything else that we have out there in terms of monetary savings technologies, right? And that's what you want.
Really great stuff from you both, Hoffa Zaghuri and Nico Moran. Thank you so much. Your
you.
speech is coming up in just a few minutes, so stay tuned for the stream to listen to more of his great insights. We're going to hit a break now, and on the other side, we'll hear from British Hodl. Stay tuned. Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, and now joining us on the desk, Ovik Roy, Chief Strategy Officer at Strive, Senior Advisor to the Bitcoin Policy Institute, and Chairman of the Foundation for Research on Equal Opportunity. I think I got it all there, right?
You did, Grace. Great job.
Well, you guys just came off the Nakamoto stage, had a great panel up there, and Ovik, I love right off the start, you were not holding back. You kind of presented the worst case scenario where if we reach extreme inflation in the United States and the government prevents us from using USD to buy Bitcoin, what happens next?
That's exactly the important question. I think we're not asking enough in the Bitcoin community. Like in the Bitcoin community, we tend to say, yeah, we're a bit doomers. We're sort of negative about the broader world, fiat currency, et cetera. And we sort of, joke about it and say, hey, it's going to be so great when the world collapses and our Bitcoin goes to 1 million. And my message to the Bitcoin community is be careful what you wish for, because if and when that fiscal crisis happens, and my argument is that it's going to happen within the next 10 to 15 years, if not sooner in the U.S. context, the U.S. government's not just going to sit around and let it happen. They're going to be pretty aggressive about doing what they can to stop it or stem the tide. And then one of the first things they're going to do, if we look at the playbook of other countries that have had fiscal crises, or even the United States in the 1930s, what did they do in the 1930s? They suspended the convertibility of the US dollar to gold. They seized everyone's personal holdings of gold. So you can imagine them going back to that playbook. A lot of the people at the Fed studied the Depression, Ben Bernanke most famously. So it's very easy to say to Coinbase and Kraken and the other exchanges that Americans use, for example, say, no, you're no longer allowed, or we're going to suspend the convertibility of the US dollar for Bitcoin. They could say to corporations, you're not allowed to hold Bitcoin, or we're going to buy the Bitcoin that you hold and take it from you. These are things that governments do. And so the question I have for the Bitcoin community is, what are we doing to make Bitcoin resilient to that scenario? How can we create a censorship-resistant, decentralized mechanism for exchanging US dollars and other fiat currencies for Bitcoin? And I think there's some early development efforts in that regard, but we're very, very behind on that.
And it's not just the impact on Bitcoiners or the government fighting back as well. It's about what about people that aren't holding hard assets, right? If you're wishing for the collapse of the current system, you're wishing a lot of real pain on a lot of real people. Absolutely. As well. What did they do after those measures, right? They ran it hot to kind of grow out of some of the problems, right? They had inflation higher than the yields people were getting. We went from, I think, debt to GDP was 150% down to almost 20. You hear the current administration talking about how they want to be able to kind of pull off something similar to what Reagan was able to do. Well, he came in after they ran it hot for a long time. And so, it's not just going to be, kind of these positions against Bitcoiners, things like freezing the conversion of gold to dollars. Maybe they'll do something similar with Bitcoin to dollars. But also, what happens to people who are saving cash and living paycheck to paycheck in a world where we have this inflation running hot for a period of time?
Yeah, Sean, I'm really glad you brought that up. In a paper I published in 2024 called "Then They Fight You," at least that "Then They Fight You" is the title in the Bitcoin Policy Institute version, and then the Foundation for Research on Equal Opportunity version has a slightly different title. But I have a chart in there that describes wealth distribution. So if you look at U.S. dollar fiat wealth distribution in the United States, something like the top 10% of households in terms of wealth own about 30% of the wealth, okay? When it comes to Bitcoin, the top 0.3% of wallet addresses own something like 97% of all the Bitcoin. And I bring that up to say that if there is this kind of fiscal collapse, in a democracy like the U.S., if Bitcoin goes to 1 million and the people who were able to hodl in all those years leading up to the crisis do very well, but that's a small minority of the population, everyone else gets a vote too. And so I think that's the kind of that's one of the fragilities, I'd say, the political fragility of Bitcoin. The protocol is very resilient, but politically Bitcoin is more fragile, I think, than people realize.
You mentioned it earlier, but the need to decentralize the on and off ramp for acquiring Bitcoin in order for it to be actually resilient, what does that look like?
Yeah, there's a number of different efforts, as I mentioned, that people are working on. Some use the Lightning protocol to say, okay, can we create some sort of Lightning-based approach where a stable coin and Bitcoin can be exchanged, much like for those who are familiar with Uniswap, use the automated market models to have a kind of people are kind of on both sides of the trade and generating a kind of return, basically facilitating those markets. That's one approach. Some people are using Nostr combined with Lightning. So there are a couple of things like that. I think one thing here, because we're here in Hong Kong, I think one thing that's interesting to me is because the Hong Kong dollar is pegged to the US dollar, in theory, if there's a Hong Kong dollar-based stablecoin that's outside of the US regulatory system, if the US says, hey, we're not going to allow for USD to be exchanged for Bitcoin, but HKD to Bitcoin exchanges are still possible, then maybe that can be an alternative too. So there are a lot of currencies around the world, the HKD is one of them, that are pegged to the US dollar. The Eastern Caribbean dollar is another example. There are many others. And so it may be that a regulated stablecoin of a fiat currency that's pegged to the US dollar becomes another on-ramp and off-ramp.
This is all really fascinating. We got to head to the stage now, but thanks so much, Ovik. This was
Thank
great.
you, Grace.
Yeah,
Nice to see
enjoy
you.
the rest of your time here.
Appreciate it.
We're going to head back to the Nakamoto stage now for an announcement from Astra Enterprise by Adam Nguyen.
So I want to say a big thanks to our last two panels for conducting their conversations in Mandarin. Our next presentations will be back in English. So coming up next, we have a special announcement from the Chief Operating Officer of Astra, a Bitcoin-focused treasury company and digital asset platform. Please welcome Adam Nguyen to the stage.
Good morning, everybody. My name is Adam. I am the Chief Operating Officer for Astra Enterprise. I only have about 6 minutes to get started, so I'll be brief. So, Astra at a glance. We've been around for about 45 years, listed in Bangkok. But in July last year, our Bitcoin consortium did a takeover, and we converted it into a Bitcoin treasury. And we're now growing it into a bigger business that combines several types of finance business lines. The strategy that we're looking into is what the West had been building versus what the East is building. On the West, you'll see apps that are built from one type of business model, like payments specifically, or exchange specifically, think like Coinbase. But in the East, the business model of an ecosystem, a super app exists. Think WeChat, think Grab, think businesses like Alipay, and how it's transformed the region. For us, we see a vision for Astra to be of the latter form. So Astra is a neo-finance super app. This is where the West builds tools, but the East builds ecosystems. And for us, we see 6 areas where we'll grow our business. The first is the Bitcoin treasury. That's been done. But moving forward, we will expand into digital custodianship, asset management, brokerage, exchange, and then banking as well. These 6 pillars will be the crux of our core business. The operating loop for Astra will function as such through a license capacity. Because we are officially licensed in Thailand, we'll be able to scale and have institutional customers be part of our business. That will allow us to grow our revenues in multiple magnitudes. And then that revenue will let us build new products that will continue to magnify our ecosystem. This creates a virtuous cycle for us to continue to grow in the region and make our business the leading super app for digital finance backed by crypto. Now, why Thailand? I think I should touch on this a little bit. There are 2 phenomena in Thailand that makes it uniquely positioned to help us grow in this fashion. The first one is the tourism market. Thailand is or Bangkok specifically, is the most visited city in the world, with recurring international flows of customers coming by, spending a lot, enjoying the luxuries of the country. But secondly, in terms of liquidity, it's the ASEAN leader for liquidity. #1 in the stock market, #1 in crypto, number 1 in gold trading, FX number 2. As you'll see, the data backs up a lot of this narrative to be the headquarters for growing a neo-finance strategy. Liquidity is very high. There are numerous numbers for why it makes sense to do it in Thailand. Just a few of them I'll name right now. We have 13 million Thais that have used crypto, which makes up around 18% of the population. That's huge for the region. And then trading accounts, over 3.13 million. Oh, one other thing, actually, before I jump back. The government has also supported a lot of this. G token was actually sponsored by the Ministry of Finance, and it's helped propel crypto and digital assets in the country as well. It's not common where the government supports this type of initiative. And in terms of liquidity, SET combines ASEAN leading secondary liquidity with unusual activity for the primary market. As the numbers I mentioned earlier, this volume is continuing to increase and the trends have been growing rapidly. We're number 1 in ASEAN for stock market activity, and for a Bitcoin Treasury business to be listed there, it is also advantageous to take part of this in this trend. And then the regime itself is supportive of digital assets. There are 3 supportive tailwinds for this. There's a comprehensive framework that's out. There are pro-investor taxes and tax access. And then lastly, government implementations that have helped us propel ourselves just within the last year. I don't think we would have been able to hit this timeline if this government support infrastructure was not in place. So now I'm going to talk a little bit about what we've done to date, because this is important. Over the last 8 months from our takeover to a licensed custody, we've done several types of things to grow the business. Step 1, back in July, was the capital formation, the takeover, and the revamping of the business model. We formed our Bitcoin Treasury around the September following that. Then, most recently, we've acquired the licensed digital asset custodian business. There are only 2 licenses in the country, and we have one of them. This allows us to hold Bitcoin and other cryptocurrencies, not just for ourselves, but for our customers throughout the country as well. Moving forward, we'll be building an asset management arm, exchange, brokerage, and further banking adjacent businesses to boot. Thailand is first, but the Mekong Delta is the future. Thailand will be our HQ, and moving forward, we'll expand into Vietnam, Cambodia, Laos, and then the rest of APAC. And so, just to wrap it up, we're looking for partners and investors that want to come along with us in this journey and help us build within the region the first neo-finance super app. If this speaks to you and you guys are interested in joining us on this journey, please feel free to reach out to me. Thank you.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, and Ovik Roy, Chief Strategy Officer at Strive, remains with us. In your talk earlier on the main stage, you brought up the fight among U.S. banks and how, they're not too willing to offer a reward for holding stablecoins, whereas, a typical checking account turns into a negative. But how is Strive and SETA offering a solution on that front?
Yeah, I mean, obviously, we are not issuing stablecoins. We are not issuing cash. But the SETA, our preferred equity dividend yielding product, is similar enough to a money market mutual fund. It is not a money market mutual fund. So imagine if you're an American in other countries, the cash that you hold in your brokerage account is often invested in something called a money market mutual fund, which generates a yield of maybe 2%, 3%, something like that. Much like a stablecoin yield. It's like basically they take the interest rate from the treasuries and the other things that they hold on the back end, and they share some of that interest with you. Now, imagine that instead of having that cash in your brokerage account yielding 2%, instead it's yielding 13%. Mm-hmm. That's what we're doing. That's what Strategy is doing with their version of the product Stretch. And what's really interesting about Strive is that that's the only financial product we have. So if you look at Strategy, Strategy first raised money to buy Bitcoin by issuing shares of their common stock, then they started issuing convertible debt, and then they started experimenting with preferreds, and then they got to Stretch. So Stretch was like the 12th thing they tried, and they really hit pay dirt with that. And we at Strive were able to benefit from watching all that experimentation and basically skip to the end of the movie and say, hey, that Stretch thing is really cool, let's do that. And so we are the only Bitcoin treasury company that has no debt. We have zero debt on our balance sheet. We only have SATA. In fact, Michael Saylor has said that if he had to start all over again and build his treasury company from scratch, he would build something that looked exactly like Strive. So that's been pretty cool.
And you found a lot of success, especially coming off of the wins of it perhaps entering a new bull market here. Along with the Bitcoin rally, Strive's common has rallied maybe 100% approximately this month. Now, one of the forces driving that in the Treasury world is traditionally seen as leverage and debt-driven. But as you mentioned, you don't have debt. Instead, you have what's called amplification. Could you please dive into that for the people at home?
Yeah, so a simple way to put it is to just look at the results. So one of the questions that we got when we launched Strive last summer, that was when Bitcoin was at 120,000 US dollars, right? And so a lot of people, if you tried to explain to them what we were trying to do, what strategy is trying to do, they said, okay, I understand how if Bitcoin is going up, you're going to go up more because you're buying Bitcoin, and so the Bitcoin per share in each share that I own is going to increase over time, compared to an ETF where the Bitcoin per share is constant. That's the whole point of an ETF. With a stock like our common stock ASST or strategy MSTR, the Bitcoin per share that you hold goes up. So in theory, if Bitcoin goes up, you're going to make even more money. But the downside in theory is that if Bitcoin goes down, your stock should go down more. So the question we would often get from investors was, I get how this works in a bull market for Bitcoin. How is this going to work in a bear market? And ironically enough, basically when we went public last September, since then there's been a massive bear market until the last couple of weeks. And so we've had the opportunity to demonstrate how this works, which is, yes, there's been a bear market for Bitcoin. Bitcoin went from 120,000 to 55 or 58 or wherever it ended up. But we went from having 0 Bitcoin to now having over 21,000 Bitcoin. And so our balance sheet is much stronger. To your point, we have no debt. We use this preferred equity instrument to raise money from the capital markets to buy more Bitcoin. And basically the way the math works is if Bitcoin appreciates at 5 to 6% a year, and all these statistics are on our website, strive.com, we will be able to fund our dividend expenses in perpetuity. And it's not debt because we're not borrowing money from everybody. We are offering a dividend to our shareholders, which can be adjusted over time based on the demand. So right now, SATA, our preferred equity, trades at about $100.01, depending on the moment in the market. And the way it works is, as people want to buy more and more of it, in theory, the price should go up to 101, 102, 103. And to keep the shares at $100 exactly or close to it, we sell more SATA into the market to balance that demand out. So the more demand there is, the more money we can raise, and that's what we use to purchase Bitcoin. And we are now at a point where probably by next week we'll be the 5th largest corporate holder of Bitcoin in the world.
Amazing accomplishment. Ovik Roy, Chief Strategy Officer at Strive. Great insights. Really appreciate you hanging out with us today.
Thanks, Grace. We're good to be here.
We're going to head back to the Nakamoto stage now to hear from Hafa Zaguri on the hash rate bear market.
Good morning. Barely good morning. So in the early 1500s, as navigators were going around the world, they created this first artifact, which was basically a globe in copper. And in that globe, they had the areas that they had already mapped, part of the Americas, Asia, but there's a vast area that wasn't mapped. And what they would do, they would write in that globe, Hic sunt dragons in Latin, what basically means, here be dragons. And it doesn't necessarily mean that it was something bad, it just meant that it was something uncharted. And I think in Bitcoin, there's some exciting times ahead, definitely uncharted, that we should be thinking about. And we're living, I think, through the first bear market in hash rate that we've ever seen in Bitcoin history. For a long time, and I founded Electron Energy, which became one of the largest mining companies in the world. And for a long time, as we were thinking about models, how to think about hash rates, and how hash rate was going to be growing, we looked at long-term trends, and long-term trends are massive. Year after year, if you look at very long-term trends, network hash rate almost doubled every year. And if you just look in shorter periods of time, 50% was the number that a lot of people had in mind. And for a miner, that's important, because if you're mining, that means that the network hash rate goes up, you're getting more diluted, you have less of a network share, and eventually that's actually less revenue for you. That has changed. It has changed substantially, particularly in the last year. We're living through something that looks very different than what we saw in 2021 with the China ban. So when mining was banned in 2021, you look at network hash rate, and what had happened is that it collapsed very quickly, and it gradually recovered as those machines that were in China were allocated to other parts of the world. What we're seeing now, it's very different. We're seeing network hash rate, we hit close to 1.3 zettahashes late last year, and it's been still gradually coming down. This has been the longest period that we've seen from an all-time high until recovery. Back to Bitcoin mining. We hear this a lot. I think there are two big accusations that we hear about Bitcoin mining. One, that it's bad business, and two, that it's wasted energy. Let me start with the first one, that Bitcoin mining is a bad business. And commodity businesses, they don't come in good and bad, right? They come in where you are in the cost curve. If you're extracting a commodity at very high cost, yes, it is going to be a bad business for you. But if you're at the left side of the cost curve, that could be a very profitable business and potentially extremely healthy. Bitcoin is a very unique commodity when you think about commodities, right? First of all, just like oil, it is fungible, but I think it's the purest form of commodity that we've ever seen. Satoshi embedded in code the difficulty adjustment, which basically means that no matter how much more hash rate you have out there, on average, a block is still going to be mined every 10 minutes. And that's very different, because when you compare, for example, with oil or gold, typically higher prices lead to more development, to more mining in different places, which eventually leads to more supply hitting the market and prices eventually coming down. In Bitcoin mining, it doesn't matter. We can turn all of our hashing machines that we currently have, the market wouldn't fill it. In 2 weeks, we're going to have a new difficulty adjustment. And I think when we think about why many people failed in mining in the past, it's much more about their capital structure and their cost structure than it is about hash price, about Bitcoin price, and about where we are in the network. Just look at an example. If you pick two miners, and if you look at their different unit economics, imagine they just bought a fleet of ASICs. One has very low cost of energy, very efficient machines. The other one has higher cost of energy and less efficient machines. What it means in terms of, that's the difference between having very high margins and having to shut down your production. And the market, of course, improved from where it was, but hash price is still, compared to historical levels, relatively low. Big question we get all the time, and by the way, on 21 Capital, the first thing we think about as we're thinking about opportunities is, how does that opportunity perform compared to Bitcoin? Bitcoin is our standard. Bitcoin is our benchmark. And if you can't beat Bitcoin, investors should just be buying an ETF at the end of the day, because that's less risky than holding an operating business. And in mining, we get that question all the time about, if I have $1, should I be looking to investing in mining, or should I be buying Bitcoin? And the answer is, if you only have $1, buy Bitcoin first. I think that's the best way to express your view. But in a diversification, if you're looking at investing in larger scale, mining can make a ton of sense. Fundamentally, when you think about Bitcoin mining, right, at the end of the day, and I'm going to simplify here a ton, Bitcoin mining is going to outperform Bitcoin in a scenario where Bitcoin price goes up faster than network hash rate. So if Bitcoin price is going up by 50, 100% a year, and network hash rate is flat, you have a much higher chance of outperforming. I think for a company, as I was saying, the right decision was never about buying Bitcoin or mining. The better risk-adjusted allocation is to have a little bit of both. I'll come back to that, but let me address the second point, because that's an important one, that Bitcoin mining wastes energy. We hear that all the time. It's repeated as rhetoric a lot, that it's bad business for the environment, that it's a waste of energy. So let me tell you a story. Back in 2002, a while back, I was at Yale, had my summer job at Yale, and instead of going to Wall Street, I decided to do something completely different at the time. I went back to Brazil, to where I'm from, and I went to a project in the middle of the Amazon. So this is a place where, to get there, you fly to Manaus, which is already remote, then you hop into a very small plane, you land in a dirt airfield, then you hop into a boat, you go up a stream, maybe for 5-6 hours, and then you get to somewhere you are. One of the most beautiful places you can think about, very rich in terms of having, there's no starvation. You can just literally just pick fruit off the trees, you can fish, a lot of wealth in that perspective. But they lacked one thing. There was no energy in that city. That city was called Manicoré. It's in the middle of the Amazon. You can look it up. There's green, a horizon of green all around you. And with no energy, we would see people dying from diseases that, have been eradicated in other places for decades. And that was still happening there because there was no access to medicine. Medicine would go bad. There was no refrigeration. We saw kids studying, and the school is all open because there's no, of course, air conditioning. At night, night falls, and the forest reclaims everything. Energy is the substrate of everything that we call development. Lack of energy is equal lack of development. So I think that's the first thing we should have in mind, that energy consumption by definition is not bad. It's actually directly related to human progress. In fact, if we look at the data, right, so this is the data that is showing a very high correlation between GDP per capita and energy consumption. And a lot of people will look at this chart and they will tell me, well, this doesn't tell you exactly what's cause and consequence, right? Is the correlation inverted here? And when I get that question, I go back to the story in the Amazon. I say, listen, I've seen the other side of this, which is being at the bottom side of that curve where you have less energy consumption and poverty. The other thing about mining is that it's extremely flexible. It's the most flexible load ever invented, right? If you have a steel mill, which steel basically is energy. What you're doing is that you're putting a lot of energy to get your output at the other side, and you shut down a steel mill, depending on where you are, it can take months to get back online. So when they lose energy, it's a problem. It's a massive problem. Mining, we don't care. Machines can be turned on and off at the whim at the end of the day. We're starting to have, I think, very good conversations, particularly with governments and energy companies, exactly about that, which is there is load that is just sitting there. It's not going anywhere. Most of the cities actually have excess load, right? And mining can come in and stabilize the grid massively from where it was. So when we talk about, wasted energy, I don't think that, fish are wasting energy when they're swimming upstream, right? We saw that in the Amazon as well. They're swimming upstream to create a new generation. I don't think that where we are is similar to what we saw in 2021. It's very different. I think mining also opens a set of optionality that we didn't have in the past. And we see that, the obvious one is on AI and HPC opportunities and the use of energy. all this optionality that you have with Bitcoin mining, it's rarely put into the pricing of it. And that optionality comes from the energy option, which I just mentioned, the share option. You know, the beautiful thing about Bitcoin mining being in a bear market of hash rate is that for those that stay around, for those that stick the course, they naturally get a higher share of the market. The proximity option of being close to Bitcoin, right? At the end of the day, you know, we look at our team at Electron, we're all Bitcoiners. We all came to doing mining because we were originally Bitcoiner. Mining gets you very close to the protocol level, to understanding the protocol level. And then the last one is infrastructure. Mining is, I can tell you, like, there were a lot of investors that I had conversations with, that when you talk about mining, investing in mining, it's something that for them, coming from the real asset world, it's much simpler and much clearer to grok than investing in Bitcoin, because for them, that's a real, they can see it, right? It's like you see the mining, you see the data centers. That's another advantage. I think we are at a stretch that, you know, we're extremely well positioned for Bitcoin mining for the first time at scale, exactly because of what I mentioned. I think on one side, you have the Bitcoin price at a very compressed level, and at the other, you have the dynamics in network hash rate being very well positioned. I can't, you know, I didn't need to tell you this, but if you look at the public mining companies out there, there really isn't anybody staying the course to mine Bitcoin at scale. Pretty much everybody is leaving the industry right now. So I'll finish here. As I said, I think, you know, Bitcoin mining is at the crossroad, is at the best place where energy, the energy revolution meets the Bitcoin revolution, and exciting times ahead to continue to be building. Thank you.
right. Hello, everybody. Great to see this audience. Brian, thanks for being here. Really excited about this. Why don't you introduce yourself first?
Yeah, thanks, Russ. I'm Brian Roberts. I head up equity product development at the Hong Kong Exchange. So my team will oversee our equity derivatives, structured products, and ETF platform. But I think real quick, beyond just my experience at HKCEC and kind of developing ETFs here in Hong Kong, I also spent about 12 years at Vanguard heading up their ETF businesses in different parts of the world. So I'm kind of here more kind of talking from like a global kind of ETF kind of industry veteran rather than just from an exchange perspective.
Yeah, I think that's important. You were a buy-side guy, literally looking after Vanguard's ETF business, and then now you've come on to the exchange side, and you're effectively the guy that approves the products before they go to market, right? So my first question, after kind of 2 decades plus in this space, when you saw what happened in the US with IBIT and the launch of these Bitcoin ETFs, which we all know broke a number of records and has made sort of I would say a big wave of change in the ETF space. I mean, what's your take on what that has done to the industry as a whole? And we're talking more globally, I think, first before we dial it back to Hong Kong.
Yeah, I think when I think about Bitcoin and just cryptocurrencies kind of making their way into the ETF industry, First I think of it as it was a significant milestone for ETFs. And I've had a lot of experience developing, products in the ETFs, but it's all from the traditional financial infrastructure, equities, fixed income, commodities, exotic thematics, and things like that. But I think with ETFs bringing in cryptocurrencies, it really was the bridge across the traditional finance and also the decentralized finance infrastructures. And I think that was important for, ETFs as an industry, because it just kind of proved once again ETFs as what I kind of consider a financial technology, really just kind of brought a very complex asset into the mainstream world. And I think this was really just fundamentally important for ETFs to be that kind of mechanism versus any other mechanisms out there to bring this asset into the mainstream world. I think it's also important for cryptocurrencies because, for a long time, I think Bitcoin and Ether and others have always kind of worked in a very, call it alternate kind of world, especially from where I'm kind of sitting. I've always been in the traditional financial side of it all. And so it's always been something that I think it's been out of reach for most investors, whether it's institutions or retail. And what the ETF did was it took something that was relatively complex to access, and it brought it into the ETF structure. It simplified access, it made it efficient. And to me, it was really this big distribution breakthrough, I think, for cryptocurrency to get access into institutional capital, retail capital, and things along those lines. And now you can access cryptocurrencies through a traditional financial mechanism, and now it's available through wealth management channels. I can go online and trade it through my retail broker. I don't have to have a wallet and trade on other exchanges.
Yeah.
So.
I think Michael Saylor famously called it the IPO moment for Bitcoin, because it just really opened a lot of new channels.
Yep.
So let's dial into Hong Kong. Take us back to product discussions, closed door discussions on your side. Was the push for a Bitcoin ETF in Hong Kong retail driven, or was it really coming more from the ETF providers or the issuers deciding that they found product market fit here in Asia, and obviously we're watching the movements in the US?
Yeah, so this has been a discussion with years in the making in kind of various shapes or form. ETF issuers have obviously wanted to do this for a very long time. I think they wanted to break down those distribution barriers. They obviously want to grow AUM to generate revenue. More and more retail and more institutional investors wanted access to this asset as well. And they just, for them, it was a challenge to kind of get through all the different kind of compliances and have a whole completely different setup for accessing the cryptocurrency asset. But even with all of those kind of demand forces kind of pushing it, it was actually, for a Hong Kong perspective, it was more of a top-down governmental kind of regulation that really kind of broke through. And this goes back to the Hong Kong government's digital asset strategy that they put forward, several years ago. That really kind of formed the catalyst for the ETF ecosystem, the regulator, the SFC, the exchanges, for us to actually do this. And I think once it was accepted from a governmental standpoint that this is an industry and an ecosystem that Hong Kong wanted to develop, it really just started breaking down a lot of the barriers for us to bring this out into the traditional finance world. And I think at that point, this was happening when there was a lot of pressures in the US to bring out, the spot-based crypto ETFs as well, because the future-based ETFs had existed for several years. And there was kind of a little bit of maybe this is more just in my head, a little bit of a race around who could be first into the market. You know, and ultimately the U.S. got out there first. I mean, they have massive ETFs there, but I think this has been a big breakthrough for Hong Kong, and I think this is an important kind of component as Hong Kong really develops this whole kind of digital asset kind of ecosystem and industry here in Hong Kong.
Yeah. So you made the decision to launch with in-kind from day one. I think Hong Kong may have been the first to do that globally?
Yeah, we were the first.
You're the first? So, I mean, I think the U.S. is starting to catch up to that. We're seeing some of the regs change and the bar to be able to actually do in-kind move from higher levels to lower level notionals. But what was behind the in-kind decision? Because it was quite pioneering. Was it also driven by investors, or was it something that the exchange wanted to do?
Yeah. It's really something the ETF issuers wanted to do. And it was for us to have, I think, when we were looking at this as an ecosystem and as kind of part of the government, we wanted to be a leader, you know, globally, but, you know, if it wasn't a global leadership position, a regional leadership position, and really being this hub for digital assets in Asia Pacific. And when we were bringing out the in-kind mechanism, I would actually probably say when we kind of go back to this, you know, probably more in my head, this race between us and the US around who could really bring these products out first, this was actually a component that actually slowed it down. If we would have actually been able, if we just focused on doing the cash creation redemption process, we would have actually been out there a lot earlier. And so for us, doing the in-kind creation redemption process was important for a few reasons. Number one, it's a uniqueness factor. There was demand from more institutional and retail clients to have that. And I think with this, we wanted to take a little bit longer to really get the right market structure in place. So it's like, put aside the headline of being first to market and what that'll buy you for that one day, but it was like, let's put in the right market structure that we have so that we can have lasting, successful products coming into the market. And I think, you know, the US followed suit. You know, I don't know if they were envious of us and things along those lines, but I think it's an important feature to have in a proper functioning ETF structure, the ability to in-kind create and redeem with the physical asset itself.
All right, let's talk about the U.S. products a little bit. They've obviously gathered tens of billions, while Hong Kong has remained a bit smaller. Is that a scale issue or something more structural, do you think? And I mean, who is actually buying here?
So the ETF, or the US market, is obviously dominating. I think globally there's over $100 billion allocated into cryptocurrency ETFs, and the US is the deepest and most liquid capital market in the world. So, you know, for us, it's not surprising that they are leading in terms of AUM. Now, when I come back to Hong Kong, you know, while I think we've been quick to market in terms of bringing the products out, and I think the regulations to bring product out has been in a leading position, I do think where we are lagging right now is actually regulation advancement in the distribution of cryptocurrency ETFs here in Hong Kong. They're still regulated in a very complex manner. There's a lot of additional due diligence that investors have to pass in order to trade these ETFs if they're doing so here in Hong Kong. And so I think the distribution regulations have, to a degree, lagged what you see in other markets, and I think that creates a barrier for growth for us. So I think that's the first thing. The other thing that I'll say that I'm actually really interested in the Hong Kong perspective is, you know, not so much on the cryptocurrency ETFs themselves, but it's the tokenization process that's actually happening now. So I talk about in the beginning how cryptocurrency getting into ETFs was a distribution breakthrough for cryptocurrency. I actually think the reverse is happening now within tokenization, because we now have 11 ETFs tokenized here in Hong Kong, and that is actually giving ETFs on traditional assets, equity, money markets, fixed income, a whole new distribution channel that is happening for ETFs. So for me, I think with all of this kind of digital asset, it's not just about the spot crypto ETFs, it's also about how traditional financial infrastructure, decentralized financial infrastructure is actually converging right now. And again, I think we're leveraging it in a different way to actually have distribution mechanisms or breakthroughs for just ETFs and traditional assets.
For those of you here that are not familiar, there's a program between China and Hong Kong called the Stock Connect program that allows Hong Kong investors, or actually global investors, to access the local China market, the A-share market, and then the reverse is also the case where mainland Chinese, which is primarily retail investors, can buy Hong Kong stocks. Not every stock's included in that program, so there are certain qualification requirements, but it has been probably, I guess, one of the most impactful things that the exchanges have ever done in creating that mechanism. I think it was 2014 launched, and that really was able to free up a lot of mainland Chinese capital to invest offshore without needing QFII or QDII quota. That Connect program is very difficult to qualify for, and we know at this stage ETFs, I think there are 30 to 40 ETFs that have been approved for that program to give access to mainland China. Do you think that products like this, the Bitcoin ETF, will ever reach mainland investors through the Connect program? What would have to be true for that to happen?
Okay. Yeah, so the Stock Connect program that Russ mentioned has probably been one of the most successful exchange-to-exchange collaborations globally. Coming south from mainland investors coming into the Hong Kong market, they account for 25% of our average daily turnover. And then for international investors going into the A-share market, we trade about 350 billion renminbi a day. That's probably about 6 to 7% of the combined turnover in Shenzhen and Shanghai. So this has been a material two-way kind of facilitation and opening of China capital. Now, from the ETF side, the ETFs for southbound, it accounts for about 15% of our ETF volume. Hong Kong is actually the fourth most traded and actively traded ETF market globally, so we trade about $6-7 billion US a day. Now, in terms of getting more and more of these products included, right now it's really focused on equities. In order to get more of these kind of products like cryptocurrency ETFs, Stock Connect has always been built on mutual recognition, right? So we have stocks, they have stocks that we want to get access to. We have ETFs, they have similar kind of ETFs. I think in order for this to happen, it will have to be mutually recognized. They would need to have ETFs tracking cryptocurrency similar to what we are, so that it is equivalent in nature. So I think that's going to be probably have to be the big breakthrough for this to happen at this point.
So a little ways off.
I would probably say so.
Brian, thank you both for being here and for being consistently one of the key drivers of innovation at the exchange. Always been a pleasure working with you, and you're an important figure there.
All right. Thanks, Russ, and it's been a pleasure working with you as well, and thank you for having me.
Thank you, everybody.
Everyone has an opinion. We want evidence.
No hype, no echo chamber.
Just better questions.
and better answers from the biggest names in Bitcoin.
This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
Every year, this community comes together to celebrate, to debate, to build what comes next. And every year, the stage gets bigger. Sound money, center stage. So, where do you go to celebrate the next chapter in Bitcoin history? You come home. Nashville, July 2027.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, Juri Watanabe, community engagement at Metaplanet, and the one, the only Bao Bao, official mascot of Bitcoin Asia 2026. I know we've had a cast of characters all day long, but I actually think this might be the most all-star crew on the desk yet. Bao Bao, can you tell us how's the day been going for you so far?
I think that means great. I think that's a good sign.
Well, we learned Bao Bao has like a much broader wingspan than he looks because he almost just knocked Juri off her stool here, but I'm glad you're still with us.
I am too.
Now,
But he's fiery.
Does
Of course.
does Metaplanet have a mascot of sorts?
We actually have Satoshi Sensei, and as you can tell by the name, he's Satoshi teacher.
We got to bring him here next time.
I know.
Yeah. Let's just get the whole mascot army.
Yeah.
I think that needs to be a thing.
It'll be really, really fun that way.
Okay, but Juri, we were talking with you earlier this morning about Metaplanet's role just in kind of the investing world. And a lot of our American audience doesn't know, but there is a huge cultural difference in investing in American companies versus Japan here, or Japan where you're based. And that's what you do in your role, is kind of building. It really is a community of shareholders in Metaplanet. So what does that look like for you?
Yeah, I mean, I've had actually some shareholders come up to me at our annual shareholders meeting saying, because I invested in Metaplanet, I have a whole new group of friends that I've never had. And, they connect online, they connect offline as well. And it didn't just open up the finance world for them, but it's really opened up their social world. And I think that's really beautiful. I think people in Bitcoin stick together, they cry together, they laugh together, they go on together. And I think that's what we're building at Metaplanet as well.
Now, this has been probably the first major bear market that Metaplanet's seen. I remember the first one MicroStrategy went to, a lot of people kind of packed it up, thought it was over. And then they got to go back and everyone got to witness the recovery firsthand.
Yeah.
And then, it wasn't as painful and as dramatic the second time around. How has the community held up throughout this bear market? Do you still see a lot of positivity? Are people kind of weathering the storm?
I think the more people learn about Bitcoin, they have been able to weather the storm. Some people are brand new to Bitcoin, and their first exposure to Bitcoin is through Metaplanet. And it's a shock, right, when you first experience that bear market. But I think the more they learn about it, the more we put out the information, they're kind of to realize it's a long-term strategy. It's not a short-term thing. So we're sticking together again, crying together, laughing together, and succeeding together.
I'm so curious because you mentioned the community, or at least an online community or like social network that you've built with Metaplanet. What do those demos look like? Are these people who have held Bitcoin in the past? Are they net new buyers? And then age-wise, I'm curious on that too.
Yeah. At our shareholders meeting, one of the greatest sights I see is like a young 12-year-old kid with their parents. And, the 12-year-old kid actually has Metaplanet shares under his name. So the youngest, I think we have like the 12-year-old, and then the oldest we would see like around the 60s, 70s, but we have a whole range. For some people, they invest in Metaplanet because they love Bitcoin. But for some people, they started to know about Bitcoin because of Metaplanet. So we have the whole wide range here.
I was able to go to the shareholder meeting last year, and as a Western investor coming to Tokyo, the culture was so different for how shareholders are treated. It's unbelievable. It's like, imagine your favorite airline's reward program, but 10 times as magnificent.
That's a good comparison.
Yes, yeah, you're treated like a king as a shareholder, and there's a lot of pride, I think, in respect for a company's shareholders, and you get gift baskets and you're treated well. And I think that's something that kind of happens regularly throughout the year. So how are you thinking about that as the community lead? What are you doing for your shareholders to make their experience special?
Again, I think it's showing up for, it sounds a little cheesy when I say this, but it's showing up for them even when the market is a little sad. It's showing up for them when the market's happy. We're always sticking together and saying we're here to, I like to say, harness the future with you. And we're here to help you. We're here to secure the future. So I think not just that, I mean, we have the shareholders benefit program as well, which I didn't really know that it was not a thing outside of Japan.
I'm jealous now.
We have a whole, health, wealth, and joy is our, not motto, but like pillars for our shareholders program. So, we like to take care of someone's joy, health, and wealth as well.
How do you find that creating that emotional connection with the shareholders kind of impacts their behavior as buyers?
Oh my gosh, that's a good question. I think it just makes the whole journey fun, right? It makes it a little bit more personal versus just like, you're investing a little bit of your money into our stocks, right? So I think it helps actually to weather the storm, so to speak, like you said, versus just making it like a cold connection. Like,
it also feels like you're making it more accessible to invest too, because sometimes it can be a little intimidating.
yeah, I think Bitcoin is a very intimidating topic still in Japan. I mean, at one point, we were the earliest adopters of Bitcoin, and then we had that Mt. Gox issue, and then it became a very controversial topic, right? So by us creating that community feel and making information and online, offline communities more accessible, yeah, like you said, I think it makes the idea of Bitcoin more approachable.
Amazing. Thank you so much for joining us. I love hearing about this. I think I gotta make it out to one of those meetings now. You've inspired me. Yeah.
Everyone should.
Yeah.
We're gonna have Bitcoin in Japan in 2028, so
We might be there. Let's
You
make it happen.
definitely will be.
Yeah. Bao Bao, any final words from you?
I think that translates roughly to "we like the hotel."
We love it. Okay. We're going to go back to the Nakamoto stage now. Jury, thanks so much for your time. Up next is The Collector's Mind, Art, Scarcity, and Bitcoin. We'll see you soon.
What's up, David? What's up, AJ? Do we feel out of place here, or?
I don't know. It kind of feels like home, man.
Nice.
Feels like home. Yeah.
Nice. So, you want to go first, or I'll go first, or?
Please, you
Okay,
go,
yeah.
you go.
So, hi, everybody. Good afternoon. So, me and AJ, we are basically from the collectible market, and me, myself, personally, from the art market. Being doing art for the last 24 years. I actually did my 20th anniversary collection show 3 years ago, so.
Amazing.
Yeah, so it's been a long time, man. But so been collecting art for many years and created one of the largest art fair in China, and it's it's our 15th edition this year. But I've also been collecting. Well, I started when I was, I don't know, like 6, 7, collecting sports cards back in the 90s. So. Recently, everyone knows like trading cards has been going crazy. So for the last 3 years, I created this new fair fest, whatever you call it, Mojo Fest in Shanghai. So that's what I've been doing.
Killer.
Yeah.
Yeah, I mean, we're connecting backstage. I feel like all collectors, there's just a immediate bond, a nostalgia, and a nerdgasm that happens there. But yeah, I mean, I'm AJ. I'm the founder and CEO of Treasure Trove and Solari Capital. At Solari, we invest and incubate technology companies, sort of a multi-stage VC growth equity firm. And along the way, in addition to a long-standing affinity to Bitcoin, I've also been a collector. And that same heuristic around scarcity and monetary debasement applies here. And I think that's exactly why we were invited to talk about this topic, and exactly why I can see down here, we've got tons of trading cards. We have people buying and selling collectibles. I mean, how did you take me back to your origin story when you were 6 or 7? What piqued your interest as an early collector?
Well, I think I always say, if you have that collecting bug, it's a disease, right? Once you hit that disease, it's never curable. So I wish there's more people who can get that disease, you know, the collecting disease. But yeah, no, I started off, I remember watching, you know, Michael Jordan and Kobe Bryant when he just came to the NBA, and I stumbled upon, you know, some packs of cards, started opening it. Never thought that it's gonna have the kind of market that we have today. You know, let me give you some perspective. You know, the most expensive card I bought back in 1998 was a Michael Jordan PMG green. So everyone knows that's a real treasure in the collectible market. I paid 8,000 US back in 1998.
Which I'm sure felt like a lot at the time.
It's so expensive back then. I was 13, 14. 8,000 was a lot of money, right? But now that car, it has been sold in years. You know, the last copy, when I sold mine, I sold it for 350,000 US to our friend Ned Turner.
That's right.
Who happens to be the owner of PSA Collector Group. But they would estimate that car to be right now at least 10 million US.
I believe it. I mean, we actually did an analysis at Treasure Trove recently trying to understand what is the collectible value of just Michael Jordan.
Yeah.
If you added up all of his 1986 Fleers, the PSA 8, 9s, and 10s, if you went down through all of his trading cards, his jerseys, his sneakers, etc., and you get to a number around $2.5 billion, right? So to put that in perspective, the value of the Chicago Bulls franchise last transacted at $6 billion. So you got one guy, one player over 40 years has created billions of dollars of real value for collectors. And you see that again and again and again across different athletes, whether it's Tom Brady or Steph Curry, or increasingly in soccer, Ronaldo, Messi. I know you've been collecting hockey cards recently as well, is that right?
Yeah, so Gretzky, Sidney Crosby, those kind of guys.
Definitely, definitely.
So let me ask you a question, AJ. You know, in the collecting world, you became really famous this year. You know, Michael Jordan was my thing, but you're a bit younger than me, not much, right? But I know Pokemon is your Michael Jordan.
Yeah.
So you want to tell your story about how you acquired the most expensive Pokemon card in the world?
Sure. Yeah, I mean, similar to you, as a kid, I had a fascination with Pokemon. I'm right at that age where I grew up with it in the US. I was 8 or 9 or so when those first video games, Pokemon Red and Blue, hit the shelves. And you know, at the time, people were collecting the cards, but they're also playing the game. And you know, very quickly, really over a 30-year period, we've seen that market in trading cards balloon to now a $30 billion asset class.
Yeah.
Like if you go on Card Ladder and you go to PSA, Beckett, and CGC, and you add up Pokemon cards, it's like a mid-cap company, right?
Oh, yeah.
And I think, you know, for me, it was, I mean, people thought it was contrarian. I thought it was an obvious bet. I mean, if somebody bought $16 million of equity in a $30 billion company, no one would blink an eye. And yet you could buy the #1 collectible and the highest grossing franchise of all time for $16 million. I didn't really expect it to go that viral, and I've been pretty quiet as a collector really up until that moment, but I think just Logan Paul's involvement, Ken Golden's involvement, the true spectacle of it almost feels like these auctions are turning into sporting events in some ways, right? And I got to tell you, time and time again, I mean, a lot of the stuff we'll buy at Treasure Trove is in private transactions, but as we were talking backstage, when we do buy things at auction, almost always we're bidding against somebody from Hong Kong or mainland China. And, you know, I'd say here, Middle East, North Africa, and the West, notably the United States, those are the 3 pillars of the collectible economy. And it's increasing and increasing year over year.
Exactly. So I see a lot of like crypto guys collecting, getting into the physical collectible market too, right? I'm sure a lot more in TCG, the Pokemon side, more than sports cards.
Yep.
Right. So what do you see the future? Because right now the reason why sports cards are going up like crazy was because people from my generation, they grew up, and some of them are doing pretty well.
Yeah.
So that's why they're spending a lot of money buying cards. And we see all these like baseball and basketball team owner who are starting to collect. That's why the sports card collectible became expensive.
Definitely.
But what about well, obviously the Pokemon guys are growing up like you.
Yeah.
What do you see the future?
Yeah, I mean, I'd say the trading card market is actually still a pretty small category in collecting. It's about an $80 billion market cap category. There's about $1 billion a month of transaction volume. So it's a pretty high turnover, pretty liquid asset class. But for fine art, as an example, just in private hands, like forget museums, nation states, and foundations, just private individuals own in excess of $3 trillion of art, right? So there's a lot of room to grow in trading cards. It's a high torque category. It's also a phenomenal form factor as a store of value because it's so small. You can store millions, if not tens of millions of dollars of value in the palm of your hands and easily transport it. And I'd say the sign of a really healthy collectible market is when you see not only intellectual property franchises like, say, One Piece, Magic the Gathering, and Pokemon, or different sports leagues like NFL and MLB, et cetera, involved, but where you also see grading and authentication, right? In the same way there's Moody's in the United States that's issuing a rating, whether it's AAA, BBB, to your stock or bond, we now have that infrastructure in trading cards. And something we were talking about too is lending, right? So in the same way Ken Griffin can buy a $200 million Basquiat painting and take out a 50 to 60% LTV loan at 6-7%, you can now do that in the trading card market. So, all these different categories, particularly at the top, the best of the best, the true grails, the one of ones, exhibit the same characteristics that we see in Bitcoin as a monetary debasement trade. And a lot of smart money is now moving into this space heavily for the first time on the international stage. And I know you just hosted a trading card expo, right? You had 30 to 40,000 people show up. I mean, tell us more about that event.
Yeah, that's well, basically, we, like I always do, like 20 years ago with art, I feel like right now in the China market, we are lacking a proper infrastructure of this whole collecting thing, right? So I started this fest with my very good friend, Edison Chen, who was a rapper, pop star in Hong Kong back in the days, but now he's mostly known for his fashion brand Clot, and also obviously on Instagram, every day he only posts sports cards and trading cards. He taps into, right now his focus is mainly on entertainment cards. So he spent a lot of money acquiring basically the best entertainment collection, which I think is smart, because that's, I still think, very underrated market. He's buying Disney, Marvel, but he's spending like over $1 million on some cards.
Sure.
For that.
You're saying, Stu, something about how music culture is coming into the market too, right? I think K-pop stars like Jennie and Lisa are now entering the trading card market. Say more about that.
Yeah, I mean, like similar to what Edison's collecting with the entertainment card, right?
Yeah.
I think, we are going to see this revolution where you're going to see the more famous people, not just celebrities, because right now the boundary between internet phenomena, influencers, celebrities are very vague. But we're going to see tops eventually maybe producing cards for Mr. Beast.
Sure.
Right, Speed.
Sure.
Those guys where their first card or their rookie cards will become so important and so expensive.
Yeah. It's so interesting, right? Because whether it's the card market or the art market, any of these collectible asset classes, it's like a derivative format to trade in some ways on the likeness and the popularity of characters and individuals, right? Because you can't, it'd be sort of weird to, try and buy, Lisa or Jennie's stock. That doesn't exist, right?
But like in trading card, we already see this vastly transparent improvement from traditional collectibles, like art. I would say if we don't change, we as the art world doesn't change, the whole gallery model, the whole Christie's, Sotheby's traditional auction models, if we don't become more transparent, the whole art market will be fucked.
Say more about that. I mean, how do we become more transparent as an industry? I mean, collectibles is something that's difficult about it relative to Bitcoin. Bitcoin, you have decentralization, you have transparency, you've got the ledger, et cetera. Here in the collectible market, you have a really high degree of opacity, and there's a lot of uncertainty around authenticity and tracking and tracing. I mean, say more there.
Well, like you mentioned a very good point where, one reason that pushed trading cards into what it is now was because of this movement of grading.
Yeah.
Right? And because of grading, we have very transparent data. With data, we have, statistics where we can track how much each cards have been sold or how many population there are.
Yep.
But with the art, that's not possible. Because the traditional model was where the galleries and the auction houses doesn't want you to know how many copies there are of this artist, where it is, and how rare it is. That's very important because they created the essence that art is very rare. But come on, Picasso has over 100,000 various paintings, drawings, or whatever. You don't call that rare.
Definitely.
But there are some very major pieces that's very iconic and rare.
Yeah.
Right, so in art, I always thought like there needs to be more open data, more, I know it's impossible to grade a piece of painting or an installation.
Sure.
But maybe we can find some ways with the technology, AI, back in a couple years ago with the whole NFT movement, I thought that could change the traditional art in some format.
Sure. Yeah, I'd say too, like, not just art, but even more esoteric topics like movie props or dinosaur fossils or insert any collectible category.
Traditional collectibles.
The traditional collectibles, yeah. There's a lot of opacity, and you're relying in part on auctioneers.
Yeah.
You're entrusting them as fiduciaries as they buy and sell. But I think the democratization of that data and seeing really a Bloomberg terminal-esque moment for collectibles is what's happening for sure in trading cards.
Oh, for sure. Like we were talking backstage, you were mentioning, the first time I actually knew you were buying more than just popular, like pop culture stuff, like trading cards, pop culture. You mentioned you buy manuscripts, books.
Yep.
So, in my view, if a Michael Jordan card today can be sold for 20, 30 million US, but a Shakespeare first folio is only 8 million.
Totally.
That doesn't make sense.
Totally. No, I think you're right. And I think there's insane arbitrage opportunities in collecting for that exact reason. Things are completely mismatched. There's very limited price discovery. That Michael Jordan card that you sold to our friend Nat, hasn't transacted in years, right? So there's a cloud of uncertainty. I mean, we're living in a zone now where even modern day players like a Shohei Ohtani can sign a dual logo man card, and within 48 hours, you have an $11 million transaction, right?
Yeah.
So
I just saw Shine posted he got it.
Yeah.
But that's crazy. I
mean, what are some areas broadly that you're really bullish on in collecting, but also bearish? Where are areas you would also avoid?
Well, typically I don't really get into ultra hyped market.
Sure.
Doesn't matter what field it is. Like in cards, with the super ultra new rookie stuff, like football cards.
Sure.
I do buy some vintage football, but nothing new of every year's rookies, not that kind of stuff. So similar to art, I don't touch, all the super hyper modern artists.
Definitely.
Yeah. What about you?
Yeah, well, I mean, there's so many unique emerging categories. Like as an example, we made a play or a few plays recently in the video game category. So we bought the origin of Super Mario Brothers. This is a 1985 NES game, factory sealed, PSA graded and authenticated with us. It's the highest graded known copy. There's only 3 of these things that have been found over the last 41 years, and video games does, as a category, more revenue than cinema, right? And people are starting to recognize that collectible category as art. I'd say manga and Zashi is a huge area too. I mean, whether it's Naruto or One Piece or Dragon Ball Z, the origin of those franchises in the 80s and 90s have been a really great place to deploy capital. I agree with you, though, in that in the sports card market, we're seeing a lot of heat right now, a lot of heat. Just on the backs of Fanatics Fest, we had 180,000 people show up, total pandemonium. I think Topps and Fanatics have done a really good job. Props to them for stirring the pot and increasing the appetite for sports card collectibles. But I just see a huge dislocation in the cards relative to, say, game-worn jerseys. Right?
Yep.
So we've been buying, like as an example, we just bought Joe Montana's final game-worn Super Bowl jersey. And that jersey he wore in his last game in the 1989 season, dropped the mic, went 4-0, won Super Bowl MVP, threw for 300 yards, 5 touchdown passes.
It's history.
It's history. But you can get that for $1.5 million, right? And you're telling me, I mean, there's some modern cards that are selling for 5, 10, or even
$11 million? Yeah.
$11 million, right?
I mean, that just reminds me of, I was checking my post this morning. I should have bought that. You know, I thought that item was really going to go over 10 million. The Maradona.
Oh, the ball.
The God of Hand.
Yeah, yeah.
I mean, the Hand of God.
Yeah.
Ball was sold for what, like
3.5
3.3 million?
Yeah.
That's too cheap.
Yeah, definitely. Well, here's the thing, right? I mean, for Bitcoin, you have true real-time price discovery. I mean, I like to think of Bitcoin in some ways as a perpetual auction with hundreds of millions of individual participants, tens of billions of dollars a day of daily trading volume. For collectibles, there isn't really true price discovery because it only takes 2 to tango. You and I can show up at an auction, you bid, I bid, back and forth, and we've got a price. And that price in some ways can be a bit of an illusion because a lot of people are not aware that these auctions are happening or these private sales are happening. And again, that creates huge opportunity for arbitrage plays.
Well, but I'm seeing more and more, like a lot of my friends and some definitely vendors here who are actually starting kind of like a market exchange place, but using USDD to trade, let's say, the most volatile cards, the top 100 cards, for example, like that, in Pokemon especially.
Sure.
Right? But I know that's more for the kind of, you can't not say that's mass cards, but more for the population that has at least 10,000, 20,000, 40,000 kind of population cards.
Well, I'd say too, maybe to riff off this is, I know probably a lot of people in the audience have some real justified PTSD from the 2021 zero interest rate phenomenon where NFTs were just flinging themselves onto the scenes. Dogecoin was at 40 billion. People are buying Bored Apes for hundreds of thousands of dollars. I mean, how do you think about this moment in the collectible economy relative to, say, that moment 5 years ago? Do you think this time is different? Are you concerned about this category overheating, or do you actually think this is the beginning of a maybe multi-decade run in the category?
I think long-term wise, I'm bullish for sure. But short-term wise, I do think there are misses and opportunities. Even with the Grails, even with the Michael Jordan, I think the speculation market have moved from nobody to the Grails.
Yeah.
There could be corrections in that too.
Yeah, definitely.
Michael Jordan he's always won, but there might be times that he might lose now, right?
Sure.
But I still think, like the Maradona ball we talked about, the Montana jersey that you bought, there are opportunities, but you have to find the underpriced opportunities and the Grails where they are.
Definitely.
Yeah.
Definitely. Yeah, I mean, what advice do you have for people that, they own Bitcoin, they're curious about getting into collectibles? Like, where would you start?
I would go to the biggest fest and fairs and just talk to the best in the industry, find out who they are, study, learn.
Yeah. Study the best.
Yeah, I think that's a characteristic for all crypto people. They always study well.
Yeah.
What about you? What do you think is the best opportunity, where the best opportunities in collectibles are?
Yeah, I mean, I think I really like right now the kind of fantasy, sort of fictional character space, right? You mentioned I think your business partner was investing in, say, Mickey Mouse or Disney IP. I think for characters like Monkey D. Luffy in One Piece, or Goku in Dragon Ball Z, or Pikachu in Pokemon, those entities, well, they're not going to get a labral tear. They're not going to mess up their meniscus. They're not going to go to Jeffrey Epstein's island. I say that kind of tongue-in-cheek. Right? So there's great opportunities to invest derivative of the largest IP franchises of all time.
So in summary, basically, the IPs or culture phenomenon that has impacted human history.
100%.
Right?
100%.
All right, man.
This has been great.
For sure. Thank you.
Yeah.
And thank you all.
Okay, good afternoon, everyone. And of course, thank you to everybody for joining today in what has been a long week, a long year. I think what I wanted to do, we have half an hour, but I wanted to do just a very quick introduction from everybody with the idea that the audience understands when they're answering a question, what hat are they wearing? Maybe we can start at the end with Jason and come back. Just a very quick introduction on what you guys do.
Yeah, I'm Jason, founder of Sora Ventures. Been in the crypto industry since 2015. Last 2 years, we've been investing quite heavily in the Bitcoin Treasury companies. So we've done the early days, Metaplanet, and then Moon in Hong Kong, and then Astra in Thailand, and then Bitplanet in Korea, and Taiwan. So we have a public company on NASDAQ as well. So yeah, still investing.
I'm Angela. I'm the managing director for APAC at BitGo. And a couple of days at the White House meeting, Donald Trump referred to us as a big deal in the world of that thing, being this thing that we're all in here together. We're a digital asset infrastructure company, so we provide full stack services, trading, custody, staking, and any sort of infrastructure services for institutions that are looking to enter into crypto and digital assets. Great to be here.
This is Jay. My job is unsexy job. I'm a lawyer helping on the crypto clients and other companies as well. I help clients on the tokenization and also some other disputes as well. So if you have any issues, let me know. Thank you.
I'm John Cahill. I run Asia for Galaxy Digital. We're a US-based NASDAQ-listed company that does everything in digital assets, from trading to investing to infrastructure. And we also have a data center business out in Texas where we cross into the AI world.
Very nice. So when I stepped into the space back in 2018, there was almost no regulatory and no policies, no procedures, and effectively no licensing remit. Fast forward to today, where sort of there is across 100 different countries in my research for this, and we've seen a huge amount of adoption from that. So I wanted to sort of maybe ask you all individually how, and from your firm and client's perspective, how this regulation has changed. Maybe focusing obviously a lot on the good, but maybe some of the bad. And maybe I'll start with Angela, coming from your historical licensing background.
Yes, thanks for exposing me, Ryan. I am a rapidly recovering regulator. Prior to joining the private sector, I spent over 10 years at the Monetary Authority of Singapore. And so, I think when it comes to regulation, what do regulators regulate? They regulate things that are, having a significant impact on the market. And so the regulation came in as adoption came in, and they were like, okay, this is serious. And I think in the last couple of years, they've seen the kind of impact that it can have on the broader financial system. So what impact has regulation then had on the industry? I think that for companies like BitGo, who have really leaned in, I think it has opened up a whole new opportunity to engage with non-crypto native institutions. We chose to get licensed in some of the hardest jurisdictions in the world. We are a federally chartered trust bank in the US. We have a license in Singapore with the MAS. We have a license in Dubai with VARA, MiCA license in Frankfurt. And really this has kind of become a strategic advantage for us, right? Our licensing footprint when clients, especially clients who themselves are heavily regulated institutions, they're choosing infrastructure partners. When they know that when we're regulated and licensed in this jurisdiction, they know that it means something to them, that we're being held to a certain bar, and I think that has helped to drive confidence. When we say that we provide institutional grade infrastructure, that is really being held to a certain bar by regulators that they know and understand.
Yeah, John, you go for it.
I think regulation is a double-edged sword. I think I spent a long time in TradFi, I worked at Goldman Sachs for a long time, and every time there was a new rule, you stress out because it's more reporting or more obligation, but it also offers new opportunity. And I think the journey we've been on, and it's really a global one, we operate in 20 jurisdictions around the world. It's one of regulation enabling a broader access to permanent pools of capital. That's pension funds, that's endowments, that's sovereign wealth funds. They're the biggest pools of capital there are, and regulation enables that. I think the ethos of a lot of the industry around self-sovereignty and independence is very important. I think it's important that we keep that as one of our principles. But I think also unlocking this permanent capital is the way to make it bigger, is the way to make it grow. And so we're constantly having to reassess and evaluate and frankly spend more money on lawyers and consultants to navigate the different jurisdictions we operate in. But the end game, and we're getting closer to it every year, is a permanent fixture as a investable asset, open to everyone, and more experimentation once you kind of clear the regulatory hurdle.
I guess Angela and also John have given us very good perspectives on how crypto companies and crypto assets are now, because of the regulations, have been able to approach new investors, new people, which they previously did not. But also, I'm helping different clients, crypto companies, but also traditional FIs and companies. So in my view, those views are all very good, but also from different angle. From traditional FIs and other companies, regulations help them to go into market as well. For example, now we see Standard Chartered Bank can issue stable coins in Hong Kong. If we go back, as you said, 2018, nobody imagined that traditional bank like Standard Chartered Bank could issue stable coins. But now, under regulations, they can do it. HSBC can do it. And then also, if we go to US, NASDAQ is looking into how they can use blockchain and some other, also tokenize, and also use tokenized stocks as well. So because of the regulations, there are many players from traditional banking and other capital markets and other industries who can go into crypto space as well. So that's another angle that I think regulations help bring up to the space. That's my view, yeah.
Yeah, I mean, on our side, we, 10 years ago, we were investing in tokens and there wasn't a lot of regulation. And now we're investing in public companies and there's a lot of regulation. A lot of the work that we do is beyond investing now. It's working with the regulators, trying to figure out how we can bring digital asset into traditional finance, right? And it's a very difficult task now that I've done this, across 6 markets. Very difficult task. And obviously our industry has been growing a lot, but you'll be surprised how early we are when it comes to regulation. For example, it's very difficult for institutions to buy digital asset in Korea. Infrastructure around Southeast Asia is very, very early. A part of the reason why people are still not kind of comfortable with buying digital assets is because of the lack of infrastructure and clarity, right? And so, 2-3 years ago, when we started investing in this entirely new narrative around Bitcoin Treasury companies, we're not thinking about, hey, how can we make money on top of these public companies or grow the business? We're also thinking about what can we deliver for the region? How can we bridge that gap? How can we make it even easier for people to access Bitcoin? And that statement, which is how to access Bitcoin, had changed quite a bit in the last 10 years. For example, 10 years ago, for you to obtain Bitcoin is you got to mine Bitcoin. And then, 8 years ago, you can access Bitcoin if you have an account on Binance, right? And then 2-3 years ago, you can access Bitcoin in the form of ETF, right? Now there are different asset class of Bitcoin, right? There is CBs, there are stocks, there are prefs, right? All different form of different asset that's powered by Bitcoin, right? The sailors talk about, digital credit, all powered by Bitcoin. So that's how early we are, because Bitcoin is obviously not the only asset in our industry. But I do think where we're heading now is a period where even us as investors, we're forced to work with a lot of regulators because that's where the industry is heading. We will definitely see a lot more products beyond what we see today, beyond pref, beyond products that are powered by Bitcoin. But I think that path will be a lot more straightforward today compared to 10 years ago.
I also want to just chime in. Not all regulations are created equal. There are good regulations and bad regulations. Good regulations enable commercial opportunity. They enable innovation. They bring in entrepreneurs and capital. And some of those the regulations we've seen around different regions and the globe don't do those things. The U.S. is a leader for capital markets globally. Getting Clarity Act has been a journey. It's not yet done. And I think ultimately you need regulation to unlock a lot of these things and enable entrepreneurs to go and build, investors to go invest with some degree of visibility into what the future looks like. We're investing out on 5-10 year horizons. you need to build those investments on solid foundation. Without that, you don't have the level of innovation, or you force people into the dark corners, which is actually not what the regulators want. The regulators want to enable good actors, good investors, good entrepreneurs to build businesses.
Yeah, I think that's a great point. I think that the whole idea behind regulation and trying to make it move faster was exactly that. People want to trade Bitcoin. So you either regulate a venue locally and let people trade Bitcoin, or they will go elsewhere. And then there is no safeguards, no protection, etc. And it kind of flows into the next question, which is around liquidity and the fragmentation of liquidity. So as you mentioned, ETFs brought a huge amount of volume into the space. It opened up a huge amount of institutional liquidity and opened a lot of doors. But what we've also seen now and in the past is unregulated, not illegitimate, but just unregulated providers doing a huge amount of volume. If you look at, not to pick on anybody, but if you look at Binance have had a huge amount of liquidity over the last years, and parts of their businesses were unregulated. And of course, you can't go without mentioning Hyperliquid and how, how much volume they do and on the spot and the perps, etc. So, sort of the question for the panelists is: do we think that the volume will be taken and pulled away from unregulated and decentralized venues into regulated venues? Or do we think that the TradFi, the institutions will step and sort of open the door and head into the hyperliquids and sort of the unlicensed venues to get access to their liquidity? Yeah, maybe the regulator can go again.
I think, when you think about decentralization as a construct, public blockchains, that is decentralized, right? And already today, we see so many regulated institutions the last year or two starting to do more and more on public blockchains. So, I think it's not so binary. Why not the licensed space and the decentralized space coexist together? I think what we'll see is actually more of a convergence. And the question then is, from a security standpoint, right, from an infrastructural standpoint, which of these ecosystems give the regulated players the most comfort to build on that? And I think, in terms of the institutional liquidity that's coming in from traditional finance, it will seek that kind of security, and it will seek that kind of institutional grade infrastructure.
I think both ways must happen, in the sense that the regulators will try to regulate those we call unregulated DeFi and DEX spaces as well. Because as we have seen, historically speaking, when there's no regulation whatsoever, something happens. And then, many investors, lose their money and other things. So then, eventually, it will trigger regulators to look into how they can regulate those so-called unregulated crypto businesses. But also, on the other hand, some of my clients, which are regulated businesses, are trying to copy whatever is popular in unregulated Hyperliquid or some other businesses as well. So I think somehow both ways will happen, and then somehow there will be some convergence between two ways. That's how I can see it.
Maybe Jason?
Well, I mean, everything is relative. So I think in terms of where the industry is heading and regulations heading, I think what's really clear is that infrastructure is improving, and that the space that we used to have, which is mostly on-chain products, those are becoming more and more connected to traditional products. So for example, exchanges, right? Most of their volume used to be on tokens. Now a lot of the exchanges are getting involved with tokenized stocks, right? And equity wasn't their primary revenue back then, but I think in maybe 2 or 3 years, a lot of the primary revenue from digital asset exchange will come from tokenized equity. So that means I think our just the world is connecting the dots. We have public companies, most of the major countries in Asia, our form of investment somehow also kind of brings more liquidity and brings more money into those regions, whereas in the past, maybe foreign capital wouldn't be interested in like a Thai public market. But because of the work we've built, the products we've built, then people are now interested in the Thai public market. But more importantly, I think it's because there are opportunities that digital asset can solve in those public markets that, I think it's going to be up to us to bring to market. I don't think it's going to be the traditional TradFi guys who are going to be solving and kind of connecting the dots. That's where I see the opportunity is. Like things that people haven't done, we will do it. Liquidity that hasn't exist, we will build it.
I agree on that. I'd like to build on it. First of all, Binance is one of the most regulated companies around. They probably hold licenses 50, 60 jurisdictions by now. They have thousands of lawyers on staff. Like that transition has already happened, away from being unregulated. And that's true for all the big crypto exchanges. They're all moving this direction. They're all now multi-asset. It's not just crypto stuff. It's wherever there's appetite for liquidity, they're there. That's their job, is to be the venue for that. Hyperliquid's in a slightly different category, but I think what they have done, they built an enormous business and a great business around delivering a good product. And owners of the token have an equity-like participation in the business. Oh, well, isn't that a novel idea? Passing value back to holders is how you build a good investment base and people who want to use the product, and it kind of self-reinforces. So I think their model has been really good. And because they've been so successful, because we see weekend volumes on Hyperliquid driving the traditional markets, it's putting pressure on the traditional market operators to think about, what does 24/7 look like? How fast, how good is our technology stack? How can we do that? They're a proof of concept. There's risk appetite on nights and weekends outside of trading hours, and now the rest of the TradFi markets have to catch up. It's very much the other way around than it used to be.
Yeah, I think SpaceX was a great example, trading $1 billion a day, pre-IPO. So getting a little closer to home in terms of Bitcoin, we've all seen a number of different cycles. And with those cycles, again, we sort of talked about it before, some goods and bads. We had the ICO bubble, we had the meme, we had DeFi summer, we had meme coins. And what was very obvious about that was sort of driven by a significant push and a move up in Bitcoin. And if I've heard it once, I've heard it 1,000 times. If only I just kept my Bitcoin and didn't chase the next narrative. So the question is a little bit around, as we see and hopefully see an inevitable 100,000 again, do we think that there will be another narrative that, dare I say, piggybacks on the back of a Bitcoin move? And do we think that people have learned their lesson? Do you think people will chase the next narrative? Do you think that they will, because obviously, for everybody in the room, is all of those narratives died, and are significantly down, if not 100% down. So do we think that Bitcoin will take the next narrative up again, or people will be a little bit more cautious and say, let me just stay in my ultimate position, which is Bitcoin?
I wouldn't say the narratives are dying. I think the narratives are changing, right? So 3 years ago, when we, experimented with this Bitcoin Treasury model, and then, started Metaplanet with Simon, and we didn't expect this will blow up. We didn't expect, the term DAT and all that would exist. But it only lasted for 2 years, right? And then, market had a correction again, and people are asking us, like, what's the next big thing, right? I think that is a very interesting question, because that's where the money is going to be being made. All I do know is that I think it's not going to be, if you look at the history of digital asset, it's not going to be the same thing again, right? So you mentioned memes, like protocols, all that. It's not going to be that. It's going to be something new. And right now, our companies are all kind of mostly investing a lot of time on RWA. And I think when you think about RWA, people think of just bringing asset on chain, I think there's going to be a lot more than that, right? I think RWA is a very broad term, right? So I think there's going to be a very big components where some of the public companies we have, they're all transforming into more of a how can we combine public company and the utility of public companies with traditional tokens or tokenomics, right? That's what I'm kind of experimenting, and at the same time always thinking about like how, because I think that's where the industry is heading. Yeah, so I think that will be a big part. I think next year if we come back again, I think it's going to be RWA.
We spent a lot of time in this industry and on stages like this talking about why you should own Bitcoin and things like that. And a lot of that was about access. A lot of it was about just having it as part of the portfolio construction conversation. I truly think a lot of that job is done. Getting access, whether it's through an ETF or one of the many venues you can go and buy Bitcoin, I think a lot of that work is finished. So the access part is done. Understanding like why you should own Bitcoin is still relevant. I think that's still really important. But also the ownership of Bitcoin has changed a lot. It's gotten way more dispersed. A lot of the people that have been Bitcoin OGs have diversified their own investment strategies, and they're looking at AI and robotics, and some of that's driven some of the weakness in Bitcoin and the lack of energy around it. And so I think, will Bitcoin be the thing that leads us forward? I would say maybe not, because maybe if the AI narrative starts to lose a little steam, we'll see capital redirected into a new space. If the robotics story starts to crest and then kind of come in, there'll be some more capital deployed. If all these IPOs that are sucking all this mind share and liquidity out of the market, they play out and they're going to trade where they trade. I think those will be bigger drivers than Bitcoin price by itself.
Yeah, I kind of agree with that. I think for us as an infrastructure provider, the narrative that we see and the one that we live every day, maybe it's a little bit boring, but it's really the building that's happening in spite of all the market narratives, right? And I think that's the thing that's really changed in the last couple of years, where we're working with institutions that want to build digital asset infrastructure, and they're not building it for like John says, they're not building it for this year or this month. They're building in like 5-10 year horizons, and so that has been happening in spite of of whatever's happening in the market now and whatever will happen in the market in the future. I think we still see that continuing, and that is going to be a durable narrative that I think will drive the long-term growth of digital assets. Both crypto as well as tokenized RWAs.
In my view, which may be a little bit different from all of you, but I am not the Galaxy. I am Bitcoin. I am not a VC. Maybe my angle is maybe one of the many investors. And then as a lawyer who's helping different companies working on crypto projects, I tend to agree with Jason in the sense that narrative is changing, has been changing, and will change. But maybe the nature itself of a Bitcoin, what Bitcoin is always the same. But somehow the adoption changes, and then people, how they think about Bitcoin sort of changes as well. Looking back, Bitcoin, maybe it was invented, it was only Bitcoin. It was not a cryptocurrency, right? And but somehow, thereafter, Ethereum was invented, and then the USDT was invented, and then people call them cryptocurrencies. But now move on from cryptocurrency to crypto assets. Now digital assets. We change, but the Bitcoin nature may be always same, but somehow it's a way of people finding the utility, use cases, all those things. So, but and also if you look at the history, gold when people digged out gold many centuries ago, they didn't know that it will be used as an inflation hedge, right? But somehow people have found that it could be a good inflation hedge. So over the years, the narrative will change, and they will find a way to sort of how we can use Bitcoin in the real world.
Sure, thanks. And I think we've got basically a minute to go. So just very quickly, I think everybody's talked a little bit about it and touched a little bit on it, and BitGo has made some investments recently. Where do you think smart money's going in 20 seconds each? Where do you think the smart money in the coming 6 to 12 months is going in this space? Is it stablecoin infrastructure? Is it RWA? Is it licensing?
Just in a word, convergence. We've talked about it in different ways and different things. It's traditional markets and like the crypto infrastructure are coming together. The story of everything will be tokenized is happening in real time. Crypto bear market, raging bull market in infrastructure. We've never been more busy doing projects with asset managers and increasingly banks, and that's 100% where there's a ton of investment going.
For me, tokenization, because that's where I see a lot of clients, asking me about how they can do it and how the regulations work. So I think that's the maybe in 6 months or 1 year, tokenization will be the one which is getting a lot of attention and money.
So we say money talks, right? We talk without money. BitGo just acquired NYDIG's institutional trading business. And so I will say that smart money is going after institutional capital.
Yeah, I think again, broadly speaking, I think it's going to be RWA. But if I had to be very specific, then probably tokenized securities.
Perfect. Perfect timing. Thank you, everybody, for your time, everybody in the audience, and happy Friday.
Thank you all.
Howdy. So they made me put Only Bulls as the name of the company, but really, I'm a Bitcoin purist. I started mining Bitcoin in 2011. But Only Bulls is a consumer brand of ours, so I had to placate to Bitcoin Asia because they were worried I wasn't going to talk about Bitcoin. But I started mining Bitcoin in 2011. I don't know if I can legally admit this now. I don't know what the statute of limitations is, but if you guys were betting Bitcoin back in 2011, do you remember how you used to buy it? Like we'd Federal Express money somewhere, and you guys all remember that or not? Anybody remember FedEx Expressing money and figuring out how to sell? Oh, there, we got someone over there in the corner. I want to talk to you about how 37 years of TradFi, traditional finance, which is what I've been. I started my career at Dean Witter. Most of you have never heard of it. It's probably, you know it as Morgan Stanley today. We consider Bitcoin to be pristine capital, and I want to talk to you about how we use AI and Bitcoin to borrow money. So I'm the executive chairman of a public company on the New York Stock Exchange called Hyperscale Data. The symbol is GPUS, and we are a data center in Michigan. We also own a private equity firm, and we've been buying Bitcoin and making every mistake in the world about how we mine it, how we sell it, how we use it. But over time, we really became a believer that it is pristine capital, and I'm going to walk you through how it is pristine capital. We borrowed, this is incorrect, but we borrowed about almost $50 million from Morpho. Does anyone here use Morpho at all? Anyone ever here borrowed against Morpho? So I understand that we're the largest borrower against Morpho for a single loan as a public company. We were the 41st largest owner of Bitcoin according to Bitcoin Treasury up until recently because we sold some Bitcoin to build an AI data center. But I want you to imagine the idea that in traditional finance, in order to borrow against our Bitcoin, and I really need everyone to understand that pristine capital is coming and Bitcoin is the solution. We ran a real-time experiment. We were able to borrow $50 million against our Bitcoin permissionless. I didn't have to ask Mother May I from some regulator or some bank or institution. And this is what makes this conference so important, Bitcoin Asia, is being able to borrow $50 million against your Bitcoin, and our average rate was 4.9%. Now, what did we do? We built systems around monitoring Bitcoin to be able to make additional deposits and withdrawals, to use AI to make sure the capital stayed pristine and that we were always in compliance, because I didn't want to get liquidated, right? But this is the worst it's ever been, right? This is the worst today it's ever been. You can take Bitcoin, go to Morpho, and probably within 15 minutes have the money available in your account. And this is something that we did as a real-world experiment for our public company. So why is it such a big deal, and why do I think that eventually, over the next 20 years, what you consider to be reserve banking is going to go away? I'm building a blockchain, the alt blockchain, which is part of Only Bulls, which is part of alt markets. We're a competitor to Hyperliquid. This is something I want to do for the last 10 years, and effectively, administration has made it effectively legal for there to be built alternative markets on rails that are blockchain. And the idea that you can take that collateral, move it around, and not get permission, I want to walk you through how we borrowed money for Bitcoin before. And that is, we went to an institution, they made us transfer to a custodian our Bitcoin, they made us over-leverage the Bitcoin, they charged us 15%, they made us pay a monthly payment against the Bitcoin, and it's really, really, absolutely still sort of a morbid process to be able to go borrow against your Bitcoin versus do it completely in DeFi. So we came to the conclusion that why is it such a big deal? Verifiable on chain, global liquidity, 24-hour discovery, and programmable custody. The concept that the banks don't understand is that eventually you're all going to figure it out. You're going to be able to go to your Only Bulls app, use AI, right, and built in Only Bulls, say, hey, I've got 40 Bitcoin. Where's the lowest rate I can borrow? Press a button, fund your account, and with what Andreessen Horowitz is doing, how they're funding onboarding services, have actual almost any denomination of currency in your wallet ready to spend in less than about 15 minutes. We believe right now with Only Bulls, you can go make a deposit and withdraw money or add money faster than you can use a current ATM. So for those of you who have been in Web3 for a long time like me, Web3 is a nightmare for deposits, bridging, moving over, but with new technology like Holiday, which we've integrated into OnlyBulls, it's easier than you taking your ATM card out and getting money. Believe that or not, it's absolutely true. The capital without selling Bitcoin, access to liquidity, avoiding equity issuance, and retaining exposure, the entire time that we sold, that we borrowed against our Bitcoin, we never had to leave access to the upside of Bitcoin. We could easily sell our Bitcoin, we could add or subtract it with Morpho, and that became a really important, someone really famous must be back there, they're cheering for him. So being able to borrow at substandard, I mean, imagine you today, none of you can borrow at 4.9% for a loan that you don't have to pay back or don't have to make a payment. I can't believe that more people aren't doing it. And that's the interesting thing about it is the rates are set because there's so much little demand to borrow against your Bitcoin. When we got up to $50 million at one point, we were barely paying almost 5%. This is unprecedented when it terms of the value of how you assess whether collateral is good or bad or whether it's pristine. And right now in the banking system, it's just sort of unheard of. Access to liquidity, avoiding equity issuance as a public company, and retaining exposure. Capital without selling your Bitcoin. I can't stress how this is coming in a bigger way. The loan never sleeps. The collateral, the rules, the liquidity are all programmable. You know exactly when you use AI or their formatted dashboard, you know exactly where you stand in real time. Your loan can be adjusted. You can add or subtract capital. And we made agents that allow us to monitor it and add or subtract Bitcoin depending on the best rates you can borrow against. So I just think this part is just one of the most incredible parts of the company. The variable rates, over collateralization, and liquidation risk. So let's talk about that. The liquidation risk is if you get up to 86% on Morpho, you're going to probably get liquidated. We try to borrow and never really go above 72%, but I think that the average person can get really comfortable borrowing between 45 and 48%. Now, it's still a little archaic on how you pay it back. You do have to withdraw your Bitcoin, you have to sell it, put it back on, and I won't talk to you about looping because I would not suggest anyone loop and borrow against on Morpho to buy more Bitcoin. But from a perspective as a public company, as we create an environment where we do more of these, the idea that you don't have to go to a bank to do this, we think is going to sort of revolutionize the way corporate treasuries operate, right? So we see Bitcoin as a scenario where Bitcoin as pristine capital is always there in the background. It's always a treasury asset. You can go access to it, but we don't see it as investment capital as much as we see it as a reserve asset, right? As Bitcoin becomes more popular as a reserve asset, the number of lenders that become available make it easier and easier and easier to borrow. And the current rail system that is being built around this process is making it easier to onboard and offboard. I wanted to give, I guess we didn't put it up there, I wanted to give you guys an example of how we do that. And if you're interested in learning about the process for the dashboard, I keep my contact information available at all times. You can reach me on X, Instagram, or my LinkedIn, and I'll send you a copy of the Morpho dashboard if you want to use it for your own company. So we recently undid the loan, and we did this maybe to prove a point, which is what kind of Bitcoin exposure do you want to have at all times? And I think that those of you, how many people in the room have actually used Morpho in any capacity? Like, you used it, you used it, did you use it? So very few people are using something where 4 to 5% access to capital is just unheard of, and I don't really understand exactly why that's the case. But I think that where it changes is you see what's happening with Coinbase. Coinbase is now saying we're going to have Bitcoin-backed mortgages. I think you're going to see more and more institutions like us make those available. So let me talk to you really quickly about what we're doing at OnlyBulls. So in the coming weeks ahead with OnlyBulls, you're going to also be able to borrow against virtually almost all cryptocurrency in the top 10, whether it's Tron, whether it's Bitcoin, Solana, etc. And the same scenario, Morpho-like scenario will be allow you to use your Only Bulls app to control whether you want to borrow more capital, whether you want to deploy more capital, but more importantly, whether you want to deploy your Bitcoin into a lending pool. And I think what you see in reserve banking is that you're going to see more and more people building these lending pools to where we as a society can go and say, hey, I'm willing to take a little bit more risk in this pool or that pool, et cetera. And living proof of this is what's happening with Strategy, right? Strategy itself isn't really borrowing against its Bitcoin like it could. I'm interested to see ultimately what Michael Saylor does and the team does there in terms of how much digital credit that they provide. Obviously, they're taking in to control this Bitcoin. But if you play this out for a long period of time, I see these scenarios where funds are going to pop up, where credit cards, rates are going to come down, the idea that any of your own collateral can be used for multiple things like purchasing cars, where there can be structured finance around the time frame that you borrow against the Bitcoin. And so for us, we continue to accumulate it again. We sold some Bitcoin. We sold 850 Bitcoin to fund the $1.3 billion data center we're building in Michigan. And it was very painful for me to want to sell it, but it's hard to offset the fact that you have this big data center contract. Let me wrap back into you with what AI is doing for us, and that is using AI contemporaneously, the same time that you're going to get these loans, you can use AI to actually search for these loans, to monitor these loans, to alert you. And the alert system with AI is very important because you can move your collateral and loans really anywhere you want to move them in a way where you can constantly be checking rates and ultimately automating a system where instead of taking a liquidation, you're actually adding automatically with an agent. And I would encourage all of you to think about and look at more. I'm going to be a competitor to Morpho, but I'm so impressed with what Morpho's doing and we running this $50 million experiment that I encourage you to look at Morpho and look at other abilities to borrow and actually run an experiment for yourself. Go borrow against your Bitcoin. Do it even if it's a small loan. Get used to the system of how you create it, how you get new tokens, how you have to pledge them, et cetera, how quickly the USDC gets put into your wallet. And once you do this, you'll be in a scenario like us as a public company where you're going to want to borrow against your Bitcoin. You're going to want to use it as utility. And this is why my thesis is long-term that Bitcoin will be part of reserve banking, and the reserve banking is ultimately going to be replaced over the next 20 years with blockchain rails. Thanks, everybody. Have a good day. Thank you, Bitcoin Asia.
Did a great job.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan and our buddy George McHale now joining us on the desk, Managing Director at Bitcoin for Corporations. You've been on the other side of the building this whole time. We finally get to see you. Although I saw you at the symposium yesterday. How's it been going?
Yeah, thanks for stopping by and hosting a session for us. The symposium was fantastic. We had a full room pretty much the whole day. Fantastic conversations. We got to talk about corporate adoption, institutional adoption. We talked about stable coins and how they're integrating into the Bitcoin ecosystem, which I think is an important conversation. But overall bullish. I mean, the vibes are high. The sentiment is definitely shifting. And it feels good to be right.
Now, George, there's a lot of members of BFC. It's been very successful. It's been growing. Everyone knows some of the bigger names like MicroStrategy that are members of BFC. Who are some of the members that you feel like maybe haven't gotten enough narrative or attention over the past couple months?
Well, I mean, listen, I love all of our members equally. The chairman circle members are probably among my favorites. And of course, our founding member Strategy, is leading the movement, really. But yeah, you look at Metaplanet, I think some of the things that they're doing are extremely innovative. And they just announced the acquisition of the public company in the US. Strive, I think, also is another one. But those, they are getting attention. So the question about, who are the ones that aren't? Well, so many of them. Byte Federal in Australia, a Bitcoin ATM company that added Bitcoin to their balance sheet. Liquid Technologies, a Canadian Lightning provider and leader in AI. I could go on and list all of our 40 plus members, but they're all doing incredible work and they're leading the way.
Real quick, because we're short on time here, but BFC is always launching fun new projects. Anything we should keep an eye on?
Let's see. We are launching a new event next year. That's all I can share right now. But we did 4 this year. We're going to do 5 next year, and we're going to keep scaling it up.
Are you going to invite us?
You can come. I don't know about this guy.
Okay, awesome. George is my new best friend. George McHale, thanks so much for joining us.
Yeah, thanks for
Enjoy the
having
rest of your weekend here.
Thanks.
Let's go back to the Nakamoto stage now for Bitcoin and the future of economic zones.
Good afternoon, Hong Kong. Right. First of all, thank you, Bitcoin Asia, for putting this amazing panel together. Right. We just have 20 minutes. Oh, it's only 16 now. I see on the panel. Right. So I'll quickly try to get into the questions. But before that, I would like my dear panelists to kind of introduce themselves.
Hello, everyone. My name is King Leong. I look after financial services, fintech, which covers crypto and also sustainability at Invest Hong Kong. We are 100% Hong Kong government departments, essentially helping overseas and mainland companies to settle down and do business in Hong Kong, and also to help them to go global, expand internationally. So, thank you.
Over to you, Bilal.
Hi, I'm Bilal bin Saqib, Minister of State and Chairman of the Pakistan Virtual Assets Regulatory Authority, which is a dedicated regulator set up in Pakistan where we are helping navigate these emerging financial technologies.
For those of you who will be wondering who I am, so I'm the CEO of Teza. It's a blockchain protocol that we are venture building. I'm part of a PE fund. We have invested over 500 million in Southeast Asia, mostly in fintech-related companies. And I'm also the president of the Blockchain Association in Malaysia. I kind of spearheaded a lot of the action plans nationwide with the ministers in Malaysia. So I think we can start with you, King, right? In terms of the first question, for those who don't know in this room what it means, what they call with special economic zones and Bitcoin, what does it mean for Hong Kong?
Well, it's a great question. Now, first of all, I think for those of you who are more experienced enough, you have heard of this gentleman, Milton Friedman. He's the late Nobel laureate who have economists who have once said these famous quotes. If you want to look at capitalism, you go to Hong Kong. So Hong Kong is truly a free market, and that's why almost any kind of financial products you can think of, you'll find them in Hong Kong, be it the derivatives, the warrants, the OTC, the offshore PE funds. So there are all kinds of products that are available in Hong Kong, but they're not available in onshore mainland China. So this is where that special economic zone comes in. So Hong Kong is practically like a sandbox. in which a lot of freedom and ways for us to experiment different innovation happens in Hong Kong. And of course, I think for Bitcoin and the broader cryptocurrency asset class, is essentially just another major asset class that we'd love to bring on so that we are able to offer them to essentially diversify and broaden the choices made available to the investors. And by the way, we are managing $5.4 trillion of private wealth Hong Kong, so we love to get more products for our clients.
Awesome. Right, Bilal, recently you guys were talking a lot about Bitcoin strategic reserves, right? Mind sharing a bit about it and what's your vision behind it?
So the vision behind Pakistan's Bitcoin strategic reserve was never about the Bitcoin price or going and buying Bitcoin with a lot of cash. I think we have to understand the premise, and the premise behind making that announcement and working towards that is that children that are going to school today in Pakistan, they will be part of a workforce in 2080. And it's about the future. It's about preparing for the future. And we don't know what the financial or the monetary system will be looking like in 2080, right? And it was about preparing Pakistan for it when we see around the world that there are states, there are financial institutions, there are financial companies that have recognized Bitcoin as a scarce asset. They have recognized Bitcoin as a strategic asset. So it was also about adaptability and capacity building, that if this is what is happening around the world and Pakistan has traditionally been left out on these technological revolutions, but this time on this financial revolution and how the financial plumbing is changing of the whole world, we wanted to make sure that we have the capacity to understand what is custody, what is governance. And then it was also about a signal where the youth of the country has already made Pakistan the third biggest adopter of digital assets, and that has been without any regulation, right? So it's about signaling and letting the world know that Pakistan is open and Pakistan is a very forward-looking jurisdiction, and we want to be at the right forefront of this technological change.
I mean, having a chat with him yesterday, I noticed that Pakistan is doing a lot of amazing things at time, right? I mean, if we continue doing this, I think Pakistan will be much ahead from a lot of the other emerging economies in terms of blockchain regulations and policies, right? So amazing good work there. But coming back to Hong Kong, right? So I was been visiting crypto events in Hong Kong since 2016, 2017, right? So it's been one of the earliest markets to actually embrace Bitcoin, among the earliest communities to actually understand it and actually start to build things around it and build a lot of products around it. But since then, there has been the ups and downs, in the ecosystem here in Hong Kong. And now, we're still trying to see how the regulation is catching up, right? So what is with that pace, right? Why Hong Kong decided to take a much, what they call a slower approach to the ecosystem?
Well, I think there are two ways to answer this question. And first of all, the one thing that we pride ourselves is consistency. Because again, Hong Kong is a jurisdiction. It's an IFC. Hong Kong is not, strictly speaking, like a startup with 10 people. So that's why when you are laying out the rules for the market players to participate, it's almost impossible if the rules keep changing. So that's why we recognize that it's much better to have the consistent rule, and then you basically every 6 months, 9 months, 12 months, you have some new initiatives being launched, but we stick with it, right? When you lay out a roadmap, you stick with it. So for business leaders, then it's much easier for them to plan the investment over the next, say, 2, 3, 5 years that way. Now, flip it around, if we are very jumpy, we are quick, right? You just launch something, oops, it doesn't work, things blow up, and then you pull back again. The hot, cold flip-flopping is impossible to do business. So that's why for us, we feel that this is so valuable about that consistency approach in Hong Kong. So that's one. Now, and secondly, first of all, the Hong Kong embrace digital assets, of course, including the crypto. But at the same time, we also look at the bigger price. Because if we look at sheerly the bigger numbers in terms of the market share or market cap, now, of course, crypto today is probably, 2.7 trillion or so at today's price. And for gold, it's like 32 trillion, almost 10x, right? But for all the other financial products, the equities, the fixed income of the world, now you add them all, it's roughly 320 trillion, right? It's 100 times of crypto. So therefore, for Hong Kong, as a IFC, number 3 in the world, then we are looking at the transition of our ecosystem from the so-called the old banking rail, the Web 2 into the Web 3. So in 10 years' time, who knows? Maybe we'll see all these financial assets. I'm talking about the equities, the bonds alike. They will all on chain, right? It's entirely possible. So that's the bigger price that we are going after.
I think being a mature market, being one of the largest markets, of course, comes with its own, like a set of challenges, right? Because of course you have a higher risk to change things, and you definitely investor will prefer some level of consistency there. And in terms of pacing, right? I think I'm going to go to the next part towards Bilal, right? When we talked about pace itself, I've been hearing a lot of good things coming out from Pakistan as well, right? Where you guys managed to, execute a lot of the tasks, a lot of the what they call policies in such quick time, and meanwhile also building the right structures. At the same time, doing it in such a cheap cost. I heard you only use 8% of your budget that was allocated by the government. Might want to share a bit more on that?
Yes, so we were able to build at record speed when you talk about execution, but also at, I think, an unprecedented budget, which we only utilized 8% of our budget to set up this regulator. And I think that is the 21st century governance model. That's the new operating system when the cost of intelligence is going to zero, and you have all of these AI agents that could work for you and could do a lot of work that traditionally you had to hire very expensive human resource to do. So we made sure that because we were building everything from scratch, that we put together to the very DNA of that organization how 21st century governance should be done. So we used less than 8% of our budget, and we've launched the regulations in record speed. So it only took us 6 months from the time that the act was passed. And why is that so? Is because we also have to understand and realize that the structures that have been built so far, at least in the emerging economies, they are on the 19th and 20th century rail. But these technologies are moving at the machine speed, at the internet speed. So policies must also move at the compute speed, not at the speed of committees. That is how traditionally policy making has been done. And of course, I think when it comes to speed, the speed is very important, especially at signaling. Signaling to really understand that we want to go into this direction. But when it comes to the execution, of course, one has to be extremely risk mitigated in that approach, which we also appreciate. But right now, especially for countries like Pakistan, these emerging technologies offer such a great opportunity where I personally believe that the price of inaction will be way more than the price of action.
Amazing comments on that part. But I think my next question is more, for the founders in this room, right? So if let's say they are currently considering between your jurisdictions, between Hong Kong, between Pakistan, why should they, what are the points or main reasons for them to choose your jurisdiction?
Can you repeat the question again? Sorry.
So I mean, if the founders currently is trying to decide between both of these jurisdictions, why should they pick Hong Kong? Why should they pick Pakistan?
Well, I think I just mentioned it briefly. In fact, Hong Kong has always been a very strong institutional market. I think most people are aware of that. But one part that is increasingly catching a lot of attention is our wealth management market. Thanks to the policies from our Secretary for Financial Services and the Treasury, Mr. Christopher Hui, the Family Office, the new migrant entry scheme, that attracted so much family offices and private capital. And by now, we are managing, as I just mentioned, $5.4 trillion. Now, and just think about it in this context. Now, traditionally, when it comes to asset allocation, it's 60-40, right? The 60% equities, 40% fixed income. typically US Treasuries. But now the world is changing a bit. So people would like to explore other vehicles beyond just US Treasuries. So then they look at alternatives. So if someone is coming into looking for a jurisdiction in which they would like to tap into the capital base, this is now a golden time to offer something that is becoming an alternative to traditional fixed income investments, steady return, but with a different kind of risk profile.
I think for founders, of course, mature jurisdictions, if they look at today, but I think founders also should look at where certain jurisdictions are going in the future. So what we have to offer is adoption. See, Pakistan, 250 million people, 70%, 67% under the age of 30. A very tech-savvy youth. And then what we also offer are a lot of problem statements that every single entrepreneur and founder needs, from remittance, which we receive $40 billion, and that is coming through traditional rails. We have unbanked people. I think our biggest strength is not having a very strong legacy system. So that allows us and gives us the opportunity to actually leapfrog, just like we leapfrogged on the telephone lines directly to mobile and mobile wallets. And I think that is what we provide, is a complete blank canvas on how blockchain and digital asset companies can come and build the future with us with talent, because we have world-class talent that has already proven that they understand digital assets and are also building the future of finance out of Pakistan.
Yeah, I mean, I've definitely seen some of the amazing talent out of Pakistan, and there are really good developers out of there. And of course, there's really good institutions and exchanges out of here in Hong Kong, who is actually quite mature. So I do a lot of financial services based out of here as well. But heading towards my next question, since we only have 2 minutes on the clock, right? I would like to ask you, in terms of your vision, where do you see your jurisdiction in the next 5 years around Bitcoin and blockchain ecosystem? How do you see your jurisdictions, especially Hong Kong and Pakistan, how are they going to be driving this ecosystem forward? Your vision in 5 years.
Well, the short answer is definitely by embracing technology. In fact, when we look at even some of the Wall Street leaders, such as the chairman of BlackRock, he published a letter last year in which he laid out the future of tokenization. Now, just simply on infrastructure alone, because again, the world needs a lot of next generation infrastructure, AI data centers, solar farms, right, even ports, and so on. And the way that they size it is $6.8 trillion US, just on this next generation of infrastructure alone. Now, where does the money come from? Well, probably not from governments, given a lot of governments are now under a lot of pressure from a fiscal standpoint. So therefore, I think a lot of folks are now really looking at tapping into, as I just mentioned, the private capital. Because traditionally, private capital allocate minuscule amounts into infrastructure. But now that you have things like tokenization, then you're able to offer this kind of investment where the return is quite steady, long term. At the same time, you can fractionalize it in such a way that can bring down the threshold. So that's why if we have crystal ball, looking ahead 5 years, 10 years from now, we see that there'll be a lot more, I would say, alternative assets being also authorized or being offered on chain. And of course, I think the whole financial markets, even equities and fixed income, is also heading that direction as well. And definitely Hong Kong, we've been building the infrastructure and ecosystem to prepare for that.
How about you, Bilal?
So I would say it would be that Pakistan becomes a role model for the frontier economy. And what I mean by that is we create real-world use cases on tokenization of land, tokenization of illiquid assets that the government has, tokenization on how tokenization was able to help millions of Pakistanis break their economic classes. I want Pakistan to be the birthplace for all new blockchain cases. That includes moving the 100 million unbanked people into, making them banked, whether that is through wallets. Then also how this remittance corridor changed. Outside that, on the AI side of things, how Pakistan became the country that gave birthplace to so many companies that were building for the future agentic economy and creating single person billion-dollar companies out of Pakistan, because we have the talent, we have the problem statements, we have the right policies, and that is what is required to nurture talent and to make sure that success happens.
I mean, there you have it, ladies and gentlemen. You have two different, special economic zones, restrictions that are currently with very different history, very different background, currently driving their way into, a blockchain and, maybe a future of agentic finance, right? But the time's up on the clock. I think that's our call to actually end the panel. And thank you very much for actually having us here. Okay, thank you very much. See you.
To see the evolution of that. So now we're hearing about Bitcoin Treasury companies 2.0, 3.0, and even 4.0. So our next panel will discuss some of those ideas. It is titled The Bitcoin Treasury Reckoning, From Financial Engineering to Real Businesses. Please welcome our moderator, the CEO of Moon Inc., John Riggins, the CEO of American Bitcoin Corp., Michael Ho, the Vice President and Chief Strategy Officer at Bitplanet, KK, and the founder and CEO of Treasury, King Oi.
Good afternoon. Another very international panel here, which is fitting for this conference in Hong Kong. But the reckoning. I think in the past couple of weeks, it's been more of a reckoning for the shorts, as I think the companies up here that are publicly traded now are up 60+% in the last month. But let's start there with kind of how the market shifted in the past year, being a little bit more bearish. Let's start with what we've learned through the bear market. As a company accumulating Bitcoin, what's been the number one learning and how it strengthened your business for future cycles and for future growth? We'll start, King.
Yeah, sure. Thanks, John. So obviously, strategy, having created a model, was kind of straightforward at the beginning. It was accumulating Bitcoin, and the market would give a premium to that, right? MNAVs above 2, 3, 4, and even higher. And as we've gone through a very rapid boom and frankly also bust cycle for treasury companies, I think the market's become more discerning and smarter, and the companies have as well. And in this environment, you need to earn your premium, your MNAV, which you do through an operating model, growing Bitcoin per share, being differentiated, execution, and a combination of those to earn that. I think that's the key learnings.
KK? Learnings through the bear market last year.
Well, quite interesting bear market in Korea, especially when the government is also not really reacting as they promised. I think the bear market actually the severity of the bear market deepens So that's what we have experienced. But I think the resiliency and the risk management that we have shown, I think is going to revive the business itself. And I think we have strategized in order to make it better business plans to overcome this bear market situation, which is very, in terms of for us as well, it was very helpful situation.
Markets are a voting machine in the short run, and it's a weighing machine in the long run. What we can't control is the sentiment, it's the liquidity, it's the multiples. What we can control is our operational business. And at times, we've been able to benefit from the capital markets trade where we've been able to issue low-cost equity for a multiple back in Bitcoin. But we also have a very profitable foundational operating business that has mined more and more Bitcoin profitably every quarter. We mined more Bitcoin in the last quarter than any prior quarters. We started the company, ABTC is a fairly young company. We started just over a year, not even a year and a half ago, with 0 Bitcoin. We crossed 8,300 this last quarter. And of that, over 900 were organically mined in the last quarter alone.
Wow. Maybe let's stay there and talk a little bit about the advantages of kind of being on the production side as you're accumulating Bitcoin. How are you approaching that moving forward? That last quarter sounds like it's been a successful way to do it. Tell us a little bit more.
We've been doing this for a very long time. I've been in the Bitcoin mining space for over a decade. I actually probably mined my first Bitcoin before I had my first legal drink back in 2013. Well, Bitcoin mining as an industry has evolved a ton over the years. When we first started, it was GPUs, it was hobbyists, it was rigs in the garages. Now we see multi-$100 million investments into very large-scale data center facilities. Our Vega facility in West Texas represents about 2% of the Bitcoin network alone in one facility. This is a single contiguous building that is 5 football fields in length, direct-to-chip liquid cooled. If you look at a picture of what is inside our facility, and I contrast that to the early days of our GPU rigs, it's night and day.
Incredible. KK, let's look at Korea and kind of how you all have approached the Treasury side alongside an operating business. I think also a profitable operating business within Bitplanet. So how does that dynamic help you accumulate Bitcoin and kind of prepare for the next cycle of the Treasury operation that's going to be valued by the markets here?
No, thank you. Yes, I wanted to bring this up as well. I think each country would have a different regulatory perspective that they can play within. I think in US, Europe, ATM is a huge thing for financing your Bitcoins. However, in Asia, especially in very regulated countries, it is something that you have to play alongside. But also, I mean, you have to be very creative in terms of our financial restructuring of it. But you also need the main businesses. Bitcoin Treasury in Korea, for example, is a strategy. It cannot really be the main engine of the businesses. So we are diversifying our businesses. Bitplanet, we already have started with the system integration businesses. But we are actually expanding our strategy in terms of the whole country's perspective of growth fund policy, where we are seeing a lot of government policies focusing on the AIDC centers. And we are actually trying to play the ecosystem of the AIDC businesses from the generation of the energy, storing, transmitting it, converting into the knowledge. And we are actually trying to be part of all the ecosystem with the parties who are willing to come to Korea for the new businesses.
And King, maybe a little bit against the grain in terms of how y'all approach Treasury and the operating business, or not. So can you tell us a little bit about how you see the operating business of Treasury moving forward?
Yeah, sure. And just by background, we're also a new company. We launched last year. We were backed by Carmen Tario Winklevoss and working towards listing. And with a fresh company and also how the market's developed over the last year, it's given us the benefit to be able to look at the market and where we think is the right fit for us as a team and a company and everything else. And it's interesting where in the introduction was said about financial engineering. And I personally think financial engineering in itself is totally fine. It's actually a good thing. It's all about execution and how you do it. And for us, the way we look at it is essentially the capital market machine is clearly super important, and the European markets are wide open in terms of ATMs. No one's doing that yet. Prefs, no one's doing that yet. So that's very much a big opportunity. And on the asset side of the balance sheet, we see Bitcoin as an asset that is part of your balance sheet, but that you can also deploy to generate revenues/yields from, including lending, volatility strategies. So very much a Bitcoin finance company. And I would say the last opportunity, my own background is in special situations investing. And certainly in this space, we think with a lot of multiples below NAV, there's consolidation opportunities.
Interesting. Michael, how do you view your balance sheet? I think you have the largest balance sheet on stage currently. What's the benefit of 9,000 plus BTC moving forward? What you can do with it, how you can earn? How do you think about that?
Having a very robust balance sheet, I think, is ultimately important to be able to ride through volatility, especially as a company that has CapEx investments. But the way that we view our CapEx investments, which is really in the ASICs, it's a hard asset infrastructure that produces Bitcoin. So we really look at our operating business as how do we best leverage Bitcoin, our common currency that is the baseline of our treasury, and how do we use that to further enhance a yield on further Bitcoin production. So we leverage our existing Bitcoin stack to be able to operate ASICs, to be able to create a return on Bitcoin. I really see our job as a management team, it's really in how we capital allocate. It's how we allocate capital and how do we make favorable returns that increase the Bitcoin per share ownership for all of our shareholders.
Is that metric, do you think, starting to be more understood by investors through this cycle? What kind of questions are you mostly getting from analyst investors about how you're measuring that performance of Bitcoin per share?
It's not quite Google as of yet, but it is certainly becoming more understood. And I think it's a very honest and objective way to be able to measure a company's performance. Now, as a reminder, being intellectually honest with ourselves, the only benefit of buying an actively managed Bitcoin company over an ETF or spot is you are betting on the management company to increase your Bitcoin ownership per share. When you buy a spot or ETF, you buy one Bitcoin, it's always going to be one minus fees. When you buy ABTC or any of our other partners on the stage here, you're betting that your ownership per share of Bitcoin is going to increase quarter over quarter based on their decisions as a management team and how they allocate capital.
King, do you have anything to add there on?
Yeah. Also on how the markets develop, it's kind of interesting because obviously when Treasury started and people talk about valuation, as public market investors do, it was all about MNAV, which it still is. But the original MNAV definition was kind of a little bit warped, and it's changed, right? Treasury announced new metrics, but it was basically the enterprise value being market cap plus debt divided by the Bitcoin value, which means that as the company added debt, the MNAV would just go up. And now they're using a net metric, which means it's market cap divided by a net Bitcoin value, being Bitcoin value minus debt. And the same for Bitcoin per share. So we've gone from gross measurement to net measurement, which is, I think, also a much more honest metric in terms of measuring that. So companies have to manage their balance sheets well to increase it. And that's the KPI, Bitcoin per share growth.
KK, anything specific on the Korean markets and how investors and analysts in Korea view the metrics to track for a Bitcoin accumulation vehicle like Bitplanet?
Yes, I think, yes, the numbers and the valuations are very important as well. But I think the general public awareness, the recognition, and understanding of the whole Bitcoin itself is something that we really need. I mean, I sit on a board of one of the largest financial group in Korea as an independent director. I seldomly have, most of the time I have hard time explaining about the Bitcoin to my board members. and they are actually keeping distance from me whenever I bring this digital asset, or they call it virtual asset. So I think the awareness, the recognition, and the proposal that Bitcoin as the ecosystem is also very important to actually be implemented rather just than focusing on the numbers and the evaluation of it itself. So that's something that I would like to stress.
Yeah, if I may add to that, it's interesting because clearly if you, as a company, talk to potential investors, you got to convince them of three things, right? That's why it's also kind of a challenge still in early stages. One is Bitcoin as an underlying asset. They got to believe in Bitcoin. Then two, they got to believe in the Bitcoin Treasury model. And then three, why your company, right? So it's like layered. It's very different from selling a chemicals company, which is kind of straightforward, been around for hundreds of years. It's a new business model, which is creates new challenges, but also makes it interesting, and still means we're still also early, right, in this regard.
Absolutely. Michael, American Bitcoin. We're here in Hong Kong. How does American Bitcoin view kind of the opportunities around the world that have developed as the companies that are the best operators kind of rise to the top of kind of the successful miners? What opportunities do you see out in Asia, around the rest of the world, partners?
Bitcoin is a global market. We see everyone potentially as a partner, a shareholder, a friend in the space. We're constantly looking for opportunities. Again, for us, it really comes down to being capital allocators with a Bitcoin-denominated balance sheet and how we can drive the best risk-adjusted returns against our treasury position.
And then KK, big trend in Korea this year. Some moves in the stock market based on new regulations. What kind of things are you all paying attention to when it comes to top-down policy and what that looks like moving forward for Bitplanet?
See, thanks for that question, because it was very important to survive in Korea this year. The equity index has actually doubled within the first half of this year. And they were focused in Samsung Electronics and SK Hynix. Those two stocks have outperformed like 2 times than index, meaning that all the other rest companies have lost their share prices throughout the whole first half of the year. And everyone had to focus on how to maintain their equity prices. So what we have done this year so far was that 5 things. First, we had to show the commitment of our management team. Second, we had to really show that there is liquidity in the market for the investors who are willing to do it. Third, we had to really present our business plans so that people could understand what we are trying to do. Fourth, because of the market cap of our size in terms of DAT companies in Korea, we couldn't really have institutional investors actually participating in purchasing our shares. So we had to find another group of investors who would be willing to buy our shares. And fifth, we had to really do the real good marketing on a weekly basis. We had to be on the presence of every single media presentation or news presentation, newspapers. So I think all the 5 things that we have done has paid off, and now we are seeing our equity prices from 1,001 to 2,600 as of today within a month. So that's how we survived this bear market.
Then King, y'all have been kind of in a listing process now and looking at different markets in Europe. Tell us about that timing and how maybe it's shaped out to be kind of a positive thing for y'all to be looking at this year instead of last year.
Yeah, so European market's obviously a large market, various countries, all one currency, and very little still happening in the Bitcoin Treasury space. So there's a couple of them, but the market is big enough and wide open, especially on the main exchange. We're looking to list on Euronext Amsterdam, which is one of the main exchanges, which means it has liquidity, options markets, ATMs, prefs, and the whole playbook. Regulatory-wise, Europe is known and factually lagging the US and Asia, in fact, as well. But the good thing is once it's there, it's sort of harmonized, and it goes a long way. So we had MiCA regulation last year come into place. That's been positive in general. And for Bitcoin Treasury companies, we're certainly positive. I think the last thing is the infrastructure. If you think about banks, custodians, institutional investors, the whole infrastructure, that's also, you can really see adoption increasing, which is a big positive. And obviously, the investor base is very large.
Good. Michael, I have to ask while you're here, we've seen a lot of headlines about Bitcoin miners pivoting to AI, selling their facilities in the U.S. For multiples of what they could have 2 years ago. If your goal is long-term Bitcoin accumulation and shareholder value through more BTC, how do you view that opportunity? Price of Bitcoin now versus what it's going to be in 10 years. Just tell us how you're thinking about that overall.
Well, this could be an hour panel on its own. It's true. You're seeing a lot of Bitcoin miners, not just unique to North America, but globally reposition their rack space that were originally used for ASICs for Bitcoin mining to a much higher monetizable use case, which is AI GPUs. I'll be the first to tell you this, but if you look at the multiples in the public markets, a megawatt of power for Bitcoin miners is worth roughly about $3 million. A megawatt of AI data centers without the GPUs, just the AI data centers on colocation, is worth $20 million. 20 million is far greater than 3. And that is why a third of the Bitcoin network were primarily US public miners, peers of ours. Majority of them are all in the process of pivoting or already have pivoted their rack space for AI customers. Now, once those machines come off the network and they sign these 15, 20-year AI data center co-located contracts, those ASICs are they're not easily finding their way back onto the network. And that is why in a couple seconds here, you'll see the network hash rate. I think it was 0.8 or 0.9. Now, we were above 1 a couple months ago. We're now starting to see a deflating trend on network hash rate because of the point that you're touching on, which is this is a global repositioning of megawatts from the Bitcoin network for AI. We've been in the power markets for a very long time. I've personally been on the ground looking at energy markets globally, the excess hydro up in the Arctic Circle, looked at geothermal in Iceland. We have a pretty good pulse on where global power markets are. And our other side of house, HUTs, we have a 300-person bench, a dedicated energy origination team, a dedicated development team, where I would like to say that we have a pretty good sense of most deals and most opportunities when it comes to energy and site access. Now, not all sites are applicable for AI today. If the site is applicable for AI, and AI use cases are now a lot more agnostic to latency and location, but they still need connectivity. And connectivity takes time to bring into rural areas. So there is still a sweet spot that we're able to develop sites, regions of low-cost power. We have some of the lowest costs. We have some of the lowest energy costs on the network. Our cost of mining Bitcoin last quarter was only $36,500. So in a market where we're seeing capacity constraints, we're still finding those silver lining opportunities of low-cost power at scale to grow our Bitcoin mining footprint.
KK, any insight into that topic in Korea and how Bitplanet is positioning around that trend?
Yes, I think a lot of, as Michael just said, a lot of hyperscalers are also having very good eyes into Korea as well as in Japan. And the opportunity is there. The government is willing to put $150 billion US into that sector as a national growth fund to focus on it. We want to be part of the infrastructure as well, participating in the ecosystem, where actually Michael and us could have a good start of a new relationship there too.
Good. if you're acquiring Bitcoin at half of current value, I think 39,000 you mentioned as your average price. How does a treasury company that's not on the production side compete with that when it comes to Bitcoin per share? Talk a little bit more about your plan to generate Bitcoin per share with kind of the financing angle that you mentioned.
Yeah, you can really grow Bitcoin per share two ways, right? One is obviously selling equity at a premium. That's the original strategy playbook, which works really well in the right markets. Two is adding leverage, and three is paying for that leverage with revenues on your Bitcoin. And the other way is buying Bitcoin below spot, for instance, by mining operations. And the way we're doing that is more in a, I guess, financial manner, which is consolidation. We're working with an investment bank to look at other treasury companies that are trading below NAV, are too small, and frankly have no reason to exist. So it helps everybody to consolidate. So that's an active strategy, which means effectively you're buying Bitcoin below spot if you buy those below NAV.
Yeah, and some of that M&A that has happened within treasury companies in Europe has been interesting to see. A lot of M&A in the kind of data center AI space too. Michael, what's your approach to M&A opportunities moving forward? What are the kind of the key things that you're looking at when it comes to the Bitcoin treasury piece, but also how you position to be stronger infrastructure-wise as the energy markets get more competitive also?
I think there's been a lot of discussion around M&A between treasury companies combining forces to get scale, but in practice, I think it's more difficult. When you have an acquirer that is trading above 1 MNAV against a target company that is trading at a discount to MNAV, it's hard to make the case to take another company's currency as opposed to simply just selling your liquid tokens to get up to par. There are transaction fees, there are shareholder votes, there are management teams with their own plans. I think this idea has been floated around for quite a few quarters now, but in reality, we haven't seen as much M&A given in execution, and in practice, these are some of the challenges.
And KK, we've seen, I guess, the companies that have launched in the last year in Korea with Bitcoin treasury strategies at the forefront. There have been different challenges around new regulation for those. Talk a little bit about how Bitplanet has been resilient in that and kind of the landscape of investable opportunities in Korea, what it looks like now, and how Bitplanet is kind of positioned for that moving forward.
I think last year when we started, we had two other competitors alongside with us. I think based on the strategies that we had to be recognized as the only one legitimate or credible company, that has worked out because we were able to participate, get relationship with the most prominent and promising, well-established local Korean counterparties. And I think, and also having all the first pass of transactions on every single Bitcoin treasury companies that we could have, we were able to really go through slowly but securely through the every single transaction that the regulators could feel comfortable seeing us. So actually ahead of the other parties. And I think we are gaining that recognition in the market and being seen as the sole DAT or Bitcoin treasury company in Korea.
Yeah, good place to be. King, maybe talk about the landscape in Europe a little bit more. Why Luxembourg strategic? Kind of the landscape there of other opportunities for investing in treasury companies where treasury sits.
Yeah, I think the landscape is still very wide open. Europe in general, Bitcoin adoption has been a bit less, but there's very clear product market fit for Bitcoin treasury companies. For example, as a European citizen, I can actually not buy IBIT ETF, right? So I want Bitcoin exposure in my easy trading app. The options are basically buy one of the US ones on the main exchange, but then you got the currency, you got the trading hours. For your tax reporting, it's more difficult. So to be able to buy on a main exchange, available in any app, a European Bitcoin treasury company, you get Bitcoin exposure is actually not possible at the moment. And for an institutional investor, if you're a European portfolio manager, which I've been actually, and you want to buy exposure to either digital assets or a high vol, high upside kind of stock, also very hard to get, right? MicroStrategy's option volume is double the 3 largest European option contracts combined, of all of Europe, right? To give you an idea. So Europe really lacks the kind of features that a Bitcoin treasury company stock offers.
Wonderful. So Access in Europe, the Seoul company, treasury company in Korea,
Yes.
acquiring Bitcoin at half current value. I think we have some interesting advantages here with treasury companies that will be continuing to operate the treasury side along with operating businesses, and I think we'll be around for a long time. Thanks, guys.
Thank you.
Thank you.
In the main hall. And if you haven't heard of digital credit before, please listen carefully to our next speaker. Here to deliver a keynote presentation titled Bitcoin Scales at the Speed of Trust, Digital Credit and the Next Capital Market is the Chief Risk Officer of Strive, Jeff Walton.
All right, thank you. Woo, okay. We've got a crowd, we've got an MBA-style intro, and I've got a fun presentation for you all today, and we're going to be talking about how Bitcoin scales at the speed of trust. Okay, let's jump into it. So I'm going to start with a little bit of background about myself. My name is Jeff Walton. Prior to working in Bitcoin, prior to working at Strive, I was a reinsurance broker. So as a reinsurance broker, I sold insurance to insurance companies. And that was to protect the volatility of an insurance company's balance sheet. And there was a situation, I had left my prior job and I got hired by this company called Vestu. And Vestu was this like really fast growing company, and they were starting to write a lot of reinsurance business, and I was super excited to go join this company. And I got a text message from my old boss, and it was Vestu under investigation by the FBI for a $4 billion fraud. This was the largest fraudulent event in the reinsurance capital markets history, and it turns out that they had $4 billion of fraudulent paper collateral. The collateral that they had posted in the market was fake. There were actors, and this company had been fraudulently operating in the financial markets for years. And at that moment, Bitcoin slapped me in the face. It was one of those, oh my gosh, Bitcoin is transparent collateral. You can see it, you can verify it on chain, and this is going to completely transform the entire market. At that point, I was already a Bitcoiner. I was following along what Strategy was doing, but I really identified that I need to go work in Bitcoin, and that's when I joined Strive. So I joined Strive last year, and as of today, we have 21,356 Bitcoin, and we are filing 8Ks every single Monday, and you can see our balance sheet and see how we're scaling it and growing it over time. So let's go to the next slide here. Okay, so last year, I was on the stage and I was talking about, this is the biggest story in all of Bitcoin. And here I am today talking about the biggest story in all of Bitcoin. So last year, Strive was really just an idea. We had about $750 million that we were trying to put into a publicly traded vehicle. And as of today, we have about $1.95 billion balance sheet, and the price of Bitcoin over that same horizon has gone from 111,000 to 79,000. So the price of Bitcoin's been down about 26%, yet our balance sheet has increased by about 160%. So why did that happen? Let's see here. Well, the last week that we had in Bitcoin was absolutely electric, right? The price of Bitcoin was rising. We were seeing the equities that were trading around Bitcoin was rising. We were seeing the digital credit instruments start to trade up to par, STRCs rising, and SATA was trading within a single penny. And so in the capital markets this last week, we raised about $100 million. We purchased about 1,100 Bitcoin, and we brought our Bitcoin holdings from 20,000 to 21,000. Now, I'll direct your attention over here on the right side of the slide, and you'll see our common stock, the equity, the orange line, was up about 72% last week. And we have our perpetual preferred equity, SATA, which was flat. Meanwhile, Bitcoin is up about 25%. So what we've done is structured finance. We've effectively taken our Bitcoin balance sheet and structured it into two tranches, a senior tranche, the low volatility perpetual preferred equity, and then the junior tranche, ASST, which is the more volatile, high performance common stock that trades relative to Bitcoin. So what are we doing here? This is so this slide here is capital holds securities and not keys. So like, why are we going this fast? What has caused this environment? And the fact is, companies or capital, when they want access to capital markets, they want somebody else to take care of the investment for them. For example, a pension fund, if they want to invest in real estate, they're not necessarily buying the piece of real estate and managing the property and finding the renters and maintaining it. They want to buy a company that's doing all of that work for them. Same with gold. If there's a person that's got a lot of money and they want gold exposure, they're not necessarily going to buy $50 million of gold and putting it into a vault at their house. They want somebody else to take care of that for them. Same with a factory or like making iPhones or Apple. And what we're doing is very similar. It's just with Bitcoin. And we are taking in capital from investors that want Bitcoin exposure, and we are custodying the Bitcoin, we are managing the security, we are managing the dividends that we're paying on our senior perpetual preferred equity, and there are investors that are interested in both of those types of products. And so what we've done by creating these two instruments is we've created exposure that investors can't necessarily get by themselves, and we're identifying pools of capital that are interested in Bitcoin exposure that have never been interested in Bitcoin exposure previously. So how do we know this works? Well, we've been following the leader. The leader is Strategy, and about 6 years ago, Strategy had a $917 million balance sheet. Since then, their balance sheet has grown, and as of today, it's actually about a $73 billion balance sheet. And what we identified over the last 6 years is they were providing access to Bitcoin to people that didn't have access to it. They provided exposure before the Bitcoin ETFs existed, and then they provided perpetual leverage exposure to Bitcoin, and now they've got the digital credit instruments, which we're following, which provides a credit income style exposure to Bitcoin. Now, a couple of data points to show you how crazy this is. So Strategy, their balance sheet increased 75x in 6 years, and they've now got a $70 billion balance sheet. Lloyd's of London, which is the oldest insurance company on the planet, the oldest insurance consortium, they have about $50 billion, and they've been acquiring capital for about 300 years. And now you have a company that's adopted digital capital, and they've got $70 billion of capital, and they've 75x their balance sheet. Why? It's because they're providing solutions to getting Bitcoin exposure that fits investors' needs. So naturally, we followed the leader, and we created a digital credit instrument ourselves. So we created SETA. For those of you who are unaware, this is a senior instrument that sits in our capital structure. We are paying 13% annually, and the dividends that we pay are paid daily. We are the first company in capital markets history to pay a daily dividend. Now, what does that mean? And we think this is a really big deal. The fact that SETA is paying a daily dividend, we've built this instrument not only for humans and people and pension funds and all of those things, but we've also built it for computers. As we are moving and transitioning to a much more digital age, computers become more a higher proportion of the entire trading in the entire ecosystem. So why is that important? So one, it changes how investors experience credit. One, you get paid every single day as opposed to once a month. Once a month has been the standard it's been the standard dividend cadence for about 40 or 50 years, and we are changing that. Now, also, a daily dividend changes a risk profile for any trading environment. The other instruments that are out there that pay at a high frequency are money market funds. Money market funds accrue interest daily, but they pay out monthly. And this changes how investors may park capital overnight or interact between other instruments. And this will be all automated via AI. And lastly, future credit will be benchmarked against perpetual preferred equity with a risk profile of assets that are already on a balance sheet. And so what that means is when there are new companies that want to go to market and they want to issue credit in order to bring in capital to operate their business, they're going to have the opportunity cost. The investors are going to think about the opportunity cost and the risk-return difference between the investment that's in front of them and these perpetual preferred equities that are paying a daily dividend. These are big ideas. These will develop and evolve over the next 36 months. Also, very few companies can do this. So I've got a list here. There's about 5,900 publicly traded companies across the NASDAQ and the NYSE. And there's about 805 that have 2 listed securities. And of those 805, there are 14 that have 2 listed securities and ATMs, the ability to raise capital on top of them. And then of those 14, there are only 2 companies that have 2 securities and ATMs with greater than $1 billion shelf ATM on top of it. And so there are very few companies that have this type of business model, and it's really strategy and strive at the moment. So why do we have a $1 billion shelf ATM on top of this? Well, it's because the instrument itself is incredibly liquid and very interesting as a trading instrument, as I've outlined over the last couple of slides. And what this slide is really showing here is, on the left-hand side, this is comparing the peer perpetual preferred equities in the market compared to SETA on an average daily liquidity. Average daily liquidity for our peers is about $200,000 a day, and for our instrument, it's about $15 million. Now, on the right-hand side, this is showing the turnover. So this is the average volume on the security relative to the shares outstanding. So it's how much does the security turn over relative to the market cap. So this is a liquidity measure. And our instrument is about 2% liquidity. That means for every about 50, 60 days on average, the entire market cap is turning over. Why is that important? That's important because if you want to get in and out of the instrument in scale, having liquidity impacts how much the price moves when you get in and out. So significantly more interesting, significantly more liquid than the pure perpetual preferred equities. Why? Because the Bitcoin on our balance sheet can be calculated, the risk profile can be calculated 24/7, 365. So I've explained SATA. Now let me explain our common stock ASST. So SATA, what we do is we're taking the Bitcoin exposure on our balance sheet and we're chopping off the risk and we're chopping off the return. There's no upside in SATA. We're paying a 13% income annually. Now, where does the excess volatility go? It goes to our common stock. There is a conservation of energy in the universe. It doesn't just disappear. That excess risk return, that excess volatility goes to our common stock. So I'm going to bring this slide back up, and you could see ASST, our common stock, is experiencing significant volatility, and it's capturing that excess volatility that we peeled off of SATA. ASST is up 72%, BTC is up 24%, and SATA is effectively flat. So this is structured finance. Now, ASST is really for the bullish Bitcoiners, but it's also for trading environments where market makers are using the instrument to hedge Bitcoin in multiple different directions because it provides a perpetual leverage exposure to Bitcoin without liquidation risk. We do not have any debt on our balance sheet, so there's not a situation where, there's not a price point where we would be liquidated or any of our Bitcoin would be liquidated. So if you're buying the common stock, the perspective is you have perpetual leverage on the underlying Bitcoin on our balance sheet. And the market's already voting. This is really the last week. The price of our common stock is up. We've increased our Bitcoin holdings by about 5% last week. And we have been growing incredibly quickly. We started our journey back in September last year. We had about 5,000 Bitcoin. And as of today, I think we were one of the fastest growing balance sheets on the planet. Not just fastest growing Bitcoin companies, one of the fastest growing balance sheets. So this kind of brings me back to my theme here. So corporations are trust extension technology. Trust is humanity's oldest technology. Trust has been around longer than money, longer than communication. It was how civilization has really scaled in the world that we know today. Now, when you look around here, there's trust everywhere. When you're walking down the street, you trust that the cars are going to stop at the stoplight. There's protocols everywhere you look. And that's really the old system, right? The banking system is trust built on top of the currency that the government provides. And that banking system is very opaque. There's additional costs associated with the banking system, and you can't really understand or calculate the risk profile of holding your assets at a bank. It's really just you're trusting that if I need my assets, I can go get them. Now, what we're doing, and what I would argue that every company in this entire room is doing, is building trust in the entire ecosystem. It's just built on top of a more transparent asset being Bitcoin. And this is important because we file a SEC filing every week, and you can understand how our balance sheet is moving, and it's super transparent compared to a typical corporation or a typical credit instrument. If you're an investor and you're buying a credit instrument, you have to rely on quarterly SEC filings that are already a month stale by time you get any financial information. So it's very difficult as a risk investor to understand what the future exposure is to a credit instrument. So we think this is changing how investors are utilizing instruments. And that brings me to the end, really. So Bitcoin scales at the speed of trust. We think we are really developing the trust ecosystem. We are filing SEC filings very frequently. You can see how the price of the securities are trading. And yeah, that's really the story. Thank you for coming to my talk. I appreciate it.
Welcome back into the live news desk here at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, and now Sean Owen, CEO of Salt Lending, joining us here. You guys spoke on the panel earlier today. Great job, by the way. I want to ask you, Sean, because you got into Bitcoin in 2011. I think you might be the earliest person to Bitcoin we've had on the desk all weekend. What was the moment that convinced you this isn't just tech curiosity, this is real?
Yeah, I think actually it's hard to pin an exact moment because there was so much around Bitcoin that as soon as I started thinking about it, it was like a mind virus of this is amazing. From the obvious things, I think at first you hear about it as maybe digital gold and this scarce idea, but at this time it was when you could mine it on your computer and run a node of just a wallet that you could imagine that was open and permissionless. That was amazing. And then, the idea that you could get paid for running this and validating with no middle person in the middle was also amazing. And so it was kind of just a explosion all at once that never stopped it really still hasn't.
And Sean, one of the themes we talked about on the panel was kind of this, how quickly is the looming sovereign disaster developing, and will it happen, and how does Bitcoin react? And we're obviously coming out of a bear market. People say that this kind of sovereign crisis will cause a super cycle, which you've all heard before. Probably not the case. Obviously, it's a factor you have to consider. But it brings up a point. When it comes to products like Salt, and it comes to lending, and it comes to bringing your Bitcoin out of just being a number on a balance sheet and unlocking that capital, as we're changing the seasonality that Bitcoin's in right now, how should people be thinking about their strategies around lending based on their Bitcoin? Does it change from bear market to bull market?
I actually think that, I probably sound like a broken record to some degree because taking the position that Bitcoin is forever money and you should never sell it no matter what you have to do in order to hold on to it, you will have to eventually sell some. But if you can stick to never sell your Bitcoin, you should as a principle. That it changes the perspective. So I care a lot less around the exact price at any point in time. I think looking at the price is a lagging indicator that can be deceiving, and yet it does tell everybody something interesting all the time. People want to talk about it. And so our panel earlier today was really kind of interesting, right? Because you have one perspective of we're 3 months away, and then maybe the next one is saying, no, we're 3 years away or 30 years away. I tend to just blend it out and think that the principles of Bitcoin are true, no matter if it's a year, 10 years, 100 years, which it just all comes back to a long-term horizon.
And just very simply, let's say I'm a 4-year cycle enjoyer, right? Why would I not say, okay, I think we're near the bottom. I'm going to put my Bitcoin as collateral now because I think that CAGR is going to outperform kind of asymmetrically over the next 3 years.
Well, yes, that's probably not a bad idea for people who can sense that or feel that or have the opportunity to. It's just also important to recognize, just like dollar cost averaging is very good for a lot of people, or going into index funds is very good for people. If you don't have all the time in the world to try to figure it out, then sometimes it's better to not worry about it and just get started wherever works, whatever suits you, today, rather than thinking about the price or trying to time the market.
Sean Owen, CEO of Salt Lending. I'm sure we'll see you on BMTV coming up September 14th, right?
Yeah,
Salt
very excited about it.
Okay, awesome. Well, thanks for your time. We appreciate it.
Thank you.
Let's go back to the Nakamoto stage now. Our own Tyler Evans of UTXO Management and Metaplanet's Dylan LeClair, and more on how to generate yield on Bitcoin holdings.
Let's go. Treasury bros in Hong Kong. Okay, so we're here to talk about generating yield on your Bitcoin. And yield became a very dirty word in Bitcoin after 2022 when BlockFi, Celsius, many others blew up. So how do you think about generating yield on Bitcoin? And I think we should probably go down the line here because I think you'll all have slightly different ideas on this.
Well, it's a complex topic, and I think maybe to couch the discussion a little bit, there is no such thing as free lunch in Bitcoin yield and real yield, and so it's all about what risk you're taking to generate that incremental yield, and whether you can understand and underwrite and manage those risks that come along with it. And so, when you look at the market more broadly, I'll let Sean talk about Lightning and what they're doing, but most of the yield strategies we see are really out of the derivatives complex around Bitcoin, especially on the volatility side. And that's where we're most active today.
You want to talk about Lightning?
Yeah, I can talk about Lightning. So we're a Bitcoin Lightning Network company, and for those of you who don't know what that is, that's Bitcoin's layer 2, where you can send rapid-fire transactions in milliseconds that can handle massive scale. We have systems in 17 countries, and what it is you have a series of nodes and channels. A node is just a server somewhere running in the world, running open-source Lightning Network software, and you establish payment channels with other node operators. Anybody can hop on this network. Anyone can participate. We just happen to do it at scale with a public company, and we've raised money through equity, and we put a Bitcoin to work on it. Now, when you send a transaction over that network, you actually pay a small amount of fees for the number of hops it goes through. And it kind of works like internet traffic, where if you're going to go to google.com, your traffic will go from hop to hop until it gets to its final point. In this case here, you pay for every hop it goes to. And that's how we earn yield. And we're starting to see that yield expand because we're seeing the traffic on the network climb as the softwares become more mature, and the network is poised to grow quickly.
Yeah, I think there's a lot of, as Tyler said, there's a lot of different references to yield, right? Particularly Saylor coined the term BTC yield for the growth of Bitcoin per share on common stock. There's also derivatives overlay, so call strategies, put selling strategies, other sophisticated options. For a while in 2021 especially, the leading form of yield was the futures contango, right? So Bitcoin's trading at say 100,000, futures is from a few months from now is trading at 110,000. There's a spread there that is risk-free or delta neutral in dollar terms, right? So you're not taking Bitcoin risk. So there's all those sorts of yields. I think I would like to invert the question or invert the framing a bit. I think the biggest TAM for Bitcoin yield and Bitcoin back yield is not issuers or managers of Bitcoin, kind of trading derivatives or putting on trading strategies. The biggest TAM is there's $300 trillion of fixed income in the world, and it's all based on fiat credit instruments. And so if Bitcoin's going to win, if we're going to take this thing from $1 trillion to $100 trillion and 100x or more, the real game to play is how do you build the bridge, right? And so how do you bring the credit markets to Bitcoin? How do you bring capital pools into Bitcoin that would never touch the asset otherwise? And so at Metaplanet, we're really focused on this. We just acquired Metaplanet Securities, formerly SIBO Securities. It's a brokerage firm in Japan, and just issued our first series of BIT bonds. Right, and so this is a standard corporate bond, but in Japan yields are 1%, right? And so we offered a 4% yield backed by our $3.5 billion balance sheet, and to Japanese investors, there's no other credit instrument that's giving you 4%, right? In dollar terms, you hear 4% and you say, well, that's what the Fed pays me. Who cares, right? But I think the real thing to understand is there's pools of capital all around the world that will never buy Bitcoin. They won't buy Bitcoin stocks. They won't buy Bitcoin instruments. They'll never buy Bitcoin ETFs. So how do you meet them where they are and provide them with a return that is backed underlying by Bitcoin, but isn't Bitcoin itself?
So I definitely do want to come back to that, but I just want to start with you, Sean, because you're running a Bitcoin Lightning node. You're routing transactions and taking the fees from that. How do you how do you evaluate the risk that you're taking there, especially with the things we've seen like in Core Lightning recently? Like there is a risk on the Lightning Network with locking up funds there. And I don't know exactly the percentages you're generating, like 8-ish%, something like that?
Yeah, in terms of yield, we're looking up between 3 and 6%. It really varies depending on volume. But in terms of risk, and that is the right question to ask, we have a good chunk of our Bitcoin in custody as a public company. We chose to use BitGo for the number one reason that our auditors liked it. And that's a very big deal for a public company. You have to have your auditors on board. And so we've also managed to set it up where the auditors are able to audit our Lightning nodes. But there's the security risk and the software risk where you have things out there, where you have a portion of your Bitcoin out there. Yes, it is non-custodial, but there's always going to be technology risk. We think that's very well managed and it's under control and going to get stronger over time. But one of the things what we did, and we went public in 2021, before that sort of Treasury push, because we needed Bitcoin to be on the Lightning Network. It's a technical requirement. You must have Bitcoin on the channels. So our goal was to simply get as much as we possibly could. But one of the things going through this last Treasury cycle is that we looked at ourselves as a Treasury 2.0 and maybe reclassifying things for our shareholders and reframing the Treasury story as to not just MNAV, but BNAV, Bitcoin NAV, and then having other products like LNAV, Lightning NAV, or credit products C nav or derivative products D nav, and start to frame them up and create a base where from there we can potentially build future Wall Street products that they can understand, to your point, Dylan.
And is that lightning yield that you can generate running a routing node, is that a temporary thing? Or do you think this is like a race to the bottom on fees, and as this grows out, they'll get crushed? Or like, how do you look at that?
Yeah, I mean, certainly the fees are competitive out there. It is a volume game. So what you want on the Lightning Network is you want to see continued growth. And you're going to earn yields that'll be in line with a money market fund. And so what we're looking at down the line here is it's a liquidity-driven network, and you want to have as much Bitcoin on there as you can. And we're seeing triple-digit growth. We've seen it go from 10 million a year to 1.2 billion in transaction volume, and climbing quickly as the software iteratively gets better and it gets more and more out there. And now you have stablecoins are going across Lightning Network, but Bitcoin is still the marker. So and AI is going to use it as well. So once you get that volume, then you actually have the need for as much Bitcoin as you can. And one of our future ideas, which would have to pass regulatory scrutiny, is to create a bearer bond. And so it would be an LQWD bearer bond. You could send your Bitcoin in, you get the tokenized bond. It'll be actual security, and if you can choose to redeem it and get the yield off it, or you can trade it on secondary markets, effectively becoming a bond for Wall Street. This is some future stuff there. We didn't dare breathe about that 4 years ago under going public, but these are the kind of stuff that we feel is going to come out there.
Yeah, it's very cool. So back to what you were saying before, Dylan. Did you say there's $3 trillion out there that could potentially come into these credit markets?
I said 300 trillion.
300 trillion. I was only off by two orders of magnitude. So how do you get that? Because I know, like Fong Lee, the strategy CEO, he came out and said that in terms of the people buying their products, it's still 80% retail. Like the institutions coming is kind of a meme for now. Like we've not actually seen it in a great deal, in a huge quantity. Like how do you get that to come to Bitcoin?
Yeah, so I think what is the purpose of a public company or a company in general, right? Because for the longest time, Bitcoin was driven by individuals, and it still is an individual self-sovereign movement, right? But what is the role of a company like Nakamoto or Metaplanet or Liquid, right? And the role is we can issue securities that have different risk-return profiles relative to Bitcoin itself, right? So Bitcoin is 50% volatility. The reality is, and I've spent a lot of time, as everyone has on this panel, trying to convince people to buy Bitcoin. Most people don't really enjoy a 50% volatility roller coaster, right? The bull markets are really fun. The bear markets aren't really fun. And so how do you find that capital where they are and design instruments that match what they do, what they need to buy, right? And so most of the capital in the world of that 300 trillion has mandates. They have legal mandates, regulatory mandates. They need an instrument that looks, feels, and acts a certain way, right? So, convertible bond buyers will never buy Bitcoin. Pension funds will never buy Bitcoin in cold storage in a wallet under their desk. Maybe they can buy IBIT, or maybe they can buy a common stock security, or maybe they can buy a preferred stock, right? And so it's designing these sort of instruments. I think I'm gonna pass this to Tyler shortly on because I want to hear his. I want him to explain the preferred strategy at UTXO. But Saylor is designing something really innovative and interesting with Stretch, right? Which is we're going to give you a Bitcoin-backed asset, but we're going to strip off 90% of the volatility, right? But it's still not perfectly stable, right? There's still this sort of risk, mark-to-market risk. There's liquidity risk, execution risk, all of the like. It still trades, right? So it's still not a stable asset. And so Wall Street for a long, long time has tranching risk return, right? Creating the same basket of securities, you can create junk bonds, investment grade bonds, and a very full spectrum of higher yield, high return, low return, right? And low risk, high risk. And so for a Bitcoin treasury company, how do we go get that money? How do we go raise that capital? How do we plug it into the Bitcoin network? It's stripping off risk, stripping off volatility, and meeting them where they are. And I would love for you to talk a little bit about what you're doing with UTXO.
Well, I think that's exactly right, and credit to kind of Saylor for pioneering this model, and Strive and the companies that have followed in their footsteps. I think it's cracking that institutional barrier is really about translating these novel class of financial instruments into the very specific buy boxes or lanes that these institutional allocators are comfortable with, that they can understand, that they can get through their risk committee, that they can underwrite. And so while the digital credit products have made huge progress in 1 year. I mean, Stretch is only 1 year old here in August. I think one of those things is just track record. A lot of these fixed income allocators need a 3-year track record or a 5-year track record before they'll even consider allocating to it. But another big factor is credit ratings, and I think we've seen Strategy make some significant moves and progress in terms of their corporate credit rating and trying to make their products appeal to the credit rating agencies like Moody's. And then the third thing, and this is kind of one of the problems we're trying to solve with this new financial product at UTXO, is really packaging it into a duration curve. And so while some investors may love a perpetual instrument, and a perpetual instrument is absolutely the right choice for the issuer, like Metaplanet or Strategy, a lot of these fixed income allocators, like an insurance fund, has a defined lifetime or term where they need to pay out their insurance benefits. So they need a 1-year bond or a 5-year bond or a 10-year bond or a 30-year Treasury equivalent that has a principal repayment period and a fixed duration. And so that's kind of the next iteration that we see this digital credit market undergoing, is like the further transfiguration to fit these types of really corporate bonds that fixed income allocators are used to buying, and that they can underwrite in their existing mental frameworks without having to necessarily understand Bitcoin.
So is your plan there then to package these perpetual preferreds and give them a duration and then sell them to the market?
Exactly, and just like Jeff was explaining how you can chop the volatility and shift risk around between different asset classes, this is kind of one of the oldest tricks in Wall Street books. The same way that Wall Street packages auto loans or mortgages or mortgage-backed securities into different risk capital pools that have different returns, different collateral requirements that are taking different levels of volatility. And so just as Strive takes Bitcoin and securitizes it into 2 different tranches, we think even within those tranches, there's a whole set of different layers that each appeal to a specific type of buyer.
Okay, I've got a question. Anyone feel free to jump in on this one, but obviously a few months ago, Stretch and all the perpetual preferreds went through a really tough time, traded way below their par value. At any point, did you look at that and think this could become like an existential risk and this might be over?
I never thought it was existential. I thought that the market had legitimate concerns about liquidity and the funding markets, and Bitcoin was obviously not performing well, teetering at 58,000. So there were concerns. The concerns were addressed. I think having seen 2022 play out, right, and having seen a few Bitcoin cycles myself, I think when consensus is 100% sure, you have people that spend their entire life, being obsessed with Bitcoin and crypto. And when the consensus among that community, or 50% of those people, are saying the biggest Bitcoin holder is done forever and the story's over, the bears got a little ahead of themselves, I think, right? And so there was some, in my opinion, and I've said this, I think there was some slight mismanagement on the convertible refinance and some of the liquidity. It's been addressed. They've came out. They've said to the market, okay, we're going to amend this. We're going to segregate the dollar collateral or the dollar reserves. I think the pref credit spreads have naturally reacted to that very, very well, right? And so, it's probably going to be a week or two, and we're going to see Stretch back at par, and the machine's humming again, right? And so, I put out a tweet. Saylor said, "What's next?" like 5 weeks ago, and I said, well, probably bears run out of coins, Bitcoin goes up, the pref credit spreads tighten, the engine hums, and all the skeptics are screaming into the void, right? And so, that's what we've basically seen. We've seen this kind of every 4 years. We'll probably see it again, to be frank. I wanted to add just one point to Tyler's point on tranching the risk and return even further. Digital credit, as these perpetual preferreds are called, are technically equity, right? They are equity classified. And so, one of the things to step these instruments into something that the $300 trillion of fixed income can actually target is actually making it a credit product, right? And so you can package these preferreds, slice them up, chop them up, and create term debt, right? Investment grade debt, junk grade debt. You can get a rating on these, right? There's, Ledin, for instance, took a pool of retail Bitcoin-backed loans and created an investment grade or a rated credit instrument that Wall Street could buy, right? So it's possible to do these things. I think a lot of the Bitcoiners, see Wall Street as some existential enemy, not an ally in the fight. And I think that's the wrong framing, right? If we're going to take this thing up 100x, we're going to need capital, right? And so let's go to the capital centers, let's find the capital, let's attract it, and let's plug it into the network. And that's, I think, what we're all working on.
Sean, were you going to jump in there with something?
I was going to say, certainly, the last few weeks, seeing the end of there's nothing like a bull market to paper over mistakes we made during, the last run, right? And so, for companies and public companies, we did our best to learn from our past mistakes, and we didn't get over our skis during this last run, because you only make mistakes when things are going good. But certainly, the bond market, I love that. That's really a credit nav, and that would fit into that whole BNAV narrative. And I like the reframing on that, and I think it's very powerful. The way that it's going out there. So these are the kind of products and services. For Wall Street is not the enemy; they're just there. Bitcoin is this morally agnostic trust network that extends the very capabilities of the internet. Money and finance is its first use case. It'll be used for many other things, and effectively, what we're dealing with here is a continuation of the revolution of the internet. And we're changing the way that trust is done around the world. If you break down what is Bitcoin, at the end of the day, it's trust. It's a trust layer, and it extends the 7-layer OSI stack of the internet. And and it's going to be used for many other things. And I remember back in the day where internet maxis, and there were internet maxis, and you couldn't use university lines for commercial goods, and if you put an ad on your website, the community would call you out, and it was toxic. But eventually, the commercialization came in there too, and it was used in ways that they didn't like, and it didn't matter because the internet itself is a morally agnostic network. Bitcoin is a morally agnostic network, and it's an incredible computer science breakthrough. It doesn't care who you are, what you do, where you live. It just simply runs. And it's going to be used in ways you may not like, and Wall Street's coming. Whether you like it or not, it's here, and the world has turned, and we're inverting the financial system as we speak.
So Tyler, I want to ask you a question. So in 2020, when Saylor first started sort of pioneering this playbook, everyone was saying the institutions were coming. And sure, we got Tesla and Block, and there were a few other companies that put Bitcoin on the balance sheet. And then a few years ago, when that was again the narrative during the bull market, that institutions were coming, and maybe institutions were here. But in reality, let's say you take the strategy numbers of 80% retail, still not really in huge numbers. Do you think in the next few years that's when we're really going to start seeing institutional adoption?
I think we really kicked off this institutional wave with the launch of the ETFs in the U.S. And I think that was a process a decade in the making. All the way back to the Winklevoss twins and their first try under the Gary Gensler administration. That was the opening salvo, if you will. What we've seen is incredible success with the ETF products. Most successful, fastest growing ETFs in Wall Street history, which one should say something about Bitcoin. But was really just the opening salvo. And we've seen a lot of those institutions crawling, walking, starting to jog their way into Bitcoin. But as cliche as it is, we're just early. And there's still a lot of career risk attached to pitching Bitcoin as an investment product. There's still a lot of plumbing and infrastructure, especially to touch spot Bitcoin or physical Bitcoin that these banks and their mainframe legacy systems are trying to integrate. And there's the process of just building trust if they've only been paying attention to the asset class for a couple years. And so it's actually very encouraging to see what's happening on that side. In a bear market, none of it gets the headlines on the Wall Street Journal or the attention that it would have last year. But even amid this drawdown in Bitcoin prices, we've seen just incremental progress from some of the largest institutions in the world, like Vanguard and Charles Schwab and Morgan Stanley, that have all launched new Bitcoin products or announced new Bitcoin features over the past 6 months to very little fanfare. But they're coming. It just takes some time.
If I could add a bit of color there, I think Bitcoin's price does a lot of the work, and we prescribe narratives to it, both on the downside and the upside, right? And so, for an example, and I won't say who or where, but over the last couple weeks, we have meetings all the time with various investors. Oftentimes, the investor isn't even a Bitcoin investor. They don't own, they're not an investor of Metaplanet. They just, that's what you do as a public company. You go tell the story. You have investor meetings, even if they're a skeptic, right? And so, this particular investor runs, billions and billions of dollars of capital, and he basically said, yeah, I'm really into Bitcoin and I believe in the 4-year cycle, but frankly, we can't be in anything but AI bottleneck trades and the memory and GPUs and the whole hyperscalers. Like, it's basically career risk to not be in those trades, right? And so, this ebbs and flows. There are cycles, and probably some point in the next 24 to 36 months, there's going to be career risk if you don't have a Bitcoin position on in your hedge fund, right? Or if you don't have Bitcoin exposure in, whatever asset manager or vehicle it is, right? And so this is just how it works. I think, also the crypto people, the Bitcoin people, we're often used to, every cycle has a new narrative, right? And so, it went from individuals, and then there was kind of, the venture capitalists and the macro people, and now the corporates, and people are saying, well, what's next? Logically, it's countries. And of course, that could be true, but I would say this. It doesn't need to be, sovereigns next and the corporate cycle already passed. There just could be marginally, we go from 1% corporate adoption or 0.1% corporate adoption to 1%, and that's a 10x, right? And so, to Tyler's point, it's really early. $1 trillion is a drop in the bucket. I don't even know how many trillion-dollar companies there are these days. But, NVIDIA is trading at a market cap of 100 million Bitcoin, right? And so if this is global money, and we're directionally right on the thesis, then it's remarkably early.
I think to add to that, I totally agree that number go up fixes a lot of these uncertainties. But I also think, if the bottom is in with Bitcoin, and who knows, 50% drawdown is also going to be really good. It shows the asset class is maturing, I think. If you look ahead now, Bitcoin looks like it's bottom. We've had a really good few weeks. What do you think is going to happen to treasury companies? What does a bull market in treasury companies look like now?
What do you think, Danny?
My skepticism is, I don't necessarily think we're going to see, in the last bull market, Metaplanet traded at 7x MNAV. Was that about as high as it went? I struggle to see it going back there, but I could be totally wrong.
I think, the misunderstood thing is that for a treasury company or a company with a balance sheet of, say, Bitcoin and, say, preferreds or debt issued against it, MNAV doesn't need to absolutely rip for them to be screaming home run performers, right? You can model it out. MSTR, let's just say, just because they're the biggest, can stay at 1x MNAV for an entire bull market and absolutely crush the performance of Bitcoin. So I think there's a notion that you need this, multiple expansion. Of course, that helps, and that pours gasoline on the flames, right? And it allows the machine to spin faster. But the preferreds have really only seen a bear market, and so people have prescribed this narrative that they're parasitic and extractive, and the cost of capital is too high. No. Watch what happens in a Bitcoin bull market, and these things are going to be screaming home runs just because of the embedded capital structure leverage, right? And so, yeah, I think you could see an MNAV expansion in a mania, or crazy things happen in bull markets, right? But what's the fair value of a company that can consistently grow its business and its Bitcoin per share and grow its assets? Well, most investors on Wall Street put a multiple on it, right? What is that fair value multiple? That's anyone's guess, but.
I think the risk is actually to incumbents, really the incumbents that are out there. And we talked about career risk, whether it's this cycle or the next, at some point in the future, you won't be able to buy enough Bitcoin on your balance sheet. And you're going to see these Wall Street firms get inverted by some of these startups here because they simply cannot, it doesn't matter how much fiat they have, they simply cannot buy the Bitcoin. And it will get down to how much Bitcoin you have, how you're putting it to work, how you're part of this whole new economy and the whole new inversion. And we saw this with the internet. We saw the ones that were pure plays, and over time, everything else was taken out in front of it. And I think you're going to see over time, probably in the next 10 years, some major Wall Street firms be eclipsed by some of the startups here.
I think also, I agree that I don't think the mania we saw last year is going to get as crazy measured in the same metrics, but I think the definition of a Bitcoin treasury company is also going to broaden a lot. And we're already seeing that in the market and kind of within the number of companies we're invested in. Bitcoin treasury, meaning everything from, a hyper specialized financial institution-like strategy that's creating all sorts of new securities out of Bitcoin, where MNAV is maybe an appropriate metric, to, on the flip side, something like a American Bitcoin that has a Bitcoin native business, to a Tesla or a SpaceX. Like, what's the MNAV of SpaceX? It's very, very high right now. And so as these companies mature and do M&A, do consolidation, expand their business lines, I think we're going to see a lot more diversity in terms of how these companies generate value, rather than just trying to sell stock at increasingly higher prices. And that will be healthy for the whole ecosystem.
So Dylan, I was going to ask you a question about whether these companies that are issuing preferreds can be a victim of their own success, in the sense of having enough cash, like on the balance sheet, separate cash to pay dividends. But we've got 10 seconds left, so I don't think we can do that now. We'll have to do a podcast on it. But let's have a big round of applause for Tyler, Dylan, and Sean. Thank you, guys.
Thanks, Danny.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Armington with Sean Hagan and Jeff Walton, Chief Risk Officer of Strive, joining us now. Thanks so much for making some time for us. You were on the main stage earlier today, and one thing that kept catching my attention is your use of the word trust. I mean, the name of your speech was Bitcoin scales at the speed of trust. You gave a few examples of trust in our daily lives that we don't even realize, like when you cross the street and the car stop for you. How important is trust as a foundation for Bitcoin and the products that offshoot from it?
Yeah, it's enormous. It is foundational, right? Trust is foundational, and really the asset of Bitcoin itself has transformed how society can interact with money, really. Like if you use $1, you have to trust that the government is going to be solvent, and that there's actually security behind that dollar, and that the rest of society is going to accept that dollar, and you've got to trust that it's going to work in that ecosystem. So it's really foundational in how really companies can build on top of it, and you need a solid foundation.
It seems like there's a lot of trust for your pref right now. It's the only one at par in the market. Could you dive into why that might be?
Yeah, so SATA's at par right now. It's been trading very well over the last couple of days. It's really only moved a penny, and we've had about $75 million of volume, which is really just phenomenal and super fascinating. And some of the feedback that we've gotten in the market is there's one element of SATA that's different than STRC. Those have been compared the most, and we actually cannot reduce the interest rate on SATA unless the price of the security itself has been trading at a $99 VWAP over the last 30 days. So it provides that confidence and trust that we can't unilaterally reduce the interest rate. So that's one element. But really, the daily dividend has been a game changer in how humans interact with the credit instruments and dividends, but also how computers are interfacing with these instruments, right? So computers day to day may be trading across different venues or day trading. And you may be able to set up an algorithm, and at the end of the day, the algorithm just has to end the day in SATA. And that way it gets kind of an overnight dividend if you park your car in SATA at the end of the day. And so I think we're seeing the development of this ecosystem where the downside risk of holding the instrument is that you're getting paid a daily dividend pretty frequently. And so the trading strategies and the algorithmic trading and agentic trading that could be built on top of it is really vast.
Yeah, there seems to have been a distinction between the way that SATA and Asset performed during this bear market. Help us understand the primary thing we see online is this idea of amplification versus leverage, right? And And they're very similar in a lot of regards. For a lot of people at home, though, they might not understand what kind of that core differentiation is. Could you dive into that a bit?
Yeah, so really, financial leverage can come in many different ways. You can take out debt or you can issue preferred equity. And so for our balance sheet in particular, we do not have any debt on our balance sheet. So we run zero debt. We only have perpetual preferred equity as the form of our leverage, and we call this amplification. What that means and why that's important is because we do not have a cliff maturity or a big cash outflow on the horizon that we need to manage. All that we need to manage really is our daily dividend obligation. And with the amount of SATA that we have outstanding, our daily dividend obligation is about $420,000. So we wake up every morning and we say, okay, we've got to go make $420,000 and we got to figure out how we're going to pay the dividend today and tomorrow. And as of today, I think we have about 4,400 days of coverage already on our balance sheet, which is about 17.7 years. So even as an investor, your question when you're purchasing the security is, am I going to get paid the dividend tomorrow? And you're underwriting the liquidity that sits behind that decision.
I'm curious, Jeff, because you spent a decade in reinsurance. Yeah. What did that world teach you about pricing risk that most people in Bitcoin or crypto finance get wrong?
It's really that there's so much math that you can glean from Bitcoin and the data in the entire ecosystem, and all of that can be compared relative to other instruments in the market. And I think many people miss that. And just like I showed on one of the slides, you can compare our instrument to traditional preferreds or any legacy type of instruments, and all of that data can be compared across.
Really cool stuff. Jeff Walton, Chief Risk Officer of Strive. Thanks so much for making time for us today. Enjoy the rest of the conference.
Thanks for having me.
Let's go back to the Nakamoto stage now for Jimmy Castro on Freedom Money in Asia.
Recently, I was on the second floor of the Bitcoin Learning Center when a young woman from Myanmar looked directly into my eyes. She was angry, not helpless, not asking for sympathy. Angry because she understood exactly what was being taken from her. She said to me, everyone I know has 2 Apple IDs. One holds her real life, the other is the account she shows if the soldiers or police search their phone. But that second account cannot be empty. It needs to have photos, messages, app activity, enough ordinary history to look lived in. She maintains 2 digital lives, one to live and the other to survive inspection. A VPN, a contact, or the wrong app can place someone in danger. She was not protecting a password. She was protecting an entire life. This happened at our Bitcoin Learning Center in northern Thailand, near the Myanmar border just a few weeks ago. More than 1,000 people from over 50 countries come through our doors each year. So when I talk about freedom money, I'm not talking about theory. I'm telling you what comes through our doors. Then she told me about her family's money. Their currency has suffered roughly 25 to 30% inflation for 4 consecutive years. At that rate, a family could lose nearly 40% of their purchasing power in just 2 years. But inflation is not a chart to her. It's actual food that disappears from the table and medicine postponed. It's a future that gets smaller while the number in the bank account stays the same. And then we ask, but isn't Bitcoin volatile? Do you think she cares about Bitcoin's volatility when her family's savings can lose nearly 30% of its purchasing power every year? When access to banking is often restricted? When value cannot safely cross the border? Sure, Bitcoin is volatile, but volatility is a short-term risk. Captivity is a certainty. At the Learning Center, people don't ask whether Bitcoin will outperform. They ask, can I preserve what I've learned? Can I preserve what I've earned? Can I send it to my family? Can I bring it across the border? Can I transact without permission? When money can be inflated, trapped, or censored, it stops being only money. It becomes a system of control. And control often hides inside the tools that we use. If a company, bank, or government can decide when your access ends, you are not in control of that tool. The gatekeeper is. This is why free and open source technology matters. People can inspect it, run it, adapt it. A community can keep it alive even when a government wants it gone. That is a freedom tool, a tool that leaves meaningful power in the hands of the person using it. Bitcoin brings that principle to money. Its code is open. Its network peer-to-peer. No single bank owns it. No government can switch the entire network off. After Myanmar's military coup, people took to the streets. They posted online. They asked the world for help, but the help they hoped for did not arrive in a form that stopped what was happening. That taught us something painful. Freedom cannot depend only on the hope that someone powerful will rescue us. People also need tools they could use for themselves, especially when the rescue never comes. Bitcoin cannot stop a war. It cannot remove a dictator. It cannot promise anyone safety. But it can let someone hold value without asking a bank to keep the account open, and move value without asking a border for permission. Bitcoin is not freedom money because its price goes up. It's freedom money because no government, bank, or border guard can decide whether you're allowed to use it. For most of us, Bitcoin may begin as an investment. For someone living under financial control, it can be an exit from permission. That does not mean Bitcoin is easy. The price moves. Self-custody carries responsibility. Privacy is not automatic. But freedom has never meant the absence of risk. Freedom means having the ability to act. Bitcoin may be permissionless. Access to it is still built person by person, by the developer who makes a wallet safer, the teacher who sits beside a first-time user, the merchant who gives someone a place to spend, and the community that makes open money useful. You may think, I'm not an activist. I write code. I run a business. I make art. I raise a family. Good. Do what you're already great at. Build, teach, fund, create. Make freedom the consequence of your work. If you want Bitcoin to reach $1 million, don't spend your life shouting about its price. Help make Bitcoin indispensable to the people who need freedom. The value will follow the usefulness. Now remember the young woman with 2 digital identities? One, who she really is. The other is who a system of power will permit her to be. Money, identity, speech, and artificial intelligence are merging into the systems around us. The danger is not only that those systems will know everything about us, it's that they may begin deciding which version of us is allowed to exist. Every day we reach for the easiest tool. We use closed artificial intelligence. We store our lives inside systems we cannot inspect, cannot leave without permission. I understand why. Convenience is powerful, but freedom has always required someone to make the less convenient choice before it becomes the obvious one. So use open source technology. Use open source AI. Give financial freedom tools. Give the people building them. And give freedom users. Give freedom funding. Give it a future. Because when we choose Bitcoin here, we strengthen the escape route they need there in Burma and in Laos. Our choice may feel like a preference. To someone else, the strength of that network may determine whether they still have a choice at all. None of us knows exactly what artificial intelligence will become. But the next few years may be our last real chance to help shape its direction. Machines are learning from what we create, reward, and accept. If we show them a world built on permission, surveillance, and control, those values will harden into the systems around us. So we cannot only talk about freedom, we have to make it visible. We need to give the future evidence that freedom works. This is it. This is the open window in which we still have the opportunity to shape what comes next. Once it closes, wanting freedom will not be the same as having the power to build it. Nobody is coming to build a different future for us. The good news is we are already here. You are already here. Use one open source freedom tool. Teach one person what you learn. Support one builder, community, or business making freedom useful. I keep thinking about the woman on the second floor. She did not come to us as a victim. She came clear-eyed. She came angry and determined to be heard. She was forced to build a second life that looked real. Our responsibility is to help build a future in which she does not need one. Years from now, your children or grandchildren may ask what you did when money became permission, speech became data, and the walls began closing in. You will not have to tell them that you watched. You could tell them, I built, I taught, I helped keep a door open. The future is still unwritten, but it will not remain unwritten forever. If not us, then who? This is it. This is our time. Thank you.
Into one of the largest corporate Bitcoin treasury companies in the entire world. That's the story of our next speaker when he saw the potential of Bitcoin. Speaking on behalf of Metaplanet, our amazing title sponsors with some of the best hats and t-shirts in all of Bitcoin, Hong Kong, get ready for a keynote presentation titled The First Asian Cycle of the CEO of Metaplanet, Simon Gerovich.
Great, thank you. Good afternoon, everyone. It's really nice to see you all here. So many familiar faces. What a great turnout. My name is Simon Gerovich, and I'm the CEO of Metaplanet. Just 3 short years ago, I was running a struggling hotel company in Japan. COVID had hit us really hard. We sold every property except one just to keep afloat. Those were very dark times. Our market cap was just $14 million. At our shareholder meetings, there were more empty chairs than shareholders. Attendees could be counted on 2 hands. I know because I counted. In April 2024, we took what was left of our cash and bought Bitcoin with it. People said we lost our minds. Some of them said it very publicly and at length. Nevertheless, today, we own 43,000 Bitcoin. That's the 3rd largest position of any public company in the world and the largest in Asia by a lot. And the part that really matters, this happened in Japan. The market, everyone said, was too conservative for something like a Bitcoin strategy. Yet here we are. We're proud to represent Asia on the world stage, and I think our journey, as challenging as it's been, is the first sign of something much bigger. The first Asian cycle has started, and I would like to spend my 15 minutes showing you exactly why. First, though, the honest part, because you've all lived it too. This is a shared experience. A year ago, at this very conference, Bitcoin was already past $100,000, and people were setting targets for $250,000, $500,000, even $1 million. What the heck happened? At the low, Bitcoin had lost half of its value. Our stock fell harder, and so did every single company like ours. 2026 has been a very, very, very long year indeed. And then last week, the tape completely turned. This year's sellers sold because they had to. The buyers arriving now aren't going anywhere. I believe the bottom is in, and I'm expecting a much brighter rest of the year. But anyone can be bullish after a rally. Here's what we did throughout the drawdown. We bought Bitcoin every single quarter. Not because we're brave, but because we built our balance sheet so that no week of the drawdown could force us into a corner. And when the price fell, the same plan just got cheaper. And you know, the strangest thing happened on the way down. When we started this journey, we had about 11,000 shareholders. Today, we have 250,000 shareholders. People all over the world who bought into a Bitcoin company while the price of Bitcoin fell by a half. the number still amazes me. Why would they do that? Mostly, I reckon, it's because what was happening around us. For 30 years in Japan, doing nothing with your money was the smart move. It was prudent. Prices fell, cash won, and a generation learned financial patience. That world is now gone. Inflation is back. The yen is at a 40-year low. Hoarding cash has stopped making sense, and every household in Japan can now feel it. Japanese households hold roughly $14 trillion in financial assets. About half of that sits in bank deposits, earning almost nothing. And that's just Japan. Add Korea, Southeast Asia, and the wealth managed out of this place, Hong Kong, and you're looking at the deepest pools of patient savings on Earth. Nobody else in the developed world saves like this. And for the first time in a generation, these savings are looking for somewhere to go. In America, cash is about 13% of household wealth. Europe sits in between, and that savings rate gap is the fuel. Right as that capital wakes up, the rules are beginning to change. Japan passed a law in July that puts Bitcoin under the same statute that governs stocks and bonds. And the tax on gains is set to fall from as much as 55% to 20%. And that rollout is targeted for 2027 and 2028. And the rest of the region is moving too. Right here, Hong Kong listed spot ETFs before most of the world and has stablecoin rules in force. Korea is opening its door to institutions, and Singapore has run a licensed regime for years. The end of the cash hoarding strategy and new rules are arriving at exactly the same time. And together, they set up what I think is the single biggest opportunity in Asian markets today. Let me show you where Asia actually stands. This is every public company in Asia that holds Bitcoin, 20 names, that's it. We're at the top with 43,000. The next largest holds 6,000. Now, we're proud to be at the top of this list, but it's the rest of the list that I would like you to look at. Add the whole thing up, every company, ours included, and together, Asian public companies hold less than a tenth of Strategy, the largest holder in the world, 1/10 of one company. A region with the deepest pools of patient savings on Earth, rules being rewritten as we speak, and a 17-year-old asset well off its all-time highs. And this is the entire list? Now, some people will look at this and see how far behind Asia is. I've been a professional investor for a long time, and this is the most asymmetric setup I've ever come across. And let me be precise. The opportunity isn't simply that Bitcoin goes up. Anyone in this room can buy Bitcoin. The opportunity is that most of Asia's capital cannot. And there are only 20 companies and almost no products standing between a region full of savings and this asset. Gaps like this do not stay open. Somebody fills them. And the ones who move early do very, very well. So why is this list so short? It took us 2 years to fully understand the answer. Most of the capital in the world cannot buy Bitcoin. Not won't, can't. A Japanese retail investor with a normal brokerage account has no way to do it. No spot ETFs in Japan, and the account cannot hold Bitcoin directly. A pension fund can't own something with no coupon and no seniority, and a bond mandate won't allow it. What any of them think about Bitcoin simply doesn't matter. So the region's capital is locked out. And that changes what the opportunity actually is. Build the things that Asia is allowed to buy, and the capital will flow. So here's what we've been doing about it. In the space of 10 weeks, we made 2 acquisitions. In June, we bought a licensed securities firm in Japan and renamed it Metaplanet Securities, a regulated Japanese broker-dealer. And last week, we announced Superplanet, a NASDAQ-listed company. We're capitalizing with 2,100 Bitcoin from our own treasury, and the deal is expected to close in Q4. Now, the idea is simple. Bitcoin we already hold in Japan becomes the capital of a listed company in America. The treasury itself became the acquisition currency. And that's the bigger point. Bitcoin on a balance sheet is productive capital, productive enough to acquire a NASDAQ-listed company. That now gives our group 2 listed issuers in 2 currencies in 2 of the world's largest capital markets, Tokyo and NASDAQ, 2 engines, raising capital to grow 1 consolidated Bitcoin position. And here's why the American side matters. Over the past 12 months, US investors have bought $16 billion of preferred stock issued by Bitcoin treasury companies, a brand new asset class born in a bear market, paying dollar yields backed by a Bitcoin balance sheet. Now, whilst $16 billion sounds like a lot, it's just 0.01% of the global fixed income market. That is how early this is. Basically, hardly any Bitcoin-backed yield product is being offered to anyone today. And that's the market Superplanet is built to enter. In fact, it's the same machinery Asian savers will need in their own currencies. Which brings me to my last point. There's a pattern behind assets and their surrounding infrastructure, and it's as old as finance itself. Venice didn't become a mercantile superpower by hoarding gold. It developed and built a sophisticated banking industry on top of it. Amsterdam built the first stock exchange on the increasingly active phenomenon of trading paper shares. New York built and shaped our modern world firmly on the back of the dollar and created foundational liquid markets alongside. The prize never went to whoever just held the new money. It went to whoever built the market on top of it. Nobody has fully built out that market for Bitcoin yet. Not in New York, not here. We spent 2 years building a reserve, 43,000 Bitcoin. And now we're building what stands on it, from Asia. But we would rather not do it alone. Which brings me to everyone else in this room. If you help run a company in this region, look at what a Bitcoin balance sheet did for a tiny $14 million market cap hotel company. The list I showed you earlier has room for 100 more names. And every cycle, so far, has paid the people who moved before it felt comfortable. If you're an institution, be ready, because the rules are changing faster than at any point in my career. Parliaments, cabinets, and regulators across this region are rewriting how our industry works. And the institutions that engage early will set the terms that everyone else follows. And if you're a builder, look at this stack, because almost all of it is missing in Asia. Custody in your own jurisdiction, lending against Bitcoin as collateral, yield products a local saver can actually hold, and venues to trade and settle, all of it, in local currency and under local laws. America has built most of its stack already. Asia has barely started. And America's version doesn't work here, because our capital lives in yen, in won, in Hong Kong dollars, baht, rupees, ringgit, under different rules. In Japan, we've started on our own piece. That's what our securities firm is for. Custody and lending are where we're headed. But we're just one company in one country. Multiply that stack by every market in this region, and you're looking at a decade of things that need to be built. $14 trillion of patient savings in Japan have waited 30 years for something worth buying. Somebody is going to build what it's been waiting for. We started, so will others, here in Hong Kong, in Seoul, in Singapore, and in so many other local markets. The next cycle doesn't need Asia to follow anyone. It needs Asian companies, Asian institutions, and Asian savers to lead, at home, in their own currency, and under their own rules. So I'll now end where I started, in that room with the empty chairs. Cycles don't announce themselves. They start quietly, in rooms like that one. And by the time they're obvious, the chairs are gone. And somewhere in this region, right now, there's a boardroom where putting Bitcoin on the balance sheet still sounds insane. I've sat in that boardroom. And that's where the next cycle is starting. This year, maybe this week, maybe with someone in this hall. The previous cycles belonged to the West, and the first Asian cycle has already started. The only question left is who builds it? Will you? Thank you very much.
Everyone has an opinion. We want evidence.
No hype, no echo chamber.
Just better questions.
And better answers from the biggest names in Bitcoin.
This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
Of Bitcoin as a financial asset. To dive into this topic, we have a special fireside chat titled From Self-Custody to Shareholders. Please welcome our host, the legendary podcaster Stefan Livera, who is joined by the CEO and chairman of Nakamoto, David Bailey.
What's up, Hong Kong Bitcoiners? How's it going?
I hope everyone's had a great time. It's been a great event so far.
We do these conferences all over the world, and there's a lot of awesome Bitcoin communities out there. But I am convinced that the most hardcore Bitcoiners are from Asia, Hong Kong, China. So it's a pleasure to be with all of you this week.
All right, so David, you and I are probably similar vintage. Like we kind of came in, I think maybe yourself late 2012, myself similar, maybe early 2013. Obviously, in those early days, we kind of had these lofty, optimistic visions of where Bitcoin would go and hyper-Bitcoinization and Bitcoin taking over the world and exiting fiat and all of this. And here we sit today. Of course, people, as the topic is, self-custody to shareholders. How has the vision shifted, and are we sellout suit coiners now?
I think hyper-Bitcoinization is playing out as it always was going to. And I don't really think anyone had a clear vision 15 years ago exactly what it would look like. But the vision was always to bring all parts of society, all parts of the economy along with Bitcoin adoption. And Bitcoin on the balance sheet of corporations, like hyper-Bitcoinization can't happen without bringing along the corporate world, without bringing along the companies and the businesses that provide the products and services we depend on. So, I think it's playing out exactly how it should.
I think you're right, but maybe in the early days we were probably, or at least I was probably more optimistic, thinking, oh, it's going to happen so quickly, you know? Obviously, it's taking a bit longer than maybe many of us thought it would. What do you think?
I mean, we're not doing bad. I mean, how many Bitcoiners existed back then? 100,000 of us. Now there's 100 million of us. You know, I think, you know, the power of self-custody is Bitcoin's superpower, but you know, it's not always the same utility to its users. Like if you live in a place that's stable and has a stable government and a stable rule of law, self-custody matters less. When you're in the extreme scenarios, you know, you're in an unstable environment, self-custody matters a lot. So, you know, I think this is just going to go through waves, and people won't appreciate the value of self-custody until they need to. So, you know, one day when your Bitcoin gets nationalized, you'll appreciate self-custody. But until that happens, you know, it works just great to have it in your brokerage account.
Yeah, and I think maybe that brings us to this other idea where it's kind of like the purists and the pragmatists, right? There's kind of this purist vision of, no, it should be only self-custody, or maybe for some people that means no KYC, or it means like certain forms of adoption that they accept as legitimate, that should be promoted, and other, you know, and maybe on the other side of that, maybe you and I are both kind of more towards that pragmatist side of, we're trying to grow adoption. How do you see that tension between, let's say, the idealist vision and, let's say, the pragmatist who is trying to get adoption in perfect ways?
I've always found that one of the unique differences between the Western Bitcoin community and the Asian Bitcoin community is like Bitcoin in Asia is taken from a much more pragmatic perspective. And you know, when you talk about things like no KYC or peer-to-peer or some of these ideals, I actually find that people who use Bitcoin here actually do these things a lot. Like they value their privacy, they value being able to work outside of the institutions because there's a practical value for them. I think in the West, these are just like ideals, and so you know we kind of project our value system onto them, but there's not necessarily the same pragmatic reason to doing it. So yeah, I really don't buy into the dichotomy. It's like you know, Bitcoin is designed to be a pragmatic, useful tool for people. Like that's the point of it. So it's not really designed to be a religious platform or to project your ideas onto it. So yeah, I think the pragmatist idealist divide exists, but the pragmatists continue to win.
And maybe a kind of a related question, because many of us, at least in that time, came to it from a libertarian and maybe somewhat cypherpunk ideology, as you said. A lot of the new people may not share that, right?
Yeah, and I definitely, that's one thing I've noticed is like with the advent of the ETFs, you know, a very powerful moment in every Bitcoiner's journey is like the first time they send a Bitcoin transaction, the first time they receive Bitcoin, the fear you have as you like type in an address and hope you didn't mess it up. And so that's kind of an onboarding experience that I think imbues certain values or a worldview on Bitcoin for new users. And when you come in through the ETF, you have none of that. You just literally are, you know, buying and clicking your portfolio, or maybe you're not even buying and clicking. Maybe your broker's doing it for you. So there's definitely a loss that comes from that. But you know, I think back to the topic earlier, you know, people are going to do whatever they need to do to get exposure to Bitcoin. And if there's an easy way to do it, they're going to do the easy way. If the easy way in the future stops working for whatever reason, whether it's government regulations or whether it's, you know, risk in these entities, like people are going to go back the other way. So I don't know. I feel like as long as Bitcoin itself can't be changed, it doesn't really matter how people interact with it.
Well, speaking of Bitcoin changes, I think maybe the recent one around BIP 110, obviously you and I were both highly critical of BIP 110. Do you think there are lessons around what happened there, around the failure of BIP 110?
Yeah, well, I think it's just like another reminder of how Bitcoin works and how Bitcoin governance works. Like, if you want to change Bitcoin, it's intentionally very difficult to change. And you need to have consensus from all the different stakeholders that are out there. You can't have just a small group of loud people push through a change that the rest of the network doesn't support. And I think that there's been a lot of, let's say, boogeymanning of like economic nodes or the exchanges, the people that basically push the most transactions on chain. And I think this BIP 110 experience was a reminder that economic nodes are part of the stakeholder process and you can't circumvent them. So it turns out that miners aren't in charge of Bitcoin, nodes aren't in charge of Bitcoin, economic nodes aren't in charge of Bitcoin. You need all of the participants together to agree for something to change.
And perhaps the lesson also is that, of course, if you do something in consensus, okay, that's easy enough because everyone agrees. But if it is controversial or an adversarial change, you better have the economic weight on your side, because otherwise it's just going to stall out.
Oh yeah, I mean, absolutely. And I think, I think one of my takeaways from it is like the economic nodes who matter a lot in the process, like they need to be engaged as stakeholders in the process. And we could have really bypassed a lot of the BIP 110 noise if the economic nodes had came out earlier and stronger, like, hey, we don't support this, rather than just being silent about it. So I think we need to, all the stakeholders need to be engaged in the process. And we can avoid what we just went through, which was 6 months of wasted time and a lot of yelling on Twitter.
And on that, around demonstrating or showing support, things like fork futures or prediction markets, this kind of thing, that was important even in 2017, as I recall. Bitfinex had, as an example, during the 2x or no 2x, they had B1x versus B2x on Bitfinex, as an example. In this recent round with BIP 110, there was basically a very small amount of volume suggesting support, and I think that was also like an indicator for people to see, okay, there's not really a lot of economic weight on that side.
Yeah, I have to say I was a little disappointed with the Chinese Bitcoin community, because we used to be able to rely on y'all. Anytime there was a fork, there would be a listing where people could sell it. And this is the first fork we've had where I can't sell my fork coins. So I would appreciate it if next time we can make sure that there's some future contract out there, and those of us that want to dump can.
And of course, this raises questions. I mean, like, we're talking about BIP 110 right now, but the point is, what happens next time, right? What if there's a fight on quantum and people disagree about the right approach on how to have, I mean, it's almost like climate change, right? You've got people who are like full, quantum is BS. You have people who like, okay, maybe it's a real thing in 15, 20 years. And then you've got other people who are saying, no, we need to do something in the next few years for quantum. And even on that, there'll be all these questions. What do people do with the early P2PK coins, or they'll say Satoshi's coins? What is the mitigation pathway? Maybe these are the questions that we'll have to sort of resolve. What do you think? Are there any lessons from what happened into what may come next time if there's like a fight about quantum?
Yeah, I mean, I think there's going to be future governance fights. I mean, I think probably right now we're pacing once every cycle, there's like a solid governance fight. So I think we need to have a functional stakeholder process for Bitcoin to evolve that doesn't just outsource our decision making to a handful of people. And so we learned from this experiment that economic nodes do matter. The takeaway shouldn't be then like, okay, well then economic nodes are in charge and we should just ask BlackRock what we should do about quantum. Like, that would be the wrong takeaway to have. So I would love for us to have a soft fork that's maybe less controversial, that we could get activated as a community and work together on, so that we have some experience working together collaboratively and productively before we have to deal with something like quantum, which could be very divisive.
And so, to also the point, we're talking about shareholders. What does it mean now that we have publicly traded, right? You're obviously involved with Nakamoto, but whether it's Strategy and Metaplanet and Strive and whoever else, how much of a stance should leadership of these companies take in governance fights?
Well, I mean, they definitely should take a leadership role because they have all their money in Bitcoin, so they need Bitcoin to be successful. I have kind of thought about this question, though, of like, when there are forks and there are hard forks that happen, like, which Bitcoin is the real Bitcoin? And, it's funny. It's like BlackRock, or ETFs in general, I won't call out any specific company, Like, it's in the fine print in there, like what they're going to do with fork coins. And I don't know if that's really been like totally tested or thought through. You know, it'd be very ironic if, let's say, BIP 110 had been successful and it turned out all the Bitcoin in the ETF was just on the wrong chain. That would be pretty dramatic. So I think they have to be stakeholders because they have to represent their shareholders. They have to make sure that they are good stewards of Bitcoin. Yeah, and they need to make sure that they're holding the right coins on the right chain.
And there could also be questions around things like if they split and dump, right? What's the tax treatment? What's the governance treatment? Should customers or end users get to have some choice in that matter? Or is it just like, no, BlackRock or MSTR, they make the decision and you're living with that choice?
No, I mean, explaining to our CFO what a hard fork even is, and trying to answer their questions about how would we be taxed on an airdrop effectively on a hard fork. It's like, I actually don't know the answer to those questions. So I think it's pretty novel issues, and yeah, I wish this fork had a little bit more juice behind it, just so we could have seen the second order effects of how people manage this on their balance sheet.
Right, but ultimately, there is only one Bitcoin, and it kind of flows to wherever the most economic value is, because the miners have to follow that, right? Like, they can't just keep pointing their hash rate to a dead or a low value chain. They're going to generally point their value to the high value chain, and it will sustain, right?
Yeah, I mean, well, so when we say that users are in charge and we say like economic nodes, like your economic weight matters, the reason why that is because ultimately economic nodes are the ones generating transactions, and they're paying transaction fees. And so let's say you had a fork of Bitcoin and a lot of the miners went to the alternative chain. Well, wherever the users are and wherever the fees are being paid, those fees are going to accumulate. And if block times go on a chain from 10 minutes on average to 30 minutes on average, and that's where the users are, the fees are going to grow astronomically on that chain.
And it's not just the fees, it's the token value itself.
Yes, true. But like ultimately, at the end of the day, it's like user demand to use that chain is going to drive the value of those tokens and ultimately the incentives of where miners are going to mine. And so users are still in control. And I think one of the things that BIP 110 misunderstood is they thought nodes represent users, and they don't. Like, people paying transaction fees represent users. And, you know, Coinbase might have 10 million people that want to process transactions through them. So at the end of the day, users are in control.
Yeah. Now, I guess it's kind of bringing up maybe awkward questions for people, because in 2017, people might have argued, people who were small blockers, if you were a small blocker in 2017, early on, you might have disagreed with Coinbase or BitPay saying, we speak for our users, because you would have been like, no, I don't want that view. I don't want big blocks. I want the small block view. But then this time around, you get what I'm getting at? Because now we're trying to go the other way and say, well, should those big entities decide on behalf of their users? And I guess depending on which way you want the fork to go, you might like that stance or not like that stance.
Well, users have the ability to leave the services that they're using if they don't agree with the choices that they're making. And then ultimately, the users doing transactions is what determines which chain is Bitcoin. And so if, you know, a user disagrees with the outcome of their service provider, they're not going to do transactions there.
Right, and so I guess maybe what we're saying here is they should disclose how they're thinking about it and say, you know, if you are Coinbase or Binance or any large, or, you know, if you're MSTR or you're BlackRock, you should, I guess, disclose in advance which way you think, like which one you think is right, so then the users can make their decision. Like if you're a shareholder, sell the share of that and buy some other thing. If you're a user, stop using that service, go use another one.
Totally agree, totally agree. And I mean, the question's especially interesting if you think about it in the context of the 2017 fork. You know, all of these Bitcoin balance sheets having to make a decision of, you know, what are they going to do with this forked coin? And like in 2017, the forked coin was worth almost as much as the Bitcoin was. So you're talking about half the value of your balance sheet you need to make a decision about. And I do think that the stakeholders in each of those businesses, they need to know where their business is going to land on the topic. Like, I think this is why they need to be engaged in the process and not just leave it to people guess what's going to happen when the client activates.
Yeah. So also related to shareholders, we should talk about treasury companies. Obviously, there've been, cycles. This time last year, was it probably over 100K last year, right? And so let's talk a little bit about what went right, what went wrong, where you think, treasury companies are going. So just start broad, and then we'll later get to like Nakamoto specifically.
Well, I think the past year has been extremely painful for treasury companies, obviously, probably none more so than ours. I think what went wrong, probably the biggest thing that went wrong is buying Bitcoin at 120,000 and then 6 months later being at 60,000. Like that's kind of a tough thing to do. I think also the treasury company mania, whenever there's a lot of hot money flowing, you see a lot of people pursue the same strategy. You see way too many vehicles get brought to market, and the quality of them is not all the same. So the market needs to have consolidation in order to determine, what's a productive use of capital and what's not a productive use of capital. And I think, there's been a lot of weeding out over the past year. It's tough to run a public company. It's even more tough to run a public company with an asset that's down 50%. So, but I think this is just all part of it. And I think, we use the saying survive and thrive. So it's really about being well positioned so that when the bull market comes, you're in a place to make money and take advantage of the market window.
I see. So you see it as, survive the bear market so that you can ride the bull wave, per se.
And I think to answer your question about like what has gone well and what hasn't gone well, I mean, I think the biggest thing that's gone well is we've expanded access to Bitcoin to millions of people. I mean, I think if you take the cap table of Metaplanet and Strive and MicroStrategy and Nakamoto and Orange and Capital B and Smarter Web and go down the list, you're talking about many hundreds of thousands, even when you include MicroStrategy, millions of people that have gotten the exposure to Bitcoin that otherwise wouldn't. So I think that's been incredibly successful, and I think there's like a lot more work to do there. I think what's also gone really well are the prefs. I'm very impressed with how well they've performed. They've been tested, they've come back, they've been very resilient. So I think right now the pref model is in the process of being validated, and it'll be interesting to see how that continues to play out.
And so I guess we're also seeing maybe arguments inside of Treasury land of, should Bitcoin Treasury companies be like SpaceX and Tesla and Block, or should they be doing, MSTR style, Metaplanet, financial engineering per se? Do you have a comment on that and how the model is changing?
Yeah, no, I think you need to measure performance in the track record over a full cycle. So like I wouldn't take the past 12 months or the 12 months before that to say, okay, this is the validated model or not. You need a longer period of time. How do they perform in the bad times and in the good times? I think that the operating company approach, we're going to see more people acquire and do M&A with operating companies. It's what we're doing at Nakamoto. A lot of our portfolio companies are in the process of doing M&A. M&A deals take a while to do, so I think probably the second half of this year, you're going to see the results of a lot of people working, on deals this year. We'll see how they do. I mean, I got to say, I'm very jealous of Strive's ability to run SATA, and it probably took, I don't know, 4 years, five years, before BTC Inc. made the first $5 million of revenue in the company's history. When you have a pref product and you're running an ATM on it, you're pulling down like 5 million in a day. And like you didn't do any work. Your bankers just ran the ATM and you get an email at the end of the day and it's like, we sold this much stock at this price and the money will deposit in your bank account tomorrow morning. So it's pretty incredible. And if you can get that flywheel working, it's much better to run an ATM than to have to build an operating business. It's a lot harder to build an operating business.
Perhaps, whether we like it or not, we live in the fiat standard today, that's the globe, but obviously many of us believe we're going to a Bitcoin standard. But let's talk from a Nakamoto perspective. Do you see it as somewhat of a hybrid there, that you're going to have operating businesses? Obviously you have BTC Inc., the creators of this conference, and then are you also going to layer on, let's say, financial engineering aspects? Is that a plan for you?
So we're watching all the prefs. We're super interested in the topic. We've invested in several of them. So Like I'm someone who is always keeping an open mind and watching where the market goes, and like you follow the money and you listen to the market. For us, we focused on the operating company side because, you know, at the end of the day, I can't control the price of Bitcoin, but I can control if our products and services that we're building are valuable and they're making us money. And, you know, we want to be, as a company, cash flow positive. So we're just, no matter how bad the market conditions get, we're in a place that we can take on risk and make bets. So we want to keep building our cash flow, and you know, right now our focus is on the M&A side.
Yeah, and of course you're doing all this work around advocacy. Obviously, you have Bitcoin Magazine, the conference, you have conference series. Let's say you're trying to grow awareness and knowledge of the asset itself, as well as covering and partnering with various treasury companies too. So I guess last few minutes, let's talk a little bit about where you see things going. What are the ways to pragmatically move things forward? If you're listening right now and you're thinking, how can I help grow this movement? If you believe in Bitcoin, what should people be doing?
Well, I think first off, for anyone listening, you should be buying Bitcoin, and you should be figuring out what job you have in the world where you create value and you can capture that value and you can park that value in Bitcoin. So that's what everyone here should be doing. In terms of, where do I see the trends going for this next cycle? We're a company that prides ourselves in creating our own alpha, and so we're always like looking for what's the next meta going to be and how can we facilitate it. There's kind of two things that I think are kind of coming next. One is Bitcoin's size is really driving it to be integrated into the world at large as we know it. And so I think there's an opportunity for treasury companies to own businesses that are strategic for Bitcoin. Metaplanet just recently did a acquisition of a broker-dealer in Japan. It's going to give them a great distribution platform to go and sell bonds to the Japanese market. Like, that was like a real business, not a Bitcoin business. That was a real financial firm. And like, it's given them a superpower to go and promote Bitcoin in a new market through those tools. And so I think as the Bitcoin industry, if the Bitcoin nation was a country, like, what are the businesses that give us strategic leverage in the world? Like, for example, owning energy infrastructure, energy resources, like owning things that are real in the real world that we can bring into the Bitcoin ecosystem. I think that's like a meta that's coming. The next meta that is coming is, I think, the intersection of Bitcoin and AI. And I think like AI is probably the most relevant thing that's happening in Bitcoin today. It's affecting basically all the different parts of Bitcoin, whether it's on cyber attacks, whether it's cyber defense, whether it's fuzzy testing to test new core releases, whether it's Bitcoin miners having to compete with energy resources for AI. And I mean, even the BIP repository itself for Bitcoin Core has been overwhelmed with AI slop. And I can't help but think, like, maybe a year from now, it won't be possible to tell the difference between a human drafted BIP and an AI drafted BIP. And once those BIPs are submitted, then like people test the BIPs. Well, they're using AI to test the BIPs. And then people are trying to understand if a BIP is good or not. So they're asking AI, should I run this client? Is this BIP useful? And so I see like AI touching all different parts of the development process for Bitcoin. And I think like that's a pretty profound change in how Bitcoin has worked. It's also the first time that we've seen like a change in the UI, UX of Bitcoin. Like in the past, you had to type in a Bitcoin address and actually send a transaction. Now all of that can just be completely abstracted away from the user, and all of the complex fringe tools that we have with Bitcoin that are not very often used, like your AI is going to make that super simple to use. So it really is like a complete change in how Bitcoin is consumed. And I think if we want Bitcoin to win, hyper-Bitcoinization to happen, like making sure that the AI economy, making sure that like the GDP of AI is running on the Bitcoin standard. Like if we can make Bitcoin the money of AI, it's kind of game, set, match for Bitcoin's adoption in the physical analog economy. So I see this as like a collision that nothing can stop at this point. And I think, even just Bitcoin being a permissionless tool, it means that like AI is going to be trained on Bitcoin first. Like it's going to attack Bitcoin first. Like we're going to be the tip of the spear of how this stuff is actually being deployed into the real world. I think in the early days of Bitcoin, we called it like machine-to-machine payments. And that kind of narrative faded away over the years. But I think now's the time to bring it back, yeah.
Now, I guess the other criticism would be, obviously we're Bitcoiners, we want Bitcoin to be used, but agentic payments, people will say, no, they'll use stablecoins. So how's Bitcoin going to win in that or fight in that?
Well, I think that whatever we build the agentic economy on needs to be built on an anti-fragile system. And like, could you imagine how horrific it would be if a huge percentage of the global economy is dependent upon AI systems, and the stable coin that they were using was UST, Luna. What was Luna's?
Like the Terra Luna thing.
The Terra Luna. Imagine if you're using a stable coin and it implodes, and you're going to just completely freeze up the entire AI complex. So more than anything, AI just needs the stability of a anti-fragile system, and I think the whole reason we created Bitcoin is because fiat currencies are fragile inherently. They're political, they're human run, and over a long enough time period, they do fail. And so I think AI is going to need to be built on something that has more staying power.
Well, there you go. I think that's all we have time for, but I think the lessons are there in terms of Bitcoin growing and maturing as an industry. So let's leave it there. Everyone, please put your hands together for David Bailey from Nakamoto Inc.
Cheers.
Everyone has an opinion. We want evidence.
No hype, no echo chamber.
Just better questions.
And better answers from the biggest names in Bitcoin.
This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Isaiah Austin, our social media king, and Sean Hagan. Okay, we are just minutes away from Balaji taking the Nakamoto stage, our final talk of the day, to talk about the network school and his idea of the network state. And for those who don't know, he kind of posits that the order has always been state first, then money. A government forms, establishes controls over territory, and then issues its own currency that citizens use because they live under that government's laws. However, his premise kind of flips that around. He says, what if globally neutral money, aka Bitcoin, exists first, and then everyone accepts that and moves in to a state together? What do you think about his idea here?
Yeah, it's very interesting. The idea to get, the smartest minds who typically, would agree on certain premises when it comes to money and sovereignty in the same room and then building a society around that. It's a really interesting idea. He's been building it for a while. So it's going to be really interesting to see what kind of questions he gets today and how he answers those.
Yeah, I think it makes sense when you understand his background, right? He was at A16Z, a well-known venture fund in the tech space. He was at Coinbase, so very early into the crypto space. So I think, when you realize that background is probably informing a lot of his viewpoints here, it starts to be more clear what he's thinking. And politics has always changed and shifted over time, right? The separation of church and state was a big deal. The separation of money and state with Bitcoin could potentially be an equally big deal. Obviously time will tell. I think that governments generally exist for a reason, and the proposition of going and forming your own nation state of sorts based on your online friends, all you're doing is basically reinventing government. So, I think it's an interesting idea. I think that people are probably going to end up trying it as we see kind of, deglobalization continue to occur. You see things like what's happening with the U.S. long-term Treasury right now, and the government is losing control of being able to kind of set those prices, and the free market's coming in. So I think there's opportunity for free market individuals to kind of redefine a lot of things, but ultimately I think it'll probably all result back in some sort of central governance.
Mm-hmm.
A lot of innovation in this space. Kind of feels like any idea is worth a listen at least once. So with that, let's go to the Nakamoto stage now to listen to Balaji and Bitcoin Inc. CEO Brandon Green.
All right. How we doing? Woo! Have we had a good event? How's Bitcoin Asia? All right, so this is the last session for the day, and I think this is one of the most exciting ones. We have the legendary Balaji Srinivasan here, and we're going to get into a few different things, but I just want to kick it off. Balaji, walk us through network state today, and you've had a major change. Walk us through what's happening in Kazakhstan.
Great. Yeah, so I think of Bitcoin as being the digital, and then network state as the physical, and then network school is making all of that real. Because Bitcoin basically, it renegotiated the relationship between a citizen and the government, right? Seizure is no longer feasible. The 20th century of fiat seizure is ending. And so now you can choose where you want to work, where you want to live, okay? But where do you go? And I think it's not just sovereign individual, but sovereign collective. It's a community. You couldn't have done this amazing conference with just yourself. You need to work in a group. Bitcoin couldn't be built by just an individual. It needs a group. And I think the physical world is the same thing. So Network School takes Bitcoin's theory and principles from the digital world and says, what does an opt-in community look like in practice, right? And why a school? Because Harvard was started alongside the Massachusetts Bay Colony to help start America, and like Texas A&M helped kind of populate Texas agricultural and mechanical, and Stanford helped build a Bay Area, right? So a school paired with a community is a way to bootstrap a community. Okay, so that's like background. So then specifics, we recently just moved to the amazing country of Kazakhstan, beautiful country. You guys have seen some of the videos here, some of the photos from the place, and the important thing is we now have essentially official sponsorship by the government of Kazakhstan, okay? And so built-in partnership, here's the meeting with the Prime Minister, and importantly, we are building a fully digital state, says the President of Kazakhstan. So digital state plus network state, they want what we're doing. So we're collaborating with them on recruiting global talent and training local talent, synthesizing the two, as Silicon Valley did for many years, to just turbocharge them. And so that's AI government, that's robotics, that's drones, of course that's Bitcoin, that's everything that tech can do, which is a lot of things. Techno-optimism was written into their constitution recently. They have basically like billions in crypto. You've got very favorable taxes for crypto. And in particular, they've got a new startup city called Alautau, which they want to build into a 1 million-person city on internet first principles, okay? So built by the internet, for the internet, from the internet, where it has lots of locals, of course, but also has lots of globals. Just like, what is a global city? Like what New York used to be and what, Singapore and Dubai have become, a global city that's welcoming to talent and capital from around the world, right? And I think Astana and Alautu can become those global cities within Kazakhstan. They have the ambition to get there. It's also a really amazing country because it's, as someone there said, it's Western, Asian, Russian, and Muslim. It's warm because it's Western aligned, Asian ancestry, Russian speaking, Muslim religion, and it's tolerant to people from everywhere. So almost everybody has a piece of themselves in Kazakhstan. And it's a high-tech country that was built by digital nomads. And so because of all those things, it's a very, very, very good place to go and build basically the Bitcoin-enabled future. So that's why we moved there. There's more I can say, but you can look at some of the MOU stuff, AIFC, the new Alautia megacity, the PM meeting, and then also this dome over here is this amazing dome that everybody thinks is AI generated, but it's real. It's this amazing, amazing, amazing thing. So come to Network School Kazakhstan. You should apply and check it out.
Absolutely, and I think Balaji, you've been kind of ahead of the curve on many trends, and you've been developing this network state thesis alongside the network school. Obviously, we don't have to get into the things that happen in Malaysia. I've looked into it. It seems like maybe there is a little bit of a witch hunt. That's my words. But I am curious, now that you've gone through this process, you had an issue with one state, now you're in a new state that's opening you eagerly with open arms. How have you updated your sort of network state thesis?
Well, so first is, I think it's clear that what we're doing is historically significant. Why? Because most people, or most projects just don't, nobody cares, right? No one would care what you were doing, okay? But the fact that we have full sovereign support, and yes, okay, there's some states that don't like it, but some states that really do, that's actually like what cryptocurrency was, right? Crypto community is what comes after cryptocurrency, right? Cryptocurrency was heavily opposed by some governments and heavily supported by others. And it was a huge tug of war over years, okay? The meme wars raged for years, okay? And we lost some good men, there were some bankruptcies and so on and so forth. But net, we've come much farther. The cause of freedom, of individual rights, of democracy, of capitalism. And the capitalism part is obvious because Bitcoin ends basically the fiat century of Keynesianism, right? So it reintroduces individual rights, individual capitalism, as opposed to the Fed setting interest rates for everything. You have a market-determined interest rate. So that part is obvious. True capitalism comes back. But actually also true democracy. And why? Because you have the ability to vote with your feet, ballot, and or wallet between states. So even if you lose the election, or even if you're in a country where elections don't work, okay, or a state like California, for example, basically, the party there always wins elections, and it's not actually competitive multi-party elections. They've destroyed democracy in California. So what does that mean? That means your only real option is the more expensive vote, which is to vote with your feet, to one of the governments around the world that will accept you. So you go from the two-party system to the 1,000-city system, okay? And that is the democracy of foot voting. There's an intellectual tradition that goes all the way back to T-Bow sorting, okay, the economist Charles T-Bow, that basically showed that under certain theoretical assumptions, this would mean that public goods get provisioned according to the preferences of the people. For example, let's say, how clean do you want your streets? Do you want them as spotless as Kazakhstan or Singapore, which are spotless? Or maybe you'll spend 80% less and get 50% of the cleanliness or whatever. Some countries will make that trade-off. Then that's going to be something that different countries can make a trade-off on. Or, how stringent do you want your biotech regulations to be? How stringent? Different communities will have different preferences on these things, and now people can migrate to the community that fits their preferences. So really, it's not the network state only, but it's the network states plural, right? Mm-hmm. And so the thing about this is, well, let me pause there. I have more I can say, but go ahead.
Well, so I was going to say, the arbitrage that you're talking about, you're already starting to see it. I was doing some research ahead of this, and I noticed that when Network State moved, the real estate in the island that Network State was on before, the network school before, let's say it decreased after it moved, and now I'm sure Kazakhstan is going to, have this million-person city potentially. Like,
yes.
It's an interesting pairing of the physical.
That's right. So if a state plays, see, normally you want to play a win-win game, okay? Like the citizen in the state or the community in the state have a win-win game. You guys, like a community abides the law, they pay their taxes, and in turn they get peace and quiet and can build and so on and so forth. If a state decides to play a win-lose game with the community, where it persecutes that community, especially for, let's say, unreasonable reasons, okay? Now that community has the option of collective exit, okay? And collective mobility is a nonviolent alternative to a military. Why do I say that? So, if you think about what it means to take a group of people and move them from one city to another city, everybody has to work together. It's almost like conscription, because you basically are sort of opted in, because the community is going there. You can, of course, opt out, right? But basically, it's something which is a communal, whole of community effort. It is done under pressure from a hostile state. It's not something you want to get into, just like war, you don't want to get into it. It costs money to liquidate and to move, but it's completely nonviolent, okay? And crucially, it's actually, especially if you're outnumbered and outgunned, but you are what Amy Chua would call a market-dominant minority, okay? Often the hostility of the larger state versus smaller community is that smaller community is succeeding in the market, and the larger group is angry or envious, or there's some religious intolerance or something like that. They're going after the small community. So now that small community that's otherwise outnumbered or outgunned, we protect minority rights with collective exit. That community, so long as it's organized and it has values, it can take the hit, because mobility, collective mobility, it is an economic hit. It doesn't have zero cost. But that's, just like a military, defense has non-zero cost, a mobility defense has non-zero cost, right? And often this is phrased as, like, quote, fight or flight. But the new concept is it's not fight or flight at an individual level, but at a collective level. And really, it's immobility or mobility. Why? Basically, the ultimate sort of blood and soil nationalist is a wood and soil nationalist, is a tree. Why? Because they're loyal to the land, true to their roots. They can't cut and run. In fact, they can't even move, okay? And the opposite of a tree is something that's really mobile and agile. We want to be that, okay? We want to be like an eagle. We want to be able to fly. We want to be able to, like a flock of birds, boom, take off, right? 2 suitcases, 2 hours, and 2,000 people can move, okay? If you do that, mobility is leverage against the state. Those 2,000 people might have the collective earning power of 200,000 people. And so suddenly there's a penalty for persecution. It's not simply a win-lose. It's suddenly turned into a lose-win because another state wins, since it gets all of that earning and that building, and the first persecuting state does look bad and eventually regrets it. Like, for example, Uganda. Many years ago, they expelled people of Indian origin from Uganda, and they called them parasites and so on and so forth. And then the Ugandan economy crashed. There was famine, all these terrible things. And then much later, the Ugandan government said it was a mistake and we're inviting you back or whatever, okay? Whether Indians would decide to go back, don't know, okay? Point is, I think we're going to see that kind of thing globally, and I think we need to be ready with collective mobility as the nonviolent alternative to military, okay? And it's, Bitcoin, a most peaceful protest, allows that.
Well, and it also, in my own experience, it reminds me of COVID in the United States even, where, the states started to have different requirements, different strategies around it, and people moved, and that forced a sort of moderating of different policies. And so it's interesting to see that continue to play out as as time goes on.
That's right. And why does Bitcoin enable this? Because I want to be really precise. In the 20th century, in the Soviet Union, Lenin's guys had to go house to house, farm to farm, to kill the father and take the farm and throw the son in the gulag and so on and so forth, right? And so there's a physical friction associated with that, where you need to have guys with guns, guys with tanks, and so on and so forth, but especially guys with guns, going house to house to steal all this stuff. And so that took a long time. Keynesianism innovates over Bolshevism Because to seize 10% of the wealth, you just hit a button and print $1 trillion, and people even think they're getting richer. Number go up, right? Number go up because value go down, right? If you have, for example, let's say there's 10 shares outstanding, and somebody holds 1 share, they have 10% of a company. Now 90 shares are printed, and they're given another 1 share. Okay, so their nominal count goes up to 2, but their actual percentage goes down from 10% to 2%. Okay. And so they think they're getting richer because 1 goes to 2. Wow, 100% returns. But they've actually suffered, they went down, right, from 10% to 2%. They suffered like a, oops, what's going on?
They've ultimately just been debased and diluted. No, absolutely.
Yeah, I'm trying to reopen my laptop.
All good.
Okay, it's fine. I'll take it off screen.
Well, so I think, to dive a little bit more into sort of the Bitcoin world, and this is something that I'm actually very curious your opinion on. So David was just on here a second ago, and he and Stefan were talking about BIP 110, right? And how do you, as someone who is now trying to innovate on a level above Bitcoin, on the social layer, on the movement layer, you're building on top of it.
Yeah.
How do you think about the sort of ongoing struggle of innovating within the technology of Bitcoin itself? Are you following these sorts of ideological debates and arguments around the Bitcoin community? Do you not have time for that? Do you just need Bitcoin to do its thing? How did
Good
you?
question.
How did you?
Yeah. So I think what's interesting is Bitcoin has now sort of shown a degree of immobility, resilience, whatever, in an interesting way, where, in a sense, it kind of resisted a challenge, let's call it, from its left and its right. Okay, with big blockers and ultra small blockers are now both being rejected in a sense, so it's kind of constant. Okay, if you'd call left being expanding blocks and right being constricting blocks, right, and reducing block size or throwing out transactions, it sort of resisted both. Okay, and I think one can, make arguments for whatever position, and I'm not even saying I disagree with all these arguments, but those can be done on other chains, and now, Bitcoin can remain unchanged. And with that said, the thing that I'm most excited about at the technical level is the new QSB, the quantum safe Bitcoin transactions. So that the first quantum safe Bitcoin transaction, if anybody doesn't know about this, you should definitely know about this. Maybe the most important thing happening in Bitcoin this year, QSB, quantum safe Bitcoin transactions, because Eli Ben Sasson and others figured out how to, or rather his team of people, it's all open source, figured out how to make Bitcoin transactions quantum resistant. And that's really important because they were able to do it with script on top of existing Bitcoin, okay? And technical details, you can go and look at it. It costs more than a normal transaction, but great. You can still just build down a wallet. You don't have to change the protocol. And making a quantum safe transaction, if it costs like another whatever number of sats, fine, right? Because now you don't have to update the protocol necessarily, okay? So that I am interested in. Now there's another thing which is on the topic of AI and privacy and so on and so forth. I think that Bitcoin is not going to become wholly private because it's just too much of a change. However, its transparency is a feature in a very specific context, which is if, let's say, Nayib Bukele wants to prove how much Bitcoin El Salvador has, he can just post an address and then he can show himself moving funds from that address, okay? If, however, and this is non-obvious, if he wanted to post a video of his Fort Knox with the gold bricks, that would not be trusted in the age of AI. You could do a hyper-realistic video from every angle with people there that look exactly like they are. So no one would trust a video of Fort Knox anymore, right? Fort Knox may as well not exist in a low-trust era, but Bitcoin does. And so Bitcoin's transparency, I think, means it becomes the reserve currency of Western institutions that need to prove solvency in the post-fiat era. Right? Like, basically Bitcoin address or GTFO, basically, right? And that is actually a way of partially reducing trust in a world where it's an internet-first world, okay? I think you're still going to need ZK for many other kinds of things. AI is the attack, ZK is the defense. I think on-chain transactions in Bitcoin, chain analysis is becoming something that everybody can do, okay? But that means that it's going to be, I think, the reserve currency of Western institutions because it is digital gold. So that means the price will go up. However, you may only want to possess it if you're in a country that allows for personal possession of it. And I think you're going to see all three regimes. Did I talk about this?
No, keep going.
Yeah, so I think you're going to see Bitcoin atheist, Bitcoin monotheist, and Bitcoin polytheist regimes, okay? So Bitcoin atheist, that's like a no-coiner regime that basically treats private ownership of Bitcoin like, like almost like firearms or something like that, where they just don't want you to hold it, right? And many countries will do that. They'll just try and seize the Bitcoin or at least deem it illegal and so on. Bitcoin monotheist says, okay, only Bitcoin, Bitcoin maximalist, right? And everything else is scam, blah, blah. Okay, of course, I understand that point of view. And then Bitcoin polytheist will say Bitcoin and other currencies, cryptocurrencies. And I think you're going to see all three of these, just like you see atheist, monotheist, polytheist in, religions, right? Or you actually have atheist, monotheist, polytheist at the level of states. Why? The a-statist is an anarchist. The monostatist is like an imperialist. My country should rule the world. And the polystatist is like a digital nomad. They abide by laws, but they switch countries as they see fit, right? So I would call myself like polytheist, polystatist, polycoinist, right? So N, right? And others are like, somebody who's an atheist, anarchist, Bitcoin maximalist is like 001. So even if I would agree with them a lot of things technologically, they'll have different value propositions underlying it. But once you know other people's values, you can at least, work with them.
And then, to bring it back to the network state, the idea would be each of them will have a state to be.
That's right. So network state is NNN, right? So it is multiple states. So it's religiously tolerant, obviously. Multiple states and multiple coins. And basically, the thing is, I think Bitcoin becomes king of coins. It is king of coins, where one of the things about the sort of defeat of BIP 110 is I think it's now every stablecoin ledger can write its chain tip to Bitcoin every 10 minutes because it's protected by proof of work, okay? And so for the price of one transaction every 10 minutes, so that's, 144 transactions a day, right? And then over the course of a year, multiply by 365, you can back up the state of anything in a provable way to the Bitcoin blockchain. Or I shouldn't say back it up, but let's say prove the state of the chain. And then anybody who sees a restoration of that database knows they can compare it to Bitcoin, okay? So that's its second major function, which will be, I think, as important as the first, a direct proof of value store, and also a repository of everything that's important to prove existed at that point in time, like a public notary, right?
Yeah, I want to push on this a little bit. Well, not push on it, but double click on it. You mentioned prior, you said something about, ZK is sort of the defense to AI. I've heard you talk in a few different conversations about, even back to your Fort Knox idea. We're about to go into this world where knowledge and information is going to be mass produced. It's going to be AI generated, and it's going to be impossible to tell what's real. And then Bitcoin exists in this world also, where it has this verifiable state. And so, what do you see that playing any role outside of the monetary?
Yeah. So I think if something is important to you, you have it offline. If it's important to others, you have it online. And if it's really important to others, you put it on chain. Okay? That's carefully phrased. Why? When something's really important to others, it's a target of fraud, scams, spam, all this kind of stuff, right? So you want to put it in the equivalent of an armored car on chain, which is what Bitcoin is, okay? And so it's basically, Bitcoin and crypto is what AI can't do, right? AI can solve partial differential equations, but it can't solve cryptographic equations, right? Basically, mathematics gives a hard constraint. Essentially, unless our complete understanding of elliptic curve cryptography and all this stuff is wrong, right? If our understanding of number theory is wrong, which it could be, maybe some p equals p. Okay, so without discovering new mathematics, many of these things are provably difficult for computers to do, or really impossible for them to do in any finite or reasonable time horizon, I should say. And so that means that AI runs up against a hard wall, which is a cryptographic boundary. Okay, so it could be a very convincing human being, could say all kinds of things, it could speak in your language, but show me, the cryptographic proof, and then it's like revealed to be something else. Okay, so that's going to be a very important thing for the digital world. You're not going to be able to tell what's real. Like the Voight-Kampff test for replicants is cryptography and it's what Bitcoin represents, right?
That's amazing. Okay, so then to bring it all back a little bit to what's happening now in Kazakhstan, as someone who is I would put myself in your category, I guess, as the maximalist, monotheist,
Sure. Yeah.
somewhere in there, right? And I look at now what you're building in Kazakhstan. How should I be thinking about it as an individual? Is this something that I should be, signing up and booking my flight right now?
So go to NS. Let me see if I can put this back on screen, actually. So go to ns.com.
And you said go to ns.com, so that's the network school website?
Yes, that's right. So let's see if we put this on screen. Yeah. So go to ns.com right here. Very easy URL to remember. Okay, only 2 characters. Okay. So, and just click apply and apply network school. And you can apply, by the way, very importantly, individual or couples or families or full teams, okay? And we've got experience in hosting all of these. Look, I love the tech bro. I guess people call us tech bros. But I'm also for the tech mom, the tech dad, the tech family, the tech kids. So we're very family friendly, right? So basically, individual, couple, or family, or team. And then you can choose your sort of package. Like if you want to just save lots of money, we can give you like a dorm rate. But if you want to get the most, maxed out kind of plan, we can do that too, okay? And get you like a nice apartment. And essentially, but if you want to live inexpensively, you can come to network school and you can just lock in and work, right? Or you can enjoy the beautiful outdoors. They've got amazing horse riding, all this stuff with just 30 minutes outside. It's a almost 2 million person city, so it's got everything that a giant city has. It's spotlessly clean. So basically, come and visit. That's the first step. Just come and visit, because whatever your mental image is of Kazakhstan is like, think about what El Salvador was known for before Bukele. It was like crime and whatever, right? And then Bukele has put it into a totally different categories, So Kazakhstan is similar. It is completely different than what you think of it as. You should come and visit. We're up there. It's just this amazing, beautiful country. And so that's step 1. So go to ns.com, apply.
And I'm curious too, like when you think about the type of person you said, a mom, a dad, a student even, it's a network school. Am I coming to start a business? Am I coming to learn? Am I coming to just work?
All of these things. So let me show you, some of the things. So basically, we're the new SaaS, like Society as a Service, right? So we basically bundle it. That's funny, right?
Yeah, that's great.
And so the reason is, like SaaS is dead, no, SaaS is back, okay? Yep. And we basically bundle all this together because when you move to a new, city, if you've ever done that before, you have to set up all this stuff for yourself. Like, where's the gym, and where's where's the pharmacy, where's the this, where's that? All of that we just give to you so you're just productive very quickly. And it takes a surprising amount of time to set up, monitor, all that kind of stuff, boom. So Society as a Service, so we enable digital nomads, a digital nomad hub, one way of thinking about it, okay? And as I mentioned, so this is our HQ there, this building that looks like a sci-fi building, but it's actually real, okay? And so as you asked, you can learn tech. So one thing we're rolling out is pass an exam, get a job, okay? So rather than the 48 months and hundreds of thousands of dollars of a college education, we can compress that into pass an exam, get a job. And so we basically have you take a proctored in-person test, and then if you do well on that, then we get you a job, okay? So it's not just for tech founders. We like tech founders, but it's also for individual engineers, people who want to learn and break into tech and so on, okay? Crucially, we've got to focus on fundamentals, which is you don't just want to learn how to use AI, but you want to learn probability theory and so on and so forth. All of that can be taught by basically giving people books, having them have time, and exam. Examination over duration. That is to say, rather than 4 years, if you can get it done in 4 weeks and you can prove the wetware's in your head, why not just do that, right? So examination over duration, and then you spread, rather than a 48 months upfront, college, imagine you have that 48 months over your life, and every year of 50 years of, work career, you're retraining like 1 month. That's kind of what network school is. It's like continuous learning rather than upfront learning, right? Okay, so learn technology, that's a key part. Also, work remotely in a community. People have, digital nomads are often lonely, they're isolated. Now we group them together. Everybody understands what you're doing, they understand where you're from, and you can also meet the locals and so on, right? So we have events, we have all that kind of stuff. So it's not just tech. We have, people do yoga, they do, as I mentioned, horseback riding, they do skiing, they do all these kinds of events. They go to the city, they go to parties and whatnot, birthday parties, all this stuff. Our community actually knows each other and has moved up to Kazakhstan together. So it's a real digital nomad community, not simply individuals, right? That's a nomadic tribe, right? New thing. Then, we're basically taking crypto tribes, which are famous online for fighting, and when we bring them offline, they're cooperating, working together, seeing each other face to face, building things, right? So co-working community, city, country. Then third, burn calories. So we try to make it as easy to be healthy as possible. So healthy food, gym, and then we're going to get Ozempic, retatrutide, tirzepatide, all that kind of stuff. Obviously, you have to get a prescription for that and so on, within the law. But basically, all the biotech enhancing stuff, as much or as little of that as you want, you can get that, okay? And so it's basically like for the person who wants to self-improve, right? And then, bring your family. I mentioned that here. So drop off, tutors, healthy days, and host your company, host events, all this kind of stuff, right? So if you're the kind of person who's in this audience, you'll probably like Network School, right? So just go to ns.com/apply. It's basically printing out tech into the physical world.
Amazing. I have two more questions. So first of all, let's say in 100 years when you're still very young because, longevity has advanced, but you're looking back on the Network School, what will you be looking for to define as success of this? Right now as an experiment, what would you say is the success state of it?
Good question. I think the most important thing is if we can have essentially a lot of network societies around the world, okay? So, and the reason is that I know I don't have all the answers, okay? I want to see a Lutheran network state. I want to see a keto network state. I want to see, things I couldn't even imagine, right? For example, maybe something oriented around, some people like this weather or that weather. They want skiing or something like that. Network of ski resorts. All kinds of crazy things will happen. People are just into physics and they have that, right? They want to do Sanskrit immersion, Latin immersion. They want to bring back a dead language, right? So there's all kinds of themes you could have, and it's going to be empirical as to what actually works. And because I don't have all the answers, because I believe in democracy, because I believe in capitalism, I believe that having 1,000 different communities and the ability for you to opt into your community, just like right now at age 18, you apply to the best college that will take you. Eventually, at age 18, you apply to the best country that will take you. And in fact, those are actually already kind of the same thing. The reason is, for many years, many of the foreign students that applied to US colleges, they got their F1 student visa, OPT, H1B, and so on and so forth. That whole era is ending, obviously, in America. Everybody's, okay, fine. So that's over in America, but I still think that was a very useful path. And if you take it and you take away any of the bad pieces and you keep the good, okay, because it did build a lot of high tech, you take the good pieces, and now what you can do is you can have that for all kinds of communities around the world. You can come there and you apply to them just like you would to a college. And by the reason I say those three things, there's the same thing. You apply to a college, got your student visa, then you apply to a company, you got your work visa, then you got your green card and permanent residency and then citizenship, and you got your country. So college, company, and country were actually one bundled package that took people 10 years to get through. Once we understand that people want to buy that as a package, right? All kinds of talent around the world wants to buy that as a package. And that, by the way, includes Westerners. That's like British people going to Dubai, right? That is, Americans, moving around the world. This huge American diaspora now, right? All of that, when all of that comes together, that is basically what we're doing. Okay.
Amazing.
Yeah.
Okay, last question then. You're famous for making very amazing predictions about the future. You were making one to me, just backstage before we got on about where you think Kazakhstan's going to go. But I'll let you take it in whatever direction. 2030. What's something that no one is tracking on and that you think is going to be a huge trend in the next few years?
Biotech. Yeah. So, my career started in biotech with DNA sequencing and so on. And in fact, the reason I got into Bitcoin is my first company, DNA sequencing company, we sold it for several $100 million. But I realized that the FDA was actually holding back basically decades of innovation. And now, to be clear, I'm not against regulation per se. It's often binarized as either 0 or 1. But obviously, most things have more than one bit of complexity. That's why the two-party system also, right? So like a photo has many bits of complexity, not just a white or black pixel, right? So it's not just no regulation or regulation. You can reconceptualize regulation as binary classification. That's a concept from machine learning, and it basically means you've got a bunch of widgets on an assembly line, and you want to let the good widgets through and block the bad widgets, okay? That's the same as, let's say, a security line. You want to let, all the normal travelers through, and anybody who's a bad actor, you have them off. That's the same as products at Amazon.com. You want to let all the good products through and then flag the ones that are scams or frauds. And similarly for a regulator, they want to let all the good drugs, devices, et cetera, through, and then only flag the bad ones. So the thing is, a false positive and a false negative are both bad, and they both have a cost. And if you just ban everything, then yeah, you don't let any bad things through, but you don't let any good things through either. If you permit everything, you let the good things through, but you let the bad things through as well. So you have some trade-off function between false positives and false negatives. That is what binary classification is about. So the next generation of regulation begins with quantifying and thinking about this in terms of binary classification. And so you can do that. That's the kind of thing we're going to be doing in Kazakhstan, okay? So now, one way of thinking about it, why did I say biotech? We see what held back Uber and Airbnb, the taxi and hotel regulations written pre-internet, right? As Larry Page said, any law written before the internet is probably obsolete. At least it needs to be reinvestigated, right? Because it just changes so many premises, instant global communication and broadcast and all this kind of stuff, drones, AI, like everything written before the internet needs to be re-examined in light of the internet. Even, for example, quote, the right to bear arms in 1776 is itself something that references a technology because firearms didn't exist for much of human history, right? Any laws on flight obviously reference planes that didn't exist, right? So new technologies do mean new laws. Point is, once we saw what hotel and taxi regulations had held back, once we saw what the SEC had been holding back in terms of Bitcoin ETF and all these things, okay? You can now infer what the FDA is holding back. The reason we don't have limb regeneration, the reason we don't have these things is because of the FDA, right? It is because of these ancient governments that you have these problems, right? And so we just need is new governments where people can opt out, take risk, and actually build, startup societies with new regulations, and that's going to enable biotech.
Amazing. Well, ladies and gentlemen, Balaji Srinivasan.
Thanks.
Thank you so much.
Everyone has an opinion. We want evidence. No hype, no echo chamber. Just better questions. And better answers from the biggest names in Bitcoin. This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
Welcome back into the live news desk at Bitcoin Asia 2026. Grace Remington with Sean Hagan and Balaji Srinivasan joining us now after the last talk of the day. So much good stuff from you, so I want to rehash just a little bit of it. But you said school is a fundamental input to build community. I'm curious, how has Bitcoin served as a form of education for you and for society?
Sure. So, well, the first is Bitcoin taught us all about what fiat currency is and what the Fed is, and this thing which is just a little bit too abstract for people otherwise. They see prices going up and they might scapegoat like, Chipotle or something like that, and as if Chipotle wants to raise the price of guacamole, but it's actually the Fed that's doing that to everybody. And I think just understanding that and understanding how deep that goes and how that distorts every kind of thing from interest rates to prices to the whole economy and every transaction is maybe the single most important thing Bitcoin does from an education standpoint. The second big thing is decentralization and the idea that you can actually have resiliency in a non-violent way where you just have multiple replicates of things. And the third is basically making cryptography something that's universal, and you realize that that's actually the foundation of the post-internet order. People talk about the post-war order, but the post-war order is the post-internet order. You could think of the post-war order as a pre-internet order. Now we're entering the post-internet order.
And in your talk, I thought it was very interesting that you talk about how something like Fort Knox might not have the utility it used to have in a world where you can easily make AI fakes, and you got the deep fake problems. You have the oversaturation of false news and false narratives. One thing you mentioned is Bitcoin goes beyond just proof of reserves and Bitcoin itself, but perhaps stable coins might sync with the Bitcoin chain in a post-BIP10 world especially.
Yep.
Could you dive into that in a little more detail for us?
Absolutely. So on the first point, a photo of Fort Knox doesn't serve as an audit anymore. Neither does a video, not even a 360 video and so on and so forth. The only thing that would serve as an audit is if somebody who you trusted in a chain of trust was actually there physically and said, I see all these gold bricks. And what it actually does, it makes us, for lack of a better term, epistemologically humble, because to a greater extent you realize that you're relying on the chain of reporters. Like if you know a fact, the reason you know that fact is a bunch of people in a chain went and researched that fact and brought it back to you. And often you don't actually know who those people were. Frequently you don't know, right? Even when you read a news article, most people don't look at the reporter as the key person who's telling you the story, because it's put in small font and the headline's put in big font. So it's presented as if it's this impartial thing, but it's actually one person's report, right? And so to audit Fort Knox, you actually need an individual to go and do it. And so that's why, whereas with Bitcoin, you can post an address and people can actually see the cryptography. They can see that the assets are real. So that's part one of what you asked. Then part two is every stablecoin in the world, because every country is now adding their own stablecoins. I launched USDC on the Coinbase side at Coinbase, and that was, we put in the first 25 million off of, our balance sheet, and that's now a $75 billion, global asset, right? That keeps growing. And in many ways, it's funny because it's giving the dollar, it's the one thing that's a growth story for the dollar. It's giving it a new lease on life, right? And we don't know where that goes. I mean, maybe that's $1 trillion on chain. If you add USDC and USDT, it's certainly more than $100 billion, right? It's closing on 200 or something like that last I checked. $1 trillion is really not out of sight. So that a dollar becomes a digital dollar. And then that's true for every other fiat currency. Now, those chains are really important chains. A lot of economic activity is happening on those chains. What they can do is every 10 minutes or so, they can take a hash of their chain tip. That's a somewhat technical concept, but think of it almost like a computation that reflects everything that was done, all the history, right? And they can take that, they can post that on the Bitcoin blockchain. And that means that, in a sense, every country is paying tribute to the king of coins, which is Bitcoin, right? Their economies are backed up on the Bitcoin blockchain. And that's of enormous value, and that gives an ongoing demand for basically Bitcoin transactions as this global notary public.
And, all Bitcoiners are familiar with kind of these themes of the economy moving on chain and this increasing demand for Bitcoin, its network. You have things like the Genius Act we're all aware of, driving demand for stable coins, or at least the government is betting on that. Mm-hmm. Another thing you mentioned in your keynote at the end, what Brandon asked you for your prediction, you talked about biotech, which you have a background in. We obviously, everyone right now is raving about peptides and research and AI optimization and research and things like this. Do you see that impacting lifespans?
Absolutely.
And as people live longer and are healthier, how is that itself going to impact the economy and finance?
Yeah, so for example, there's a study I posted on a while ago where you have two mice which are the same age, and one of them received an injection, and you can see it that this one is like older and grayer and fatter, and this one is basically looks young, okay? So this stuff works in mammals. It's not theory. It actually works. And there's other things. For example, there's a cancer drug that had a side effect of reducing inflammation, and you can see it like repigmentizes hair, degrays hair, and so on and so forth. And these are like multiple adult humans that look like 15 years younger. All this stuff exists. It's like this enormous tidal wave of biotech innovation that is being held, and especially longevity innovation, right? Let you live healthier, longer, and so on and so forth. Literally reverse aging and not simply stop it. That has been held back by biotech regulation, the same way the SEC held back the Bitcoin ETF, in the same way that hotel and taxi regulations held back Airbnb and Uber. And so I think that what Bitcoin does is, because it changed the relationship between citizen and state, and you're a customer of your state, a business is also a customer of their state's regulations. And now there's more governments that are open for business. We've gone out of the age of like a single jurisdiction setting the rules for everybody in the world. There's a reason, FDA regulates not simply America, but the rest of the world, because there's something called regulatory harmonization. Have you ever heard that term? It's maybe the single most important term in the world that people don't know. It's as important as fiat currency, actually. Why? Regulatory harmonization, just like the Fed exports a dollar globally, the FDA and the SEC and all this alphabet soup export their regulations globally. Okay? So the Fed exports inflation, the FDA exports regulation. And why? Because it gets all these other countries to sing in harmony with FDA rules. That's called harmonization. And actually, big pharma companies like this, because then they just get the approval in America and then they can export it everywhere in the world. But of course, that level of centralization is also a single point of failure. So you have something in the US where, for example, the FDA fast-tracked all the body scanners that TSA has, because that's like with the government, and so they get a pass, right? Even though that's like irradiating everybody every day for very dubious benefit, right? But something that's longevity enhancing faces all this crazy scrutiny, right? This is finally starting to change with peptides, where we're finally re-entering the era of large effect size drugs as opposed to low side effect size. Those are two totally different things. Large effect size, like Bitcoin, has large effect size. Bitcoin also has large side effect size. Haha, okay? It's got volatility. It's got, the roller coaster and so on. But net, we'd rather have the large effect size with the larger side effect size. And, I'm not saying that the large side effect size of these peptides are all bad, by the way. Phase 1 testing of safety is actually much easier than people think. It's always phase 2 and phase 3 that actually add a lot of the cost. So you can go to a pure phase 2 is like efficacy, phase 3 is like comparative efficacy. These are just technical terms. I can explain what they mean. But the point is, there's more and more kinds of tests that are done on a drug than really need to be done to just guarantee safety. Safety is actually relatively easy to do. Toxicology is relatively easy to do. You can even do, for example, toxicology on your own body. Why? You can take like a skin sample and do a cell culture, make an organoid, and it's like a little mini-me, and you can expose it to a drug, and you can see what the reaction is before it affects you, right? It's like, you can also do genetic tests, you can do pharmacogenomics, and you can see what a drug reaction is going to be before you have it. All this stuff, the technology's existed for 20 years. You can go to PharmGKB, you can see all of this. The reason you don't have, do you have a sequence genome?
No.
No, do you have a sequence genome?
Do not.
Do not. The reason you don't is because FDA. FDA blocked everybody from getting their own genome, just like, they're trying to stop self-custody of wallets, they're trying to stop self-custody of genomes. Okay, literally the same thing. Yeah. They're trying to force it, just like they try to force all custody of your funds through a bank. They try to force all custody of all custody of your wealth through a bank, all custody of your health through the medical system. Okay. Now, I'm not saying there isn't anything of value there, just like there's something of value in banks, but you also want to be able to take care of your own health like you do take care of your own wealth. You're the number one customer for that, right? So all of that self-custody and self-care has been blocked. And now we're going to re-enable that. Much more I can say.
And is that going to add strain to our financial system if people are living longer, or is it going to be, decrease because people are actually much healthier?
Well, I mean, let's first solve the problem. And like, look, put it like this: longevity. I mean, you know Brian Johnson, my friend Brian Johnson, right? So, when Brian and I, it's funny because we're both in finance and biotech. But I was in biotech first, then got into finance. He was doing a payments company, then he got into biotech. And we met each other. He said something like, "Why have we not been friends for like 15 years? Because we have so much. We share a lot of common interests." What I said to Brian is, what does the Fed do? It basically takes away 2% of your wealth every year. The whole premise of Keynesianism is if you, they will agree hyperinflation is bad, but they'll also say deflation is bad because they'll come up with this thing about, you'll hoard the money and you won't spend it and so on. In practice, of course, hyperdeflation is Moore's law. It's a computer industry. Prices drop every year. In theory, that would lead to hoarding behavior. In practice, that means you buy more computers than ever before. So hyperinflation is actually good. Right? So the entire mainstream Keynesian economics is bad in terms of thinking of deflation as bad. Nevertheless, their doctrine is, and you see my point in a second, their doctrine is hyperinflation is bad, but deflation is also bad. So 2% inflation each year, the so-called New Zealand target, that's supposedly good. So every year you lose 2% of your wealth, according to mainstream, Keynesianism. Similarly, the mainstream American Medical Association, medical community, FDA and so on, CPT codes, that whole rigmarole, they say, yeah, fast death is bad, okay, but trying to live forever, longevity, that's also weird, right? So you should just lose 1% of your health every year, okay, and die at like somewhere around 100 plus minus, right? So these guys want you to lose 2% of your wealth. These guys want you to lose 1 to 2% of your health every year, okay? And just like Satoshi and Bitcoin rejected the premise that one wants to basically go bankrupt slowly, right? Then what longevity does, it rejects the premise that one wants to lose health slowly, and that maybe we can actually go back up.
Okay, that's actually a really cool comparison between Satoshi and longevity and biotech. Yes. So we've talked about the side effects of drugs. Let's talk about the side effects of Bitcoin. And something you said earlier or in last year's conference is that when Bitcoin wins, fiat billionaires get flipped. And I believe the research last year said that happens somewhere around 100K to 1 million per Bitcoin. What does the timeline look like now, do you think?
I mean, the thing is, it's very hard to say on this, right? But when Bitcoin wins, everybody who holds fiat, like there's a point. And you can, so let's say there's this thing called the Bitcoin rich list, okay, which is just taking on-chain Bitcoin addresses and looking at how much BTC they have, okay? Now, the silly, but let's say ballpark thing is to say one address, one person. Why is it silly? Well, on the one hand, one address could belong to an exchange, which represents many people, right? On the other hand, one user could have many addresses, okay? So it's very hard to say. Still, you can make assumptions on this as to whether this factor or this factor outweighs each other and so on, or whether they cancel each other. So you can make mathematical assumptions. Subject to those assumptions, if you take the Bitcoin rich list and just naively say that like each one is one individual, where the exchanges and the many addresses balance each other out roughly, then once you get on the order of 2,000 on-chain billionaires, that actually equals the number of fiat billionaires worldwide. Okay, and that actually happens very fast because once price really roars, okay, the next 10x means that property becomes cryptography. Like what wealth is cryptocurrency. Like you don't have, like the fiat system is like your petty cash in your, it's like something which is not like real. Cryptocurrency is actually what's real. And so that's the internet first world. We're already starting to get there. Bitcoin is like in any country around the world. You can be in the Middle East, you can be in Latin America, you can be in Japan. Someone there will accept BTC, they will understand that it's valuable. It's actually already become global liquid reserve collateral. By the way, it's liquid in a way US Treasuries aren't. Okay, the whole point of US Treasuries is, that's a risk-free reserve asset of the global system. But you can't liquidate Treasuries now or else the Fed and the US government will punish you for doing that, or they'll give a bailout like they just did in Japan, right? So treasuries are no longer liquid collateral, okay? Bitcoin is. So it's already basically replaced treasuries. The point is, that world, as we enter that world, I think that you can mathematically work it out. Around between 100,000 to 1 million, you have 2,000 crypto billionaires, 2,000 fiat billionaires. The flippening. Okay. That's a billionaire flippening.
That's thematically similar to what you said during your session with Brandon about how, eventually nation states are going to have to use, alternatively to Fort Knox, Bitcoin as proof of credit worthiness. How far away from that reality do you think we are?
10 years, maybe. The thing is, this stuff, maybe less, maybe more, but it's like, like, think about how far we've come, okay? Like, Bitcoin isn't that, it's 18 years old now, Any kid who's born today, when were you born?
1999.
Okay, so the internet just always existed for you, right? And, I won't ask.
Thank you, I appreciate that.
Okay, but let's say, I don't know, let's say the automobile always existed for our whole life, okay? But there's a point where automobiles, aviation, those are innovations. For any child who's born today, Bitcoin might as well be gold. It's been around as long as they've been alive. Their parents knew about it. They have an opinion on it, and so on and so forth. So it's something where, like, many heads of state, every head of state, every bank, every country has a policy on Bitcoin. And the initial thesis by certain statists was, it was all going to get banned. Oh my God, blah, blah. And that didn't happen. What actually happened was the energy to ban it also led to the energy to accept it. And it's actually like it's a policy lever. It's like, many countries, you can think of them as defined by a bunch of, switches. Like, I'll try and come up with an example. Like, I don't know, I'll try and give a non-controversial example.
You can go controversial.
Okay, let's say firearms, okay? Like, are firearms legal in private arms or not, okay? And many countries ban them and some allow them, okay? But that really changes the character of society downstream. It's like light mode versus dark mode in your interface, but more important than that, there's a few switches like this that change the character of society downstream. You have a totally different kind of society with or without these kinds of switches. And whether Bitcoin is legal or illegal or heavily regulated or unrestricted is going to be one of those critically important upstream switches. I think Bukele was one of the very first to that. So, like, the end of fiat, we're in the middle of the end of fiat. It's one of these weird things where it's gradually then suddenly, like what's happening with Japan, and there will be a breaking moment. I think this year, you're actually already seeing the last US aircraft carrier pull out of Asia. I don't know if do you guys know about that?
No.
Yeah, it was not, obviously for various reasons, it wasn't put in big headlines, but you can see it. Last aircraft carrier pulled out of Asia, and I think it's quite likely that the US basically pulls its military out of Eurasia in general after this Iran thing is over. And it just focuses on Latin America and the Western Hemisphere. And maybe it expands into Latin America de facto or de jure with, Venezuela, Colombia, all these places, going to, let's say the US side of things. But it basically abandons Eurasia and probably Africa and so on. If that happens, the dollar is no longer the global reserve currency. And so what is? Well, it is going to be cryptocurrencies, because, that's like, Bitcoin is global reserve collateral. And I think there's many counter arguments on this. For example, quantum, QSB transactions are there now, quantum safe Bitcoin transactions that just came out today, maybe the biggest news of the day, maybe of a while, right? Very, very big deal. It just costs more in transaction fees. There's privacy, there's all kinds of counter arguments. But I think that so long as Bitcoin survives this coming era of AI security attacks, there's Bitcoin Red Team that's going through that, it actually becomes something that can't be seized. And let's see.
Okay, we just covered a lot. So as we wrap the conference, wrap the show today, what is the one message you want our audience to take with them?
Apply to Network School, right? But here's why. Basically, if Bitcoin is the digital, we also need the physical, right? And Network State is theory and Network School is practice of building friendly opt-in communities that are based on you choosing which country, which city, which community you join. And that's what Bitcoin represents. That's what Network Tool represents. So go to ns.com.
Well, that's a great way to end the day. Thank you so much, Balaji.
Thank you.
Fantastic insights. Hope we see you around again. And that's a wrap on Bitcoin Asia 2026. Before you leave, make sure you subscribe. Yes, let's hear the applause, guys. Subscribe to the Bitcoin Magazine YouTube channel and turn on those notifications so you don't miss the launch of BMTV on September 14th. A few thank yous to go around. Thank you to our title sponsor, Metaplanet. Thank you to everyone at Bitcoin Inc. for your hard work on this event. To all the guests on site today, thank you for being here. And thank you for watching the stream. For Sean Hagan, Balaji, I'm Grace Remington. We'll see you next time.